Hello friends, today we are going to start with reading understanding cash flow statements. Okay, so now I understand that financial statements, particularly income statement, is prepared using the principle of accrual. Now what was the meaning of accrual? That for example I have sold goods, those goods has been sold on credit. Now irrespective whether you have received the cash or not, you have to book sales into your profit and loss account. Okay, but now we are going to prepare one new statement, that is the cash flow. Now what is the purpose of this statement? So this statement now will tell us how much cash has been generated during the period, how much cash that company generated during this entire period. Further, I'm going to divide the total cash flows into three parts. One is going to be an operating activity, second, investing activity, and third, financing activity. Okay, so with the help of your income statement, balance sheet, now you have to prepare a cash flow statement. The purpose of this cash flow statement is to signify what is the cash generated during the period, and whatever the cash is, you have to divide into three parts. One, operating activity, investing activity, and financing activity. Okay, so now if I prepare a simple balance sheet, equity, debt, fixed assets, investments, debtor, trading investments, that means short-term investments, inventory, creditor. Okay. Now equity and debt, whatever the cash you have generated with the help of equity and debt, that is financing. Cash generated with the help of fixed assets and long-term investments, that is investing activity. And the cash generated from your core business, or from your day-to-day operations, that is operating activity. So now we divide it into three parts. Investing deals with fixed assets. Financing deals with equity, debt. And operating deals with your working capital. Now my point is, let us assume that there's a company ABC. Last year they have generated the cash from the core business 0 rupees, from investing activity 0, and from financing activity 0. And this year they have generated 100 crore of cash from operating, 100 crore from investing, and 100 crore from financing. So last year collectively they generated a cash of 0, and now they have generated a cash of 300. Now my point is, the financial performance of the company is improving or deteriorating. Okay, so now we have to analyze each and every activity very carefully. So operating deals with your core business. Last year from the core business you have generated 0. This year from the core business you have generated 100. So that is a positive sign. Okay. And now last year from the investing you generated 0. This year you have generated a cash inflow of 100. Now my point is, investing activity deals with fixed assets. Okay. And this is your balance sheet. And from fixed assets you have generated the cash. Now my point is, from fixed assets if you have generated the cash, there is only one way, and that one way is generating the cash with the help of fixed assets. Now my point is, if you have generated the cash from fixed assets, That means you have sell off your assets and you have generated the cash. Positive sign, negative sign. Now it is as good as you are generating, for example, you have one property, okay, and you have generating the cash by liquidating, by selling off that property, by selling off your fixed assets. Now my point is, will your investors will be happy on this decision? Your main business is not to sell the fixed assets. Your main business is, with the help of fixed assets, produce the goods, sell the goods, and then generate the cash. But you have generated the cash with the help of selling off your fixed assets. And if this figure is continuously increasing, that creates a question mark over going concern assumption. That means investors does not want that company should generate cash from investing activity. If you are generating cash from the investing activity, that means you are liquidating your fixed assets. If you are liquidating your fixed assets, it's going to create question mark over your going concern assumption. Okay, so always we want operating to be positive. This is my core business. We want investing to be negative, where negative means you are investing into your plant machinery, you are expanding your capacity. So investor would always want that investing activity to be negative. Now, last one is financing. So financing deals with equity debt. Okay, so now I just ignore the equity part. Let us assume it only deals with debt. Now, if this value is positive, so if liability increases, for example, last year your debt was 0, this year debt is 100. So if liability increases during the year, it signifies cash inflow. That means eventually 100 rupees you have borrowed, so cash inflow to the firm. If fixed asset increases, that means you have purchased new plant and machinery. New plant and machinery means that there's a cash outflow. Now in this case, you are generating a cash from financing. In simple words, you are borrowing the money. Investors will be happy or your financial performance is deteriorating. Now, initially, when we are investing in the huge capex, so we need money. Initially, investor wants financing activity to be positive. If financing activity is positive, that means you are raising money with the help of debt, and that is the requirement of the business. But eventually, it should turn into negative. Negative means that eventually you are repaying your debt. So now, whatever the cash has been generated, it has to be divided into 3 parts. Operating, investing, financing. Operating means your core business. I always want this figure to be positive. Investing, I always want this figure to be negative. Negative means you keep on investing money. And financing, initially positive because you need funds. But eventually it should turn into negative, and negative signifies that you are repaying the debt. Okay. Now friends, with the help of an example, we are going to prepare the cash flow statement. Okay. Now this was the broad overview about the chapter. Now how I'm going to deal with this particular reading. So again, we are not going to refer Schweitzer for this chapter, extensively relying upon our class notes only. Okay. So this is going to be the way we are going to deal with this particular reading. Okay. So the way it is given in the Schweitzer in your reference book, it's a bit means though we get the same answers, but the way they have presented, it's quite different. Okay. So let's extensively focus on the class notes. Okay. Now, I understand that cash flow statement is prepared with the help of income statement, balance sheet. If liability increases during the period, it signifies inflow. If assets increases during the period, that signifies cash outflow. Okay. Now, you have to learn these 3 notes. Okay. So my first note is cash received from customers. Cash received from customers. So now in your income statement, You're having a sales of 50,000 during the entire period. Your opening debtor was 1,000 and closing debtor is 7,000. Now you have to find out how much cash you have received from that customer during the period. Okay. Now opening debtor. That means at the starting of the year, you have to receive 1,000 rupees from customer. And during the period, you have made an additional sale of 50,000. That means collectively, you should receive 51,000 from that particular customer. 7,000 is yet to be received. Now my point is how much cash you have received during the period. Okay, so now 1,000 is the opening value, plus during the period you have made an additional sales of 50,000. That means collectively you have to receive 51. And still at the end of the year, 7,000 is still recoverable, yet to be paid by your customer. Now my point is during the period how much cash that customer has paid. That is 51,000 minus 7,000 equal to 44. So how we can get the same answer? Your opening debtor 1,000 plus sales during the period 50,000 minus 7, answer is 44. That means during the period from that particular customer I have received 44,000 rupees. Okay. Same wise, now it was an example with respect to your income side. Okay. Now let's do some other way using alternative 2. Same answer. Your assets are increasing. Suppose at the starting of the year you're having a car of 1,000. By the end of the year you're having a car of 7,000. So during the period you have purchased a car of 6,000. Okay. Now when asset increases, purchase a car. When asset increases, inflow, outflow. So that means cash outflow, you have purchased cash outflow of 6. In totality, during the period you should receive 50,000. Okay. And this 6,000 as outflow. So how much you have received during the period? So during the period you have received only 44. So when asset increases, that means outflow. When liability increases, it signifies inflow. Now asset increases by 6. That means whatever I'm going to receive 6,000 short. So eventually I received 44,000. So any method you can use. What I typically suggest that learn the formula. These are simple. So formula is cash received from customer is opening value plus sales minus closing value. 1,000 plus 50,000 minus 7,000. Answer is 44. So we have received 44,000 from our customers during the period. Same wise, now one more example on expenses. So this was on the sales side. Now let us assume you have your electricity expense in the P&L 1,000. Okay. And now liabilities. Electricity payable was 500 and 700. Opening value, closing value. Okay. Now during the period you have consumed electricity of 1,000 and previous outstanding balance to be payable to authorities was 500. That means collectively you have to pay 1,500 to the authorities. 700 is still payable by the end of year. So how much you have paid during the period? Important. During this period you have consumed an electricity of 1,000. Okay, so 1,000 rupees I should pay to the government or to the electricity department. 500 is outstanding of your previous years. So collectively I should pay 1,500 to the authority. 700 is still payable. How much you have paid during the period? So now during the period I have paid 800. Now to get this 800 there is a formula. expenses paid in cash is equal to expenses reported in P&L. So what was my expense in the P&L? 1000. I don't have any assets, so 0 minus 0. Now plus opening liability minus closing liability. My opening liability was 500, closing liability was 700. So eventually during the period, how much I have paid? During the period, I have paid 800 rupees. Important. During the period, there is an electricity expense of 1000. Opening value is 500. That means 500 was payable at the starting of the year. You additionally consume 1000. Collectively, you have to pay 1500 to the government. 700 is still payable. That means during the period, you have paid 800 to the authorities. So my answer is 800 outflow. Cash paid outflow, cash received inflow. So in this case, the outflow is 100. Now let's solve using alternative 2. Now liabilities increasing. Liability increasing means inflow. Inflow of during the period 200. You have to pay 1000. Inflow 200. You have to pay 1000. Inflow 200. So net how much you have paid? Net you have paid 800. So using alternative 2, alternative 1 as you are comfortable. Asset increases inflow. Asset increases outflow. Liabilities increases inflow. Now there's an inflow of 200. Net how much I have paid? Net I have paid 800. Now same example, but now I'm having assets. So it was an example of liability. Now prepaid expense. That means you're prepaying your expenses. So prepaid electricity expense 200 and 500. Now you have paid in advance to the electricity department 200 in advance. Okay. Now during the period you have consumed an electricity of 1000. So ideally how much you should pay? So you should pay ideally 800. So 1000 rupees electricity I have consumed. 200 I have already paid as advance. Now ideally I should pay you additionally 800 to the authorities. Now authorities saying by the end of the year that we have additional 500 rupees received as your advance. Still you have as an advance 500 rupee. So my point is how much cash I have paid. Important again. 1000 you have consumed electricity, 200 is advance. To knock off the balances, you should pay 800. So 800 is my liability, I'm going to pay off that. But still the authority is saying that I have an advance of 500. Now if I'm having an advance of 500, that means in totality how much I have paid? 800 to knock off the liability. Still an advance of 500. That means I have paid 500 extra. During the period, how much I have paid? That is 13. Now again you are going to put in that formula. 1000. Now 1000 expenses reported in P&L minus opening asset. Your opening asset value was 200 minus 500. So this is going to be minus 300 minus plus. Answer is cash outflow of 1300. That means answer is very simple. Now how to find out the answer? You have to learn this formula. Expenses paid in cash. Expenses paid in cash is equal to expenses reported in P&L minus within brackets opening asset minus closing asset plus within bracket opening liability minus closing liability. You are going to get all the answers. Again I repeat, cash expenses paid in cash is equal to expenses reported in P&L minus within brackets opening asset minus closing asset plus within brackets opening liability minus closing liability. You are going to get all your answers. Same wise, now alternative 2. In this case, assets are increasing. Assets are increasing means outflow. Now this should be an outflow. Now outflow is going to increase by 300. So what is the total outflow? Total outflow is 1300. Liability increases, inflow. Asset increases, outflow. In this case, assets are increasing. If assets are increasing, there would be an outflow of 300 additional. 1000 plus 300 additional, answer is 1300. So now we have covered two formulas. Number one, cash received from customers. Cash received from customer is equal to opening data plus sales minus closing data. Expenses paid in cash is equal to expenses reported in P&L minus within bracket opening asset minus closing asset, opening asset minus closing asset plus within bracket opening liability minus closing liability. You will get all your answers. Now same wise, I have to find out. So now in my P&L there is a COGS of 5000. Okay, and balance sheet, inventory, opening value, closing value 200, 700, and creditors, opening value, closing value 750 and 900. You have to find out how much cash you have paid. How much cash you have paid to your suppliers. So suppliers is the person from whom you have purchased the goods. First, you have to find out your purchases. So now, what is the formula for purchases? COGS is equal to opening inventory plus purchases minus closing inventory. COGS 5000, opening inventory 200 plus purchases minus 700. So if I compute my purchases, this is 5000 minus 200 plus 700. Sorry, answer is 5500. Now you have to find out cash paid to suppliers. In totality, you have purchased goods of 5500 during the period, and at the starting of the year, amount still payable was 750. So what is your total liability to pay to your suppliers? 750 opening value plus additional purchase 5500. My total liability is 6250. By the end of the year, 6250 liability reduces to 900. My point is, how much cash I have paid? I have paid 5350. Now, cash paid to suppliers, purchases plus opening creditor. So this is the total amount that I should pay you. 5500 plus 750. This is total liability minus still payable. Still payable is 900. My point is how much I have paid. That is 5350. Now, same answer you're going to get by putting up in the above example, in the above formula. So what was the formula? Cash paid is equal to expenses reported in P&L 5000 minus opening asset minus within bracket opening asset minus closing asset within bracket opening asset 200 minus 700 plus opening liability minus closing liability. Now if you solve all of them, 5000 minus plus 500 minus 150, my answer is 5350. Now again I'm going to get this answer one more way. Now your total asset increases by 700. Oh, total asset increases by 500. Asset increase outflow. So additional outflow of 500. Liability increases 150 inflow. Additional. So net outflow increases by 350. Outflow should be 5,000 plus additional outflow of 350. Answer is 5350. So now again, I think formula is the better one. So if you put up in the formula, expenses reported in P&L minus opening asset minus closing asset plus opening liability minus closing liability, you will get your answer as 5350. So first way, compute your purchases and then cash paid to the suppliers. And if you simply combine bullet 1 and 2, we can write the formula as cash paid to the suppliers is equal to COGS minus within brackets opening inventory, closing inventory plus opening creditor minus closing creditor. You will get your answer as 5350. So important. Now these 3 bullet points are very important. Okay. So number 1, again I'm repeating, cash received from customers. Opening debtor plus sales, this is total amount you should receive. This much amount is still receivable. So total I have received opening debtor plus sales minus closing debtor. Expenses paid in cash, expenses reported in P&L plus minus within bracket opening asset minus closing asset plus within bracket opening liability minus closing liability. You will get, put in this formula, you will get all your answers. Inflow signifies that company is receiving the cash. Cash outflow signifies company is paying the cash. Okay. Now, so this was the broad overview. And now, there is one difference between IFRS and US GAAP. That is with respect to the treatment of interest, dividend received, interest and dividend paid. So now first, interest received, dividend received. So these are the dividends that has been received by the company. Now interest received, dividend received. So now let us assume that your company has put your money, means the company has invested the money in fixed deposit. So if they are having a fixed deposit with the bank, they are going to receive the interest. Or if they have invested in some other company share, they are going to receive the dividend. Now, interest received, dividend received. This you will receive over your investments. Okay. And investments was the part of, now investments can be of 2 types. 1, long-term investments, 1, trading investments. So trading investments is a part of operating. Long-term investments is a part of investing. Now IFRS is very simple. Now whatever the interest dividend you are receiving, it's your discretion management. You want to show under operating or investing, that is your own discretion. But US GAAP is very rigid. This point is double star, okay. So US GAAP is very rigid. US GAAP says interest received, dividend received by the company would always be classified as operating. Okay. Then interest paid. Now interest would be paid over your borrowings. Now borrowings deals with financing activity. US GAAP again, IFRS, interest paid by the company your discretion. You want to classify that as operating or financing, this is your discretion. Again US GAAP is rigid, we are going to show interest paid as operating only. Same wise dividend paid. dividend will be paid to equity. Equity is financing. IFRS allowed that company your discretion. You want to classify dividend paid as operating or financing. US GAAP rigid that we are going to classify it as financing only. Now important. This is the only case where we are going to follow, if question is silent, we are going to follow US GAAP. Why US GAAP said we are following in this particular case? By default, we are always going to follow IFRS. But in this particular scenario, if question is silent, we are going to follow US GAAP. Why? Because if you are following US GAAP, in a way, you are following IFRS as well. So if question is silent, interest received, dividend received would be operating. Interest paid, operating. Dividend paid by the company would be classified as financing. So point to be noted, operating, financing. Again I repeat. Now there is only single difference with respect to treatment of interest received, dividend received, interest paid, dividend paid. Interest received, dividend received. Received. It will received over investments. IFRS, operating, investing, discretion of the management. US GAAP rigid, only operating. Interest is paid over your borrowings, operating, financing. US GAAP only operating. Dividend is paid over equity, operating, financing. US GAAP, it will only be classified as financing activity. And if question is silent, we are going to follow US GAAP because in a way we are following both. So class, these are the two most important points. Okay, this we have to consider before solving our practical problems. Okay, so now I think we are in a position to start with the example. So now we are going to prepare cash flow statement. Cash flow statement is going to be prepared with the help of income statement, balance sheet. Okay, important points: if liability increases, inflow; asset increases, outflow. Cash received from customer, opening data plus sales minus closing data. Expenses paid in cash is equal to expenses reported in P&L minus within bracket opening asset minus closing asset plus within bracket opening liability minus closing liability. Interest received, dividend received. For solving our examples, operating. Interest paid, operating. Dividend paid would be financing. Okay, so now let's solve one comprehensive example. Solution. Now, cash flow, and whatever the cash we are going to generate, that is going to be divided into three parts. Operating activity, investing activity, and financing activity. Investing deals with non-current assets or deals with fixed assets and long-term investments. Financing deals with debt and equity. Operating deals with profits and working capital. Now to compute cash flow from operating activity, there are going to be two methods. Number one, direct, and number two, indirect method. Okay, so first I'm going to find out the cash flow from operating activity using direct method. So example, following are the income statement and balance sheet of the company. You have to prepare cash flow statement. Income statement 1st January to 31st December. This is your income. And balance sheet, point to be noted, these are your opening values and These are your closing values. So the values with 2018 are opening and 2019 is your closing value. Okay. Now you have to find out cash flow from operating activity. So this is going to be your particulars. Now my first item is, in my P&L, my first item is sales. So with the help of sales, we are going to compute. With the help of sales, we are going to compute cash received from customers. So cash received from customers, it is equal to opening debtor. My opening debtor is 4500 plus sales during the period, that is 50,000, minus closing debtor, that is 5,000. So how much cash you have received? 4500 plus 50,000 minus 5,000. So during the period you have received a cash of 49,500. Okay, next. So we have done with sales and debtors. Next, COGS. So with the help of COGS, we are going to find out purchases and eventually we are going to find out cash paid to suppliers. Okay, so I'm writing directly cash paid to suppliers. So in this we have combined two steps. So cash paid to suppliers is equal to expenses reported in your P&L. So expense that is reported in my P&L is 20,000. Now minus opening asset minus closing asset. So minus within bracket opening asset minus closing asset. Now my opening asset is inventory. Now inventory opening value 3,500 minus closing value 2,500, bracket close, plus opening liability minus closing liability. Liability is creditor 2,500 4,500 plus 2,500 minus 4,500. Answer is answer is 17,000 negative. So let me verify. Minus 1,000. Yes. Next, wages 2,500, and you have to check with respect to wages, do you have any asset liability? So wages outstanding, so liability. Okay, so wages paid in cash, expenses reported in P&L. Expense report in P&L is 2,500. Now we are talking about the liability within bracket plus within bracket opening liability minus closing liability. So opening liability is 4,000. Closing liability is 2,250. So if you solve, answer is 4,250. Why I'm putting with a negative sign? Because it signifies cash outflow. Then next, depreciation. So I'm going to ignore depreciation. Why? Because depreciation is a non-cash expenditure. So now in the income statement, I skipped one point, that is depreciation. So now why I'm skipping depreciation? So let's have a note on this as well. Notes. Ignored depreciation because it is a non-cash expense. Okay, next, interest. By default, we are going to consider interest paid as operating. Interest 500, and you have to check, do you have any liability or asset with respect to interest? Yes, that is 1500 and 1750. So now interest paid in cash. So interest is 500 plus 1500 minus 1750, bracket close. So answer is 250 negative. Next, gain from sale of land. So you're selling the land on based of which you have earned some profits. Is it a part of operating? Operating means your core activity. You're generating the cash from sale of land. It will be covered in, it is going to be covered in investing activity. So in income statement, we have ignored second point, that is ignored gain from sale of land because it is a non-operating activity, or it is a financing, or it is an investing item. So it is a non-operating activity. So we have ignored two things. Now taxes. Taxes paid in cash. Same formula. Expenses reported in P&L. Expense report in P&L is 10,000. 10,000 plus opening liability minus closing liability. So do you have any liability? Yes. Liability is 2,000, 2,500. So plus 2,000 minus 2,500. Now for taxes, there are going to be two liabilities, one outstanding and one deferred tax. So deferred tax is also a liability. Now again same treatment, plus opening liability minus closing liability. So if I solve, 10,000 minus 500 minus 2,500, answer is negative 7,000. So with respect to taxes, we have two liability, taxes outstanding and deferred tax. So you have to consider both of them. With respect to cash paid to the suppliers, we were having one asset, one liability. Asset was inventory, liability was creditor. Okay, next, in my income statement, I'm left with equity dividends. So dividend is going to be considered as financing. Okay, so dividend paid. Third, we have ignored equity dividend paid by company because it is a financing activity. Okay, now whatever it is left, this is the cash generated from operating activity. Cash inflow from operating activities. So my cash inflow is 49500 minus 17,000 minus 4250 minus 250 minus 7,000. So during the period we have generated a cash inflow of 21,000 from operating activity. We ignored 3 points: depreciation because it is a non-cash, gain from sale of land because it is a non-operating activity, and equity dividend because we are going to consider this as financing activity. Okay, so with this you have covered your first part, that is computing cash flow from operating activity using direct method. Now using direct method. So this was using direct. Now I'm going to find out the same answer using indirect method as well. So indirect method would be opposite of what we have covered under direct. Answer is going to be 21,000. So now cash flow from operating activity using indirect method. Repeat particulars. So under a direct method you started with sales. Under indirect method I'm going to start with, I can start with net income, or I can start with profit transfers to reserve. So we can start with any of the figures. Okay, so let's start with profits transfer to reserves. So I started with profits transferred to reserves. That figure is 14250. Now using direct method you ignored that 3 items. Now you have to consider those 3 items. So profit transfer to reserve is 14,250. Now adjustment for non-cash and non-operating items. So in this value of 14,250, depreciation is already subtracted. I want to reverse that because it's a non-cash. So add depreciation. In this profit of 14,250, gain from sale of land is included. So you have to reverse that. Is already included. Less gain on sale of land. And in this profit of 14,250, equity dividend is subtracted. It is a non-operating activity. And equity dividend. So if the item is subtracted, it is a non-operating, you have to add it. If the item is non-operating already added above, you have to subtract it. So I want to reverse the thing. Gain to be minus, equity dividend already subtracted, you have to add back again. So add equity dividend. So now you are going to add depreciation of 3,500. Reduce gain of 5,000 and add equity dividend of 4,250. So this is going to be 1,250 plus 3,500 plus 4,250 minus 5,000. So answer is 17,000. It is known as cash generated from operating activities before adjustment for working capital changes. Now you have to consider working capital changes. So adjustment for working capital changes. If asset increases, outflow, liability increases, inflow. Okay. Now we are going to consider all the same manner. We are going to consider all the working capital items, the ones which we have already highlighted. So I'm starting with debtors. Now debtors during the period increase to 500. If debtor has increased, inflow, outflow, increase of asset is outflow, debtor has increased by 500. So during the period there is an outflow of 500. So working capital changes, increase in debtor. So if debtor increased by 500, assets increase, it signifies outflow. Next, inventory reduce. So if inventory is reduced, you have liquidated that, you will be creating an inflow of 1000. Next, creditors. Now I'm talking about the liability. Liability increases, inflow. Liability increases, increase in creditor, inflow of 2000. Then wages outstanding reduces, decrease in wages outstanding. Liability reduces, cash outflow of 1750. Then interest outstanding increases, liability increases, inflow, increase in interest outstanding, liability increases, inflow 250. Then taxes outstanding increases, increase in tax outstanding 500. Deferred tax, increase in deferred tax liability 2500. Now if you compute, this is going to be cash flow from operating activity. So answer is 17,000 minus 500 plus 3,000 minus 1750 plus 750 plus 2500. So answer is 21,000. Now if you look carefully, we are doing exactly the same thing with respect to the working capital, whether direct or indirect method is concerned. But the only point is that in the direct method, we are directly starting with the sales. We are going to ignore 3 points, that is depreciation, gain and equity dividend. While solving indirect method, we directly started with the profits. Those items which we have ignored under direct, we are going to reverse that under indirect, and we are going to make adjustments for working capital. Now whether you follow direct or indirect method, your answer should come same under both the scenarios, that is 21,000. Now my point is, so which method we have to follow? So now based upon the particulars which are given in the question, you have to decide whether to start with the direct or indirect method. But majority of the questions are testable on indirect method. Okay, so you should be familiar with both the ones, direct, indirect. Now if you go through the question bank of the institute, they have majority tested on indirect method. Okay, but you should be familiar with both the methods, direct as well as indirect. Now, before I compute cash flow from investing and financing activity, some important points. If liability increases, inflow. Asset increases, outflow. Okay. By default, if question is silent, interest received, dividend received, operating. Interest paid, operating. Dividend paid, that is going to be a financing activity. Okay. Now I'm going to start with cash flow from investing activity. Okay. Now my point is, at the starting of the year, you were having a land of 20, and now by the end of year you're having a land of 17,500. So your land value reduce. That means you have sell the land, and you have sell the land, eventually there would be a inflow. So 2,500 is inflow. But now my point is, 20,000 is left with 17,500. That means you have sell the inventory valuing 2,500. Now over this land you have earned a profit of 5,000. So how much you are going to sell this land? 2,500 was the cost. You have sell at a profit of 5. So eventually you have got 7,500. Now, before starting with cash flow from investing activity, always you have to prepare one working note. Now, working note is land account. Okay. So now, what are the particulars? Opening value of land, plus minus. So add assets purchase during the year, during the period, and within brackets assets sold. So if it is assets sold, you have to put up a minus sign. Assets sold during the period. Okay, then less depreciation, add gain, less loss on sale of land, and this is going to be your closing value. Okay, so what was my opening value? Opening value is 20,000. Closing value is 17,500. So land is a non-depreciable asset, so depreciation is 0. And eventually you have made a gain of 5,000. So you made a gain of 5,000. You have to find out X. If X is a positive value, that means you have purchased an asset. And if X is negative, that means you have sold the assets. So now 20,000 plus X plus 0 plus 5,000 is equal to 17,500. So now if I solve for X, 17,500 minus 5,000 minus 20,000. So X is equal to negative 7,500. Now what this negative 7,500 signify? That proceeds from sale of land is equal to 7,500. If it is a positive value, That signifies company has purchased assets worth 7,500 during the period. So working note 1. So I just want to make some changes. So instead of fixed asset land account, so right here fixed asset account, put here land and opening value, profit and loss on sale. That is sufficient, I think. Okay. So we have found it out that during the period we have sold the land for 7,500. Okay. Now using alternative 2. So you are having a land of 20,000. By the end of year 1, you are left with 17,500. That means you have sold land valuing 2,500 at a profit of 5,000. So how much you have received? You have received 7,500. Same manner, now you have to prepare plant and machinery account. So we always prepare the account on net basis. Net basis means minus the accumulated depreciation, what is finally transferring to your balance sheet. Now first account was of land. Now I'm preparing the account for plant and machinery. So opening value was 25,500 and closing value is 34,500. You have charged a depreciation. That depreciation is 3,500. So minus depreciation is 3,500. Y and any gain and loss on sale. So with respect to plant and machinery, nothing is given. So I'm putting here 0. Now again 25,500 plus Y plus Y minus 3,500 plus 0 is equal to 34,500. So if you find out Y is equal to positive value of 12,500. Now what positive value is signifying? This positive value signifying company has purchased plant and machinery of rupees 12,500 during the period. So in one case you have sold the land, in the second case you have purchased plant and machinery valuing 12,500. Now I'm going to start with my calculations. Proceeds from sale of land, positive 7,500. Now purchase of plant and machinery, this is working note 1. So purchase of plant and machinery 12,500 negative value. So we have considered land, plant and machinery. Now I'm left with investments. During the period, at the starting of the period, you are having an investment of 5 that has been increased to 10. So during the period, you have purchased more investments or you have liquidated your investments. So now investment has increased. So if investment has increased, additional investments during the period 5,000, and if you are putting up additional money, there is an outflow. So now cash flow from investing activity. So cash flow from investing activity, it is equal to 7,500 minus 12,500 minus 5,000. So answer is 10,000 negative, where negative is signifying outflow. So point to be noted, whenever you're going to start with investing activity, first you have to prepare a working note, that is fixed asset account. Now that account has how many particulars? That accounts in totality is having 5 particulars. Now those 5 particulars are opening value plus asset purchase minus depreciation plus gain equal to closing value. Now to find out the asset purchase or asset sold during the period, you have to put X and Y. Now if that X is coming out to be positive value, that means asset purchase. If X is coming out to be negative, that means you have sold the asset for this particular value, and it will signify proceeds from sale of assets. Okay, so this working note is mandatory before to start with computation of cash flow from investing activity. Now my last, that is cash flow from financing activities. So now in this you have to only concern with non-current liability. Okay, now I'm going to start with first is dividend outstanding. So you have skipped one item, that is dividend. Now dividend paid during the year. So expenses reported in P&L. Expense reported in P&L is 4250 plus opening liability minus closing liability. Opening liability was 500, closing liability 3000, bracket close. So 4250 plus 500 minus 3000. So answer is outflow of 1750. Next, loans. So one more word for loans, that is notes payable. So loan is also known as notes payable. Loan. At the starting of the year, you are having a loan of 5,000. It has been increased to 7,500. Debt repayment or additional borrowing. Debt has increased. So now debt has increased. That means additional borrowing during the year. That is 2,500. And now common stock. Common stock was 25,000. It has been reduced to 20,000. So earlier your common stock means equity shares. Equity shares was 25,000. Now it has been reduced to 20,000. Now my point is, if it has been reduced to 20,000, you have issued new shares or buy back the additional shares. So company has buy back the additional shares, or in simple words, company has repaid equity share capital. So now equity share capital is reducing. That means buyback of or repayment of buyback oblique repayment of equity share capital. So if you repay 5,000, it will be an outflow. And now my last item is retained earnings. So you are going to ignore retained earnings. Now the question is why we are going to ignore retained earnings. Retained earnings is nothing. It signifies the profits during the period that you have earned. Now if you minus 13,500, if you find out the difference between 13,500 and 20,250, that difference is nothing but 14,250. This 14,250 you have already considered. Now how you have already considered? Under indirect method, you started with profit transfers to reserve. So this retained earnings is the part of operating. This we have already considered under the indirect and direct method both. Okay, so this profits have already been considered. Now your final answer is cash flow from financing activity. 1750 negative plus 2500 minus 5000. So answer is 4250. Now let's conclude. From operating activity, investing activity and financing activity. So financing activity, there's an outflow of 4250, investing activity 10,000 and operating activity 21,000. So if I sum up, during the period company has generated a cash of 21,000 minus 10,000 minus 4250. That means 6750. This is the cash generated during the period. Your opening value of cash was 9750. Closing value of cash is 16,500. So if you're getting 16,500, that means your answer is correct. Okay, so this was it, friends, a comprehensive question on cash flow, on the preparation of cash flow statements. Okay, now let's quickly revise. Okay, so now first, what do you mean by cash flow statements? We understand that income statement is prepared using the accrual basis. Now we have to find out how much cash company has generated during the period. Whatever the cash is generated, that is going to be divided into three parts: operating, investing, financing. Operating means your core business activity, that means from day-to-day operations, including working capital. Investing from fixed assets and from long-term investments. And financing activity deals with equity and debt. Okay, now important points: how to find out the cash flows. So if you have to find out cash received from customers, opening data plus sales minus closing data. If you have to find out how much expense you have paid in cash, expenses reported in P&L minus within bracket opening asset minus closing asset plus within bracket opening liability minus closing liability. Okay, on to find out cash paid to the suppliers. Cash paid to the supplier is equal to COGS minus within bracket opening inventory minus closing inventory plus within bracket opening creditor minus closing creditor. In this way, we are going to find out expenses paid or cash received from our customers. Now, some important points where IFRS US GAAP differs. Interest paid. So, interest paid would be over borrowings. IFRS generally classified as operating or financing as per the discretion of the management. US GAAP being rigid, it is always going to be an operating activity. Interest received, dividend received. So, it will be received over your investments, operating, investing. US GAAP only operating. Dividend paid. Dividend would be paid to the equity holders. Operating or financing under IFRS, US GAAP only financing. Now in this particular case, only if my question is silent, we are only going to assume US GAAP. Why? By following the US GAAP, in a way we are going to follow IFRS as well. It's a double star point. Okay, so this we have covered. Now under direct method. Direct method, we start on converting each line item. We ignore in totality 3: depreciation being non-cash, gain from sale of land because it's a non-operating activity, equity dividend because it's a financing activity. In direct method, we started with the last point of the income statement and we reverse the order of these 3 items and then we make an adjustment for working capital. To start with investing activity, always you have to prepare a working note. Working note is fixed asset account. How many particulars? 5. Opening value plus asset purchase or asset sold plus gain or loss minus depreciation equal to closing value. You have to put X and Y to find out the proceeds from sale or asset purchase during the period. If value is positive, asset purchase. If value is negative, that means proceed from sale of fixed assets. Then finally, equity and debt and equity dividend. So this is going to be considered in financing activity. Important point, profit transfer to reserves or retained earnings is going to be ignored here because these are nothing but profits which you have already considered under cash flow from operating activity. Now, as an investor, what we want? As an investor, we want that operating activity to always be positive. Investing always negative. Negative means you are incurring the capital expenditure, and financing initially positive. That means you are raising money with the help of debt. Eventually, initially positive, eventually negative. Negative means repaying the debt. Now, if add up, during the period, companies generated a cash of 6750. Opening value of cash was 9750. Summation is, in my pocket, I'm having 16,500. If you're getting 16,500, that means your answer is 10% correct. Okay. Now, point is, before proceed to the next part, because we are extensively relying upon our class notes. So before proceeding to the next parts, it's very important that you have a very good hand on this particular example. Okay, thank you. So now friends, in this part, I'm going to solve practice problem 1 to 40. Okay. And in between, I'm going to cover up the pending LOS. Okay. So in this particular way, we are going to complete this particular chapter. Okay. So I strongly recommend, I'm going to solve question number 1 to 40. So please pause the video, try to answer yourself. And if you are unable to answer that, then only you have to watch the solution part. Okay. So now I'm left with 3 LOS as well. So first, I'm going to solve question number 1 to 26. Okay. Then 3 LOS are pending. I'm going to cover up that. And then I'm going to solve question number 27 to 40. So this is the agenda of this particular video. Okay. Question number 1 to 26, you have to try to solve yourself. Then I jump to these 3 LOS. And based upon that, we are going to solve question number 27 to 40. Okay. So now, question number 1. The major 3 classification of activities in the cash flow statements are operating, investing, financing. Answer is B. Question number 2. The sale of a building for cash would be classified as buildings is fixed assets. Anything with pertains to fixed asset is a investing activity. Now question 3. Under which section of a manufacturing company's cash flow statement following activities are reported? Purchase of securities held for trading and sale of securities considered cash equivalents. Okay. Now, meaning of trading securities. So meaning of trading securities is that we have invested in a product that the investment is held for trading purpose. That means our objective is to hold this investment for less than 12 months and book capital gain. So I have one investment. The purpose of that investment is to have capital appreciation. So now your purpose is to sell within 12 months and earn the profits. So it is always going to be considered as operating. Same logic goes with cash equivalents as well. So these are highly liquid investments and they would also be considered as operating. So now question number 3. Under which section of the manufacturing company's cash flow statement following activities are reported? So held for trading and cash equivalents, both would be operating items. Now question number 4. Which of the following is an example of financing activity under US GAAP? Now under US GAAP, payment of dividends. Payment of dividend by the company it's a financing activity. Answer is C. Question number 5. A conversion of face value 1 million convertible bond for 1 million of common stock would most likely. Now what is happening in this case? Question number 5th. Now you are repaying debt. Repayment of debt with the help of issuance of new equity. So now there is an obligation to repay the debt. Now how you are going to repay that debt? By issuing of new equity. Now my point is, what is the impact over cash flows? Repayment of debt not with the help of cash. Repayment of the debt with the help of issuance of new security. Now you are giving your company's share in return of repayment of debt. Now my point is, neither cash is coming in or out. So it's a non-cash transaction. So it will be disclosed under cash flow statement. So a disclosure would be given that it is a non-cash transaction. So it will not be reported under cash flow. There would only be a disclosure under cash flow statement. So now a conversion means a repayment of face value 1 million bond with 1 million of common stocks would most likely be reported as disclosure or supplementary information to the cash flow statement. Point to be noted, giving disclosure is mandatory. Okay. Now question number 6. Company engaged in a non-cash transaction that significantly affect its property. Now for example, there has been impairment of your fixed assets. Now impairment means now you are going to reduce your fixed assets and you are going to increase your expenses by the name impairment charges. So impairment is based upon prudence. What is going to be the impact over cash flow statement? Again, impairment is a non-cash item. So what would be the impact over the cash flow statement? It's not going to be reported under cash flow, but again a disclosure would be required. So answer is C, disclosed as a separate note. Question number 7. Interest paid is classified as operating activity under. Interest paid is operating under US GAAP and paid and operating or financing under IFRS. So my answer is would be classified as operating under US GAAP. So A and C, and would be classified as operating or financing, interest paid or financing under IFRS. Answer is C. Question number 8. Now question number 8, cash flow from taxes on income must be separately disclosed. So must be separately disclosed under both IFRS and US GAAP. So all the rules would be same for IFRS US GAAP except with respect to interest, dividend paid, interest paid, dividend received, interest received. So cash flow from taxes on income must be separately disclosed under both IFRS US GAAP. Answer is C. Which of the following components of cash flow may be reported under indirect method? Now indirect method. Okay. So which of the following components of the cash flow may be reported under the indirect method? So under which activity can be prepared using indirect method as well? So answer is operating. Which of the following is most likely to be appeared in the operating section of the cash flow statement under indirect method? Which of the following to be appeared in the operating section of the cash flow under indirect method? So under indirect method we started with profit transfer to reserve, or we can start with net income. So answer is A. Cash paid to the supplier, cash received from the suppliers, from the customers would be reported under the direct. So the question is under indirect method, that is going to be net income. A benefit of using direct is that it specifically provides from where you are generating the cash or from where you are spending the cash. Answer is C. 12th. Now company reported accounts receivables, that is debtors, 66 million at the end of its second fiscal quarter, revenue of 72 for the third quarter, and reported 55 million at the end of its third fiscal quarter. You have to find out cash collected from customers. Question number 12. So cash collected from customers is equal to opening data plus sales minus closing data. Now my opening value was 66, sales during the period 72, and closing data is 55. So how much I have collected during the period? 66 plus 72 minus 55. Answer is 83. So solution to 12, answer is C. When computing net cash flow from operating activity using indirect method, an addition to net income is most likely occur when there is a, okay. So now if you're starting with net income, if there is a gain, that gain is already included. So you're going to subtract the gain. So an addition to net income, going to add up. So a gain on the sale of an asset, we are going to deduct. Okay. If there is any loss on the retirement of debt, loss on repayment of the debt. Now if you're incurring any loss, that is anyways in there your P&L, that is not an operating activity. While computing net income, that loss has already been deducted. So now I'm again going to add back, that means B could be an answer. And now C, decrease in liability, deferred tax liability. Decrease in liability means so now for example your deferred tax liability was 100, now it has been reduced to 0. So decrease in liability means outflow of cash. So again I'm going to subtract this. So now which of the following is going to be an addition to net income? Gain? No, gains are going to be subtracted. Decrease in the deferred tax liability going to be subtracted. Loss on the retirement of debt is going to be added because being a non-operating item. So answer is B. 14. Company reported total revenue of 100, total expenses of 80 and net income of 20. If accounts receivables increased by 10, how much did company receive from customers? So received increased by 10. Okay. So now question number 14. Cash received from customers, opening data plus sales minus closing data. Now your debtors has increased by 10 during the period. So assume that earlier it was 0 and now it is 10. 0 minus 10 plus sales. You have made a sales of 100. So net how much you have collected? Net you have collected 90 from your customers. Answer is A. So point to be noted. Accounts receivables increased by 10. So let us assume that my opening value was 0. Closing value is 10. So now put up in the formula opening data plus sales minus closing data. So in totality you have collected a cash of $90 million from your customers. 15. You have to find out operating cash flows for 2018. Okay. Now we are going to solve this using the direct method. Question number 15. Now I'm going to start with, so revenue is given and then accounts receivable. So cash flow from operating activity using direct method. Cash received from customers, opening data 22 plus sales during the period, that is 37, minus closing data, that is 19. So answer is 22 plus 37 minus 19. Answer is 40. Next, COGS, inventories and accounts payable. That means cash paid to suppliers. Expenses reported in P&L, that is 16, minus opening asset. My opening asset is 36 minus 40 plus opening liability 14 minus 12. If I solve, 16 minus 4, that is 12, 12 plus 2, 14. So 14 with a negative sign. Then you have made a cash payment of 6 million for salaries. So cash paid for salaries 6 million, 2 million for interest. Interest would be considered as operating, and income taxes 4. So cash flow from operating activities equal to 40 minus 14 minus 12. Answer is 14. So cash flow from operating activity is equal to 14 million. The company reported COGS for the year 80 million, including an increase of 5 million in inventory and 2 million in accounts payable. You have to find out cash paid to the suppliers. 16. Cash paid to suppliers is equal to expenses reported in P&L. Expense reported in P&L as COGS is equal to 80 million. Okay, now minus opening inventory minus closing inventory. Increase of 5 million in inventory. So assume that your starting value was 0 and now your inventory has been increased by 5. So 0 minus 5. So inventory has been increased by 5. So I assume that my opening value of inventory is 0 and closing value is 5. Plus your accounts payable has increased by 2. So I'm assuming that my creditor initially was 0 and now closing value is 2. Add opening minus closing. So if I solve, 80 minus minus plus 5 minus 2, answer is 83. Answer is C. Question number 17, similar one. COGS 75, inventory declined by 6 and accounts payable increased by 2. You have to find out cash paid to the suppliers. Similar one. Now 17, inventory opening value, closing value. So inventory value declined by 6. So let us assume opening value is 6, closing value is 0, declined by 6. Creditor increased by 2. So assume that it was 0, it has been increased to 2. Now again expenses reported in P&L, that is 75 minus 6 minus 0 plus 0 minus 2. So if I solve, it is 75 minus 6, 69 minus 2, 67. So answer is A. 18. Company reported salaries of 20 million in P&L. Beginning payable was 3. That means in totality you have to pay 23 and still 1 is still payable. So how much you have paid? You have paid in totality 22. So using formula 18, expenses paid in cash is equal to expenses reported in P&L, that is 20, plus opening liability minus closing liability. So answer is C. 19. Based upon the above information, you have to find out cash received from customers and cash paid to suppliers. Now cash received from customers. So opening value of debtor is 73.2, sales 254.6, add up both the value and minus 68.3. 73.2 plus 254.6 minus 68.3. So answer is 259.5. Now answer is A or B. Okay. Oh, answer is B or C. Now you have to find out cash paid to suppliers. 19th, cash paid to suppliers is equal to expenses reported in P&L, that is 175.9 minus opening asset 39 minus 47.8 plus opening liability minus closing liability 20.3 minus 22.9. So if we solve, answer is 182.1. So answer is C. 20, reported interest expense of 19, tax expense of 6. So this is reported in your P&L account. Interest payable liability increases by 3, taxes payable decreases by 4. You have to find out how much cash you have paid. So 20, expenses for interest, expenses reported in P&L, that is 19. Now plus opening liability minus closing liability. My liability increases by 3. So assume that 0 minus 3. So answer is 19 minus 3, that is 16. Taxes, expenses reported in P&L, that is 6, plus opening minus closing liability. Your liability decreases by 4. So assume that the opening value is 4 and now it turned to 0. So answer is 16 and 10. So answer is C. 21. In 2018, company declared and paid a cash dividend of 10 and recorded depreciation of 25. Company considers dividend as a financing activity. You have to find out cash flow from operating activity. Okay, now cash flow from operating activity. We started with profits transferred to reserves. So how much profits are being transferred? So earlier reserves was 120, it has been increased to 145. How much profits has been transferred during the period to reserves? 25. Okay, so now 21. Cash flow from operating activity using indirect method. So now profits transferred to reserve, that is 25. Now adjustments for, you have to add depreciation. Depreciation is 25 and you have paid a dividend. So dividend is not a operating. So these profits are coming out to be post deducting the dividends. So again add dividend, because dividend is not a operating, it's a financing activity. So add dividend of 10. Okay, so these are the profits. So this is before adjustment for working capital. Answer is 60. And now you have to make an adjustments for working capital. Accounts receivable increases. So increase in accounts receivable. Asset increases, there is an outflow. How much outflow? Outflow of 5. Inventory increases, asset increases, there is an outflow of 3. Liability reduces means again cash outflow. So if you solve 10, 50, 50, 45. So my cash flow from operating activity is 45. So in this we have solved using an edZeb method. We first of all computed profit transfer to reserve. Those profits, in those profit, depreciation and equity dividend is already deducted, add back and make an adjustment for your working capital. So answer is 45. 22. So now 22, hint, we always prepare the account on net basis. That means post deducting the accumulated depreciation. 22. So in totality there were 5 particulars: opening value plus purchases minus assets sold, your proceeds from sale of assets, minus depreciation plus gain minus loss. This is going to be the closing value. Now what is the opening value? So opening value is 60, closing value is 59. Now company reported a loss on sale of equipment 2. So there is a loss of 2, it should be subtracted. And in addition, company shows a depreciation of 8 minus 8, and cash flow shows a capital expenditure of 10 million. That means you have purchased an asset of 10 million during the period. So add 10. Okay. Using the information, you have to find out how much company receive from sale of equipments. So now there is a sale of asset, that is going to be Y negative. Okay, there is no gain, 0. Now you have to find out Y. So what should be Y? 60 plus 10 negative Y. Y negative because there is a sale, minus negative, minus 8 minus 0 minus 2 equal to 59. So that is 60 so 60 minus Y is equal to 59, or Y is equal to positive 1. So proceeds from sale of equipment is going to be 1. Answer is A. So friends, you have to prepare an account. Accounts would always be prepared on net basis, opening value, closing value. Now it is given that you have purchased an asset value 10, depreciation is 8, loss is 2. Now by selling of the asset you have generated some revenue. You have to find out that revenue. Now apparently I know that there is a sale, so put up with a negative sign. Y is equal to 1. 23. Now 23. Company reported a net income of 25 million. 25 million of net income, that is EAT. But retained earnings are increasing only by 15. So that means in totality my profits were 25, but retained earnings is increasing only by 15. Then what happened with the 10? The 10 has been distributed as dividends. Okay. So company has paid a dividend of 10. Okay. Then your equity share. So equity share is commonly known as common stock, and it includes, and it is plus additional paid up capital common stocks. So they both represent common equity. Your common equity collectively increases by 42. Now you have to take an answer. So equity is increasing by 42 and you are paying a dividend of 10. How come dividend of 10? Profits are 25, transferring to reserve only 15. That means one portion has been distributed as dividend, that is 10. And you are having now common stock is represented by, equity is represented by common stock and additional paid up capital. Both of them collectively increases by 42. So proceeds from issuance of common stock is 42 and dividend paid of 10. Answer is A. Next, net adjustment to net income. Okay, So you're going to add up the depreciation. Okay, 1 at 2. Now your accounts receivables is reducing. Assets reduce means there is an inflow. Okay, so first $24. Now add depreciation of 2 to net income because it's a non-cash. Then your accounts receivables is reducing by 3. So decrease in accounts receivable, we should add 3. Inventory is increasing. Increase in inventory, cash outflow of 4. And accounts payable, your liability is increasing by 5. If liability increases, there is an inflow of 5. Now how much we should add? How much we should add to net income? So answer is 5, 5, 10, 10 minus 4. Net we should add 6. We should add 6 to our net income. 25th. Now what is the first step in cash flow statement analysis? Okay, now when you are analyzing the cash flow statements, now what is going to be the first step? So your Hamisha first step is going to be, so this is while analysis. So first step is always going to be to understand from where the company is earning the cash. Okay, so this you have to learn up. Okay, so what is the first step? First step would always be to analyze the major sources of cash. Answer is C. First step. Okay, so these remaining two are the further steps. So my first step is always going to be identify the major sources and uses of cash, from where the company is generating the cash. 26th, you have to find out amount paid to suppliers. So amount paid to suppliers, COGS. And now here we have been provided with decrease in inventory and increase in, so decrease in inventory, and one more important word is increase in accounts payable. Okay, so with the help of these three we have to find out cash paid to suppliers. 26th, now cash paid to supplier is expenses reported in P&L minus opening inventory minus closing inventory. So your inventory decreased by 501. So now inventory opening value, closing value. Inventory decreased by 501. So assume your opening value was 501, closing value is 0, and your accounts payable increased by 1063. Assume opening value to be 0 and closing value 1063. Now put in your formula, minus within bracket 501 minus 0 plus 0 minus 1063. So if you solve, answer is 25,700. Answer is A. So friends, with this we have covered practice problem 1 to 26. So it's very important that you should be well versed with those two formulas, that expenses paid in cash is equal to expenses reported in P&L minus within bracket opening asset minus closing asset plus within bracket opening liability minus closing liability. Further, cash collected from customers is equal to opening data plus sales minus closing data. Same wise, cash paid to the suppliers is equal to COGS, that is reported in P&L, minus within bracket opening inventory minus closing inventory plus within bracket opening creditor minus closing creditor. Okay, then another important point, under IFRS US GAAP, okay, non-cash transactions would not be reported, but yes, a disclosure is always required. Then another important point, under IFRS, interest paid is operating or financing, but under US GAAP only operating. Interest received, dividend received, operating or investing. IFRS it is US GAAP it is always going to be operating. However, equity dividend paid by the company, operating or financing under IFRS. But however, under US GAAP it is always going to be financing activity. Okay, so this we have covered along with practice problem 1 to 26. Now I am proceeding further to the remaining LOAs. Now my remaining LOAs is first with respect to common size cash flow statement. So now what is the meaning of common size cash flow statement? So now in order to analyze that whether we are performing good or not, we are performing time series analysis. We are comparing our performance with respect to our historical data. So now we are going to prepare one common size cash flow statement. Now what is the meaning of common size cash flow statement? Now you are going to represent every item of your cash flow statement as a percentage of your revenue. So you are going to divide each and every item of your cash flow statement by revenue, so that to evaluate whether you are performing better or not. Now for example, your cash collected from customers, our value is 100 and value is 120, and in both the cases we assume that my sales is 150 in this year also and in this year also. Now earlier I'm used to collect, in the previous year I have collected 66% of my sales from my customers. In this year that percentage has increased to 80%, and that means you are becoming more efficient. That means your debtors are reducing and you are collecting your cash in a faster manner. So with the help of cash flow statements, we make an analysis. So this analysis is covered in detail in the ratios part. So I don't want to comment more here. A simple, what do you mean by common size cash flow statement? To make a proper analysis, or to make our analysis better, we are going to divide each and every item of the cash flow statement as a percentage of revenue. So this is one way of creating cash flow. The another way is, though this is written in the book, but I have not found anywhere that company is computing or analysts are using this method. The another method is that you have to divide all the inflows by total cash inflow generated during the period, and each outflow by the total cash outflow for that period. Okay, so I have not seen this, but it is mentioned as alternative in your books. Okay, now question number 27. Which is the appropriate method of preparing a common size cash flow statement? Now you have to divide each and every line item of the cash flow statement as you have to divide by revenue. So now show each item of revenue expense as a percentage of net revenue. No, this is known as common size income statement. Show each item on the cash flow statement as a percentage of total revenue. So this is the correct answer. Third, show each item on the cash flow statement as a percentage of total cash outflow. Incorrect. So correct answer is B. Now next, in my next LOS, we will learn that how to compute free cash flow to fund and free cash flow to equity. Okay, so this will cover in detail again in equity chapter. Now what will happen? Now eventually in equity you have to learn about valuations. You have to value a company like Reliance. Now how to perform valuations? You have to forecast the future cash flows, and those cash flows would be discounted using your WACC component, and whatever the value, that is going to be the valuation intrinsic value of Reliance. That means this is a technique, discounted cash flow. You have to forecast the cash flow that Reliance is going to generate. You have to discount those cash flows using WACC component, and whatever the value is, that is going to be the intrinsic value of Reliance. Now there are two methods under DCF. One using free cash flow to firm, and one using free cash flow to equity. So let me elaborate. So full form of discounted cash flow method has two alternatives: free cash flow to firm, FCFF, and free cash flow to equity, FCFE. Now what is the meaning of firm? So firm represents the cash collected or cash generated by debt and equity together during the period. So what is the meaning of firm? Meaning of firm is debt and equity together. What do you mean by equity? So this is the cash flow generated by equity holders only. Okay, now my point is, let's come to our income statement. In our income statement, we computed EAT. Now EAT is the profit which belongs to. So EAT is the profit which belongs to the equity shareholder. Now cash which belongs to equity. So my starting point is EAT. Now these are the profits which belongs to equity holders only. But now while computing these profits, you have deducted a non-cash expenditure. So add depreciation. Now the moment I add depreciation, these are the cash profits. These cash profits during the period. Okay, now this is the cash profit. But to earn this profit, you have incurred some sort of capital expenditure. So adjustment for capital expenditure. Again, you have blocked some amount of money in your working capital. Adjustment for working capital. And during the period, you have repaid, or you have collected, or you have repaid, or you have issued debt as well. That means adjustment for debt. Now whatever is left, that is free cash flow to equity. So now let's prepare a simple balance sheet first. So income statement ends at EAT, and balance sheet, equity, debt, working capital, and fixed assets. Now you have to find out what is the cash that belongs to equity. Now I started with EAT, but in EAT one non-cash expenditure is already deducted. Add back depreciation. This is the cash profits which belongs to equity. But to earn this profit during the period, maybe you have incurred a capital expenditure. Deduct that or make an adjustment for that. Maybe you have blocked additional funds in working capital, make an adjustment for that. Plus you have to make an adjustment for debt part as well. Now whatever is left, that belongs to the equity holder. So now, though this is not, I don't think that the numericals are testable, but let's try one comprehensive numerical. Okay, now my income statement is, so let's assume I'm having an income statement where I'm having EBITDA. EBITDA is 10,000, depreciation amortization 2,000, 8,000 is EBIT, interest 3,000, 5,000 is EBT, taxation at 20%, that is 1,000, 4,000 is EAT. So a normal income statement. Now balance sheet. So equity was last year, previous year, current year. Last year equity was 20,000. This year 20,000. Retained earnings 0. And now you have earned a profit of 4,000. So now the retained earnings will be increased to, now retained earnings will increase to 4,000. So 0 dividend. So whatever the profits, that profits has reinvested. So retained earnings is now 4. Debt 10,000, 15,000. Creditor 2,000, 1,000. So if I sum up, that is 20, 10, 32, 24, 25, 25 and 15, that is 40,000. Fixed assets 15,000, 17,000. Debtor 7,000, 9,000, and balance is cash. So 32, 40,000. So 32,000 minus 15 minus 7, so that is 10. 17 plus 9 minus 40, that is 40,000. Now you have to find out free cash flow to, equity. So I started with free cash flow to equity. So now let's start with income statement. What are the profits that belongs to equity holder? So profits that belongs to equity, that is 4,000. But while arriving at this profit, one non-cash expenditure is deducted at depreciation. Depreciation is 2,000. So 6,000 is equal to cash profits. Okay. Now I'm coming to my balance sheet. You have to make an adjustment for each and every line item. Okay. Now fixed assets. So point to be noted. Whenever we are dealing with fixed assets, we have to create one working note. Okay, that working note was opening value plus purchases minus sale minus depreciation plus gain minus loss. That is going to be the closing value. Now gain and loss are now provided 0, 0. Okay, and now you have to find out whether it's a purchase or sale. Opening value was 15, closing value is 17, and depreciation is 2,000. Now either it's going to be purchase or sale. Positive value, that is purchase. Negative value, that means proceed from sale of asset. Assume this value to be X. 15,000 plus X minus 2,000 is equal to 17,000. X is coming out to be a positive 4,000. That means during the period you have purchased an asset of 4,000. And if you have purchased an asset of 4,000, cash inflow, outflow. Now adjustment for capex. So you have purchased an asset for 4,000, outflow. Now adjustment for working capital. Debtor increase by 2,000. If asset increases, outflow. Increase in debtor 2,000 negative. Creditor reduced by 1,000. Decrease in creditor liability reduces, that means cash outflow. And now adjustment for debt. Debt has increased by 5,000, cash inflow. So additional borrowing 5,000. Now whatever it is left, that belongs to equity. 6,000 minus 4, 2, 0. Now free cash flow to equity is going to be 4,000. That means how much cash equity owners have generated during the period. During the period, answer is 4,000. Now point to be noted. Your starting cash was 10. It increases to 14. That means during the period, how much cash you have generated? During the period, you have generated a cash of 4,000. And that 4,000 is represented by free cash flow to equity is equal to 4. Now how to compute this? First, now start with EAT. EAT add depreciation. This is going to be cash profits. Now you have to make adjustment for 3 items. That 3 belongs to your balance sheet. Now those 3 items are adjustment for capex. Always you have to prepare a working note. Adjustment for working capital and adjustment for debt. If liability increases, there is an inflow. If asset increases, there is an outflow. Point to be noted: while dealing with fixed asset, always you have to prepare a working note. We are going to make adjustment for all the items in our balance sheet. So you started with EAT. That means you started with this 4,000. That means you have made an adjustment for retained earnings as well. So you have to make adjustment for all the items except 2, that is equity and cash. Why? Because you are computing how much cash is earned by or generated by equity. So make adjustment for all the items in your balance sheet other than equity and cash. If answer is coming up to be 4,000, that means this is the cash which belongs to equity. Now my point is, if you have to compute cash flow from operating activity. Now what are going to be these steps? So if I have to compute cash flow from operating activity in the same example using indirect method, then your starting point is EAT. EAT is 4. Then you're going to add depreciation, that is 2,000. Okay, answer is 6. And then you're eventually going to make adjustment for working capital. So as working capital, you're having debtor and creditor. So debtor increased by 2,000, that is an outflow. Creditor increases by 1,000, that is an outflow. Creditor reduces by 1,000, that is an outflow. So if I compute cash flow from operating activity, my cash flow from operating activity is 3,000. Now my point is, if in the equation they have provided you with cash flow from operating activity. Now using cash flow from operating activity, how to convert or how to find out free cash flow to equity. So again I repeat, what was free cash flow to equity? EAT plus depreciation, adjustment for working capital, adjustment for capex, adjustment for debt. These are free cash flow to equity. And free cash and cash flow from operating activity have already made adjustment for EAT, depreciation and working capital. So now if using cash flow from operating activity, I have to find out free cash flow to equity, then my simple answer is free cash flow to equity is equal to CFO plus adjustment for capex plus adjustment for debt. This is going to be free cash flow to equity. Now you have to find out free cash flow to firm. Now what is the firm? How much debt and equity collectively earned or collectively generated. Okay, so similar manner. Now EAT belongs to equity, and these profits are net of tax. So how much debt holder earned net of tax? Whatever the interest they have earned, they have to pay tax on that as well. So interest net of tax, these are the earnings of debt holder. Add depreciation. This is going to be cash profits. Now cash profits which belongs to both debt and equity. Okay. Now come to your balance sheet. You have to find out cash generated by debt and equity. Debt and equity. You are going to make adjustment for fixed assets. You are going to make adjustments for working capital only. Now adjustment for capex, adjustment for working capital, adjustment for capex, and this is free cash flow to equity, free cash flow to firm. And now where I'm putting the tick mark, that collectively representative of CFO, EAT, depreciation and working capital. That means if with the help of CFO you have to find out free cash flow to firm, then it is going to be CFO plus interest net of tax, adjustment for capex. This is going to be free cash flow to firm. So now important. Now again we are revising. Okay, and then I will mathematically solve free cash flow to firm as well. You have to find out free cash flow to equity. Balance sheet, equity, retained earnings, debt, fixed assets and net working capital. EAT belongs to equity plus depreciation. These are cash profits, but to earn this profit you incur some sort of capital expenditure. Adjustment for capex, adjustment for working capital and adjustment for debt. Whatever is left, that belongs to equity. Now EAT plus depreciation plus working capital, they collectively refer to as CFO. Now using CFO, if you want to compute free cash flow to equity, that is CFO plus adjustment for capex plus adjustment for debt. Answer is equity. Same wise, free cash flow to equity, free cash flow to firm, EAT, interest net of tax. These are the profits which are earned by debt holder, and depreciation. These are totality, they are going to refer as cash profits. Now adjustment for fixed asset, adjustment for working capital. Fixed asset and working capital. EAT plus depreciation plus working capital, they are referred to as CFO. Now using CFO, if you want to compute free cash flow to firm, CFO plus interest net of tax plus adjustment for capex. So if I prepare my summary, my final summary is free cash flow to firm is equal to CFO, interest net of tax and plus adjustment for capex. Free cash flow to equity, that is CFO, capex and adjustment for debt. So just you have to remember this much. Okay, now let's solve one question on this. Question number Question number 36. So in question number 36, you have to compute free cash flow to firm. Okay. Net income. Then non-cash charges means depreciation. This is the total interest in your P&L 28, and you have to find out free cash flow to firm. So question number 36. Free cash flow to firm, that is EAT. EAT is 90. Interest net of tax. So you have earned an interest of 28. Over that 28, you have to pay 40% tax to the government. So net you have earned 28 multiplied by 0.6, that is 16.8, plus depreciation. Depreciation is 15.2. If I sum up, 122 is the cash profits which belongs to debt and equity. But to earn this profit, you have made some adjustment in capex. You have made some investment in working capital. Capex expenditure 34.3. Working capital expenditure 13. Free cash flow to firm is equal to 122 minus 34.3 minus 13. Answer is 74.7. So correct answer is C. Next, 28. Which of the following is an appropriate method of computing free cash flow to firm? Okay. Add operating cash flows to capital expenditure and deduct after tax interest. So answer is incorrect. Now you have to find out with the help of CFO. To operating cash flows, you have to add interest and you have to make adjustment for capex. So add operating cash flow to capital expenditure and deduct interest. Incorrect. Add operating cash flows to after tax interest payment and deduct capital expenditure. So correct answer is B. You have to add interest and deduct the capital expenditure. So correct answer is B. Okay. So class, before I proceed, so I don't expect such comprehensive example that we have covered, but again it's very important that you have a good hand on this. Why? Because eventually it's going to repeat in equity as well. Okay, so in under IFRS, I don't think computation of free cash flow to firm or equity is going to be testable, but yes, it's an important concept, and specifically from the point of view of level 2. So that's why I'm emphasizing more on this. Okay, so again I repeat, and then I'm proceeding to my next LOS. So important. Number 1, you have to compute free cash flow to firm equity. Firm means these are the cash flow which belongs to both debt and equity. Starts with EAT plus interest net of tax plus depreciation. These are the cash profits. But to earn this cash profits, you have made some adjustment into capital. You have made some capital expenditure and you have invested in working capital as well. Deduct both of them. This is the answer. Free cash flow to equity belonging only to equity. EAT plus depreciation. Cash profits. You have to make. You have made some adjustment in capex. Capital expenditure, you have some expenditure in working capital, and you have some sort of debt repayments as well. So post debt repayment, whatever is left, that belongs to equity holder. In simple way, you have to make adjustment for, while computing equity, you have to make adjustment for all the items other than equity and cash, and same wise while computing free cash flow to firm, you are going to make adjustment for all the items other than equity, debt and cash. Okay, and if you have to compute with the help of CFO, there are going to be 3 steps under both firm and equity. While computing equity, it is CFO, adjustment for capex, adjustment for debt. Firm, CFO, interest, capex. So CFO, capex is common. In case of firm, you have to add interest net of tax, and in case of equity, you have to make an adjustment for debt. If company has raised the debt, add it up. If company has repaid the debt, then you have to subtract. Okay. Now I'm proceeding further. Now my last LOS is with respect to ratios. Okay, so again, ratios are comprehensively would be covered in the next reading, but let's go through quickly. You have to compute performance ratio. Okay, now performance ratios, that how you're performing. Cash flow to revenue. Now the formula is cash flow upon net revenue, and if this ratio will keep on increasing, for example, earlier your CFO was 100 and net revenue 100, so ratio is 1. So against 1 rupee of revenue, you are generating a CFO of 1. But now if CFO will keep on increasing, assuming revenue is constant, now the ratio is 1.5. What is the meaning of this? Against 1 rupee of revenue, now you are generating a operating cash flow of 1.5. Higher this ratio, better it is. Then second is how much return you are generating on asset. That is again going to be CFO upon average of total asset. One is sort of a P&L item and one is balance sheet, where the meaning of average is opening asset, opening total asset plus closing total asset divided by 2. Return on equity divided by average total equity. Then cash to income ratio. Now income means operating income. Again CFO upon EBIT. And last one is cash flow per share. So CFO, these are the operating cash flows. From these operating cash flows, you have to pay preference dividend first minus preference dividend. Now whatever is left, that belongs to equity divided by weighted average number of equity. Performance, a simple one. Number one cash flow to revenue, then cash return on asset, that is CFO upon average total assets, cash return on equity, CFO upon average total equity, cash flow per share, CFO minus preference dividend, and cash to income ratio, that is CFO upon EBIT. Point to be noted, higher these ratios, better it is. And as an analyst, I always want that CFO to be higher, the better it is. Now debt coverage ratios. Now the coverage parts. Now debt coverage. CFO upon total debt. Now what is the interpretation if this ratio is, let us assume 2x. Now if you are having 1 rupee in your debt, if you are having in totality 1 rupee of debt, against that 1 rupee of debt you are earning 2 rupees. Now higher this ratio, better it is. Same wise, for example, in some companies it is 0.5. Now what is the meaning of 0.5? Against a total debt of 1 rupee, you are having 0.5. Now if this ratio is 2x, that means you are covering your total debt by 2. Now if the ratio is 0.5, that means against a debt of 1, you are earning only 0.5. So higher this ratio, better it is. Now interest coverage, double star. What is the formula for interest coverage ratio? So EBIT, interest coverage, is equal to EBIT upon interest. And if this ratio is 7x, now what is the meaning of that? If you have to pay a 1 rupee of interest, before paying that interest, you are earning 7 rupees. Or in simple language, you are covering that 7x. Your earnings is 7x if you have to pay 1 rupee of interest. Now my point is from the banker point of view. Higher the better or lower the better. As this ratio will keep on increasing, that means risk component will keep on reducing. Now I want to find out EBIT using CFO. Now CFO, cash flow from operating activity. While computing this, you have already deducted interest. So add interest. You have already deducted tax. Add tax. Now this is going to be divided by interest. Now this is going to be the formula for interest cover ratio. Now how much I am earning before paying, now I have to pay interest. So now before paying interest, deduct all your expense, you will be left with only two expenses, one taxation and interest. Now how much earning before paying interest? CFO plus interest plus taxation, because both these have been deducted from CFO, divided by interest. Now higher this ratio, that means that means more secure the banker is. Same wise, reinvestment. Now whatever you are going to earn, that you are going to invest in long-term assets. Now CFO upon cash paid for long-term assets. Again, if this ratio is 7x, that means against a requirement of 1 rupee of asset, reinvestment of 1 rupee, I am earning 7. Debt repayment. For example, during the entire year you have a repayment of 1. Your CFO is 6. You are earning 6x of that. Dividend payment, CFO upon dividend. And investing and financing ratio, CFO upon cash outflow for investing and financing activity. Now whatever you are earning from operating, that should be sufficient enough to meet the requirement of financing and investing activity. So CFO upon cash outflow from investing and financing activity. So as an investor, I always want cash flow from operating activity to be positive, investing to be negative, and financing initially positive, eventually turn negative. Now you have to see that whatever that investing and financing requirement, that requirement has to be fulfilled by CFO. So I always want CFO to be positive. Now coverage means how much you are cover that. So debt repayment, CFO upon debt repayment, CFO upon dividend, and finally is that CFO upon cash outflow for investing and financing activity. Only it's very simple ones, not testable. So one formula that you have to remember, that is the interest coverage, CFO plus interest paid plus taxes paid divided by interest. Okay, rest in all case your numerator is CFO, so pretty simple. Okay, so one formula that you have to learn, that is interest coverage. Now I'm proceeding further. Question number 29. An analyst has calculated a ratio using numerator as the sum of operating income, interest and taxes, and as the denominator amount of interest. This is nothing but interest coverage ratio. Okay, this ratio is known as interest cover, computing a company's ability to meet its interest obligation and indicating a company's solvency. So I think first one is correct. Second, this ratio is an effective tax ratio, incorrect. This ratio is an operating profitability ratio, answer is incorrect. So 29, which is the correct answer? Sum of operating cash flows plus interest plus taxes divided by taxes. This is known as interest cover ratio. It typically signifies that how much you are earning, how much you are covering your interest expense. And it is a sort of solvency. That means higher this ratio, better you would be in a position to repay your obligation. So answer is A. 30. Which of the following is correct? Under IFRS, indirect method is encouraged. Incorrect. We strongly recommend that you to prepare using direct method. Under IFRS, interest paid can be reported as operating or investing. Incorrect. Operating or financing. And last one, under US GAAP, bank overdraft should be classified as financing cash flow. Now what do you mean by bank overdraft? So this we covered in working capital management, that bank overdraft is a sort of working capital loan, and if it is a working capital loan, then whatever the cash, whatever the adjustment, that is going to be covered as would be covered in financing activity. So bank overdraft, notes payable, these are nothing but similar to debt. These are debt, okay, and they should be classified as financing activity under both IFRS and US GAAP. So correct answer is C. Now, which of the following 31, which of the following standards and format did the company most likely use in the preparation of its financial statement? Cash received from customer is operating, that means it is a direct method. Investing, interest and dividend received. So this is going to be interest, dividend received. They are operating under US GAAP, but under IFRS they can be operating or investing. So that means it is a IFRS, and you started with cash received from customer. That means it is a direct method. So answer is IFRS direct. How come direct? We started with cash received from customer. And why IFRS? Because you are classifying dividend and interest received as investing activity. Answer is C. Now, which of the following is a benefit of direct method? It directly specifies from where you are generating the cash. So provide details of specific sources of receipts and payment. Now, if you are generating a cash or you are paying a cash, you are making a cash payment, then to which person? For example, to suppliers, to wages, for wages, for interest. It directly specify that what are the sources and what are the sources of cash and where the cash is being paid. So this is the biggest advantage. 33. You have to find out cash collected from customer in 2013. So important, that is sales. Sales is 1 lakh, opening data and minus closing data. So answer is 13,500 plus 1 lakh minus 25,000. So answer is 88,500. 34. When a company issues a stock as a part of conversion of convertible debt, repaying the debt with the help of equity, only disclosure is required, will not be reported under cash flow statement. Omit the transaction, but disclosure is required. Answer is A. 35th. According to US GAAP, payment of cash dividends will most likely be financing activity. A. 37th. You have to find out cash paid to the suppliers. COGS. So 37th. COGS is 600 minus opening inventory so 600 minus 100 plus 200. So answer is 600. I think I made some mistakes. So cash paid to the suppliers 200. COGS 600. 600 minus 100 plus 200, 800, 700. Answer is B. You have to compute cash return on assets. So remember cash return on asset, question number 38. Cash return on asset is equal to CFO upon average total assets. Now CFO is 600, where average total asset is opening total asset, closing total asset divided by 2, that is 5,000. 600 divided by 5,000. Answer is 12%. Answer is A. Amount paid to suppliers, a double star, because here we need to understand what is the meaning of change. Question number 39. Now change in inventory by minus 30. Now what is the meaning of this? This means that inventory reduces by 30. So opening value, closing value. So inventory opening value was 0. So opening value was 30 and closing value is 0. So inventory changes by minus 30. What is the meaning of that? Inventory reduces by 30. Earlier it was 30, now 0. Same wise, accounts payable changes by minus 25. That means reduced by 25. Accounts payable 25, 0. Now you have to find out cash paid to suppliers. 500 minus 30 minus 0 plus 25 minus 0. So this is going to be minus 30, 470, 495. Answer is B. And 40th, interest paid is most likely included in under IFRS paid. Under IFRS it is operating or financing. Answer is B. Okay. So friends, with this we have covered till question number 40. Now in the next part I'm going to solve the remaining questions. So it's very important that you have to thoroughly revise. We have completed this chapter, and in the last part I'm going to solve the remaining ones. Okay, thank you. Now friends, in this part I'm going to solve the remaining questions. Okay, so I'm not going to discuss any new concept. I'm just solving the remaining practice problem. So question number 41. Compared with net income, a mature company's operating cash flow will. Now what will happen in case of mature company? Now their working capital requirements are not increasing year on year basis, because in a way your mature company, your sales are not growing. Now your working capital in a way is not growing. That means working capital, additional working capital required is 0. Now I want to compute cash flow from operating activity. EAT plus depreciation plus adjustment for working capital, which is 0. You're going to add up some depreciation. Now my point is, compared to EAT, your cash flow from operating activity will always be, your cash flow from operating activity is always going to be higher. Answer is C. Now if I compare this with a startup, so in case of startups, initially a working capital is increasing, so cash flow from operating activity is negative. Okay, but once your business is stable, now you don't need additional inventory, so thus your cash flow from operating activity is equal to EAT plus depreciation. 42. A company using IFRS reports its interest payment on long-term debt as financing activity. If the company reported under US GAAP, now if you are reporting under US GAAP, so under US GAAP, interest will be shown as interest payment is now operating activity. It will not be shown as financing. Interest paid under US GAAP. The most likely effect would be, now higher cash flow from operations, no, because interest paid has been subtracted from, it's considered as operating activity, so it is subtracted from cash flow from operating activity. So higher cash flow, no. Higher cash flow from financing activity, answer is yes. So what happened in case of IFRS? The company using IFRS consider this as financing expense, but US GAAP, a firm following US GAAP, consider it as an operating expense. So thus your financing cash flows are going to be higher. Answer is B. On 2014 statement of cash flow, the company's net cash flow from investing activity is equal to investing. Okay. Now for trading purpose, this is operating. Trading securities, operating. These are considered as operating one. Okay. Proceeds from issuance of bond. This is financing. You have raised money with the help of bonds. So this is financing. Investing for trading purpose. This is going to be your operating activity. And finally, you have made an investment. You have purchased a share of a company 275. Now affiliated company means you're holding 25% and objective is long term. You're investing in a company as an affiliated. It is your affiliated company. That means you're going to own anything greater than 20%, 20 to 50. Now my investment horizon is going to be longer. So this would be considered as long-term investment. Now my cash flow from investing activity. You have put up this much money. So cash outflow equal to 275. Why I have ignored proceeds from issuance of bond? This is nothing but financing, raising money with the help of bond. Purchase of securities for trading purpose, operating activity. Proceeds from the sale of trading security, again this is going to be an operating activity. So important. Trading securities. Trading means where your investment horizon is less than one year. They would be considered as operating. Proceeds from issuance bond is nothing but financing activity. And last one, when you're investing, that is only the investing activity. So you invest 30% in a company for 275. You when made an investment, it will lead to cash outflow of 275. Answer is B. Cash flow from operations. Net income plus depreciation, 1,08,000. Now your receivables are increasing. Asset increases. If asset increases, that means cash outflow. 1,08,000 minus 12,000. That is 1,08,000 minus 12,000. 96,000. And liabilities are increasing. Liability increase means inflow. Plus 9,000. Answer is 1,05,000. So 44. Net income plus depreciation. These are cash profits. Adjustment for working capital. Liability increase, inflow. Asset increase, outflow. So 1 lakh plus 9,000 plus 8,000 minus 12,000. My answer is 1,05,000. Which of the following is most likely for an analyst to choose direct method? It directly specify the sources of cash flow. So my answer is B. You have to compute free cash flow to firm. Question number 46. Free cash flow to firm. That means cash generated by debt and equity together. Started with EAT. I'm going to start with EAT. 2,100 plus depreciation plus interest net of tax. So depreciation is 400. Interest net of tax 300. Tax rate is 40%. So 300, 60% of 300. That is 180. These are going to be cash profits. $2,680. Now, if I prepare a balance sheet, equity, debt, fixed asset, and working capital. Now I have to find out free cash flow to firm. I'm going to make adjustment for capex and working capital. Capital expenditure 210 negative. Working capital is 0. My final answer, free cash flow to firm, is 2,470. Answer is B. Now you have to find out in 47th cash flow debt coverage ratio. So 47th formula is CFO upon total debt. How much in comparison? For example, if this ratio is 1, if this ratio is 7, that means if total debt is 1, in totality you're gaining, you're earning, you're generating cash of 7x. So cash flow from operations, operating activity, that is 105.9 divided by total debt 512.8. If we solve, answer is 20.65%. Answer is A. Point to be noted. Now this value is only provided for confusion. Okay. Now when we have classified, so formula is very simple. CFO, whether you have considered interest as operating, non-operating, this is the discretion of the management. Okay. Now CFO divide by, simply CFO divide by your total debt. So answer is 105.9 divided by 502.8. Okay. 48. Interest payable decrease during the period. Liability decreases. Now compared with the amount of cash payment made. If liability decreases, that means cash outflow, that means you have paid more cash. Interest expense is going to be, so 48. Now let us assume that interest payable was 500, 0, and in the P&L you have an interest of 7,000. So how to find out cash paid? That is 7,000 plus 500 minus 0, 7,500. Now compared to cash payments, interest expense, compared to cash payment, interest expense is a higher lower value. Answer is B. Now class, whenever we are going to face such kind of questions, it's better that assume some arbitrary numbers. Now for example, I assume an arbitrary number of 7,000, interest payable 500, 0, my answer is coming out to be 7,500. Cash payment is 7,500, cash expense is 7,000. Now in comparison to cash payment, my expenses are lower. Now 49th, in contrast to US GAAP, cash flow statement prepared under IFRS will require only the direct method. Incorrect. Are less flexible? Incorrect. They are more flexible. Now IFRS is giving you an option to consider interest received, interest paid as operating financing. So it is giving you more flexibility. US GAAP is rigid. And now last one is allow interest received to be classified as operating or investing. So correct answer is C. Why B is incorrect? Because IFRS is more flexible and here you are allowed to use direct and indirect method both. So correct answer is C. 50. Under the indirect method, the company reported total revenue of 359 and net income of 35. 50. So my revenue is equal to 359, net income is equal to 35. So expenses are 324. Now decrease in income tax payable of 16 and increase in interest expense payable of 22. Based upon this, you have to find out cash paid for operating expenses. Now expenses paid in cash is equal to expenses reported in P&L plus within bracket opening liability minus closing liability. Now your income tax liability reduces by 16. That means earlier it was 16, now 0. And interest expense payable increases by 22. That means earlier it was 0, now increased to 22. You have to solve 324 plus 16 minus 22. Answer is 318. Now in another way, in totality you have an expense of 324 in your P&L. Now liability reduces by 16. Liability reduces means you have paid more. Add 16. And liability increases. Liability increases means you have paid less. So 22 less. So using this, then also your answer is 318. So any method you can use, either using the formula or by the logics. Answer is C. 51. You have to compute cash collected from customers. So during the period there is a sales of 50,000. Opening value is 6, closing value is 7,500. 6,000 plus 50,000 minus 7,500. Answer is 48,500. While preparing cash flow, which of the following is the best example of investing? Trading is an example of operating. Liquid securities held for 30 days is again an operating. Now, securities held for more than 1 year, these are going to be an example of investing activity. Answer is C. These are known as, option C is known as cash equivalents. So you have invested in overnight funds or some funds where the maturity is 30 days. If maturity is less than 1 year, we are going to consider that as an operating. Answer is B. Now 53, you purchase an asset and in return you have issued company shares. There is no cash outflow inflow. We are not going to report this in cash flow, but yes, a disclosure is required. So we are going to report as supplementary information to the cash flow statement. 54th, a firm can choose to classify interest received. Now under IFRS 54, under IFRS, interest received operating or investing. Under US GAAP, only operating. So A is incorrect, B is incorrect. Correct answer is C. 55. Which of the following is correct under the direct method? It directly specify, it is helpful for the users. It directly specify the sources of finance. For users, it is easier to interpret the information necessary to assess a company's financial needs and ability to repay obligation. So why we want that you should prepare using direct? Because they directly specify the sources and the uses of cash. Okay, 55A. For prepares, again, it's difficult to prepare in comparison to indirect method, and in majority of the company case, you will find that they are going to prepare cash flow statement using the indirect method. Okay, but from the user point of view, which one is user friendly? That is the direct method. Okay, now cash collected from customers, sales plus opening data, opening minus closing. 28600 plus 54,400 minus 20,500. Answer is 62,500. Now class 57 is a double star. There you are going to make up the mistake. Now why mistake? Because there they have given you cash flow statement directly. So 57, high probability that you are going to make a mistake. So in this, they have given you a cash flow statement and income statement. You have to find out cash paid to suppliers. So now 57th. Cash paid to suppliers is equal to COGS minus opening inventory minus closing inventory plus opening creditor minus closing creditor. Now your COGS is very simple. This is 12831 minus. Now you have been provided with cash flow statement, and in the cash flow statement, inventory is reducing. So when it will signify cash outflow, now it is signifying as cash outflow of 792. Increase in inventory or decrease in inventory. Now when inventory increases, when asset increases, it signifies cash outflow. That means what is happening? Opening inventory, opening value, closing value, inventory. Your opening value was 0, but now it has been increased to 792. Inventory increases. If inventory increase, then it will going to be considered as cash outflow. So this is given. And accounts payable 295. Now accounts payable. Now it is adding up. So accounts payable added. When accounts payable will add? When liability, it is inflow. When it is inflow, when liability increases, so increase in accounts payable. So earlier your accounts payable was 0 and now 295. So important, this is given, and you have been provided with cash flow statement. Within the cash flow statement, this is your cash outflow and this is your cash inflow. Cash outflow means inventory is increasing. Cash inflow means liability is increasing. Now put up in your formula. So creating this one is an important part. So now 0 minus 292 plus 0 minus 295. So now if you solve 12831 plus 792 minus 295, answer is 13328. So correct answer is B. Class, why it is important? Because in the previous examples where the word is change is given, they have not been provided with cash flow statement, but in this case they have given you a cash flow. Okay, and within the cash flow statement it is given that they have written changes in accounts payable 295, cash inflow when liability would be an inflow when liability increases, and when asset would be an outflow when asset increases. So in both the cases my asset is increasing and my liability is increasing. Okay, now 58 they have provided you with common size cash flow statement on the basis of percentage of inflow and percentage of outflow, and they have provided with 3 options. You have to make some comments. Compared with 2015, which of the following statement is correct for 2016? Now, company had a positive net operating cash flow in 2016. So now if you are having a positive net cash flow, that means now that will be dependent upon cash paid to suppliers and cash received from customers. Now if your operating income, if you are saying that is greater in comparison to 15, then cash received from customers should increase and in percentage terms, and cash paid to the suppliers should reduce. But now look very carefully. 15, 16. Your cash received from customers is reducing on percentage basis. Okay. And your cash paid to suppliers is increasing in 2016. So in comparison to 15, you are going to generate a greater operating cash flows or a lesser operating cash flows. Receiving less cash, paying more cash to the suppliers. So in comparison to 2015, in 2016, your operating cash flows are going to be less. So A is incorrect. B. Directed a larger portion of cash outflow to investing activity. That means major of money is investing in plant, in machinery. Okay. In 2015, 10.6% is invested in plant and machinery, and 10.5% is invested. So more or less investment in plant and machinery is going to be same. So B is incorrect. Directed a larger portion, more or less same. In 15 and 16 you have invested 10.5% or 6% of your inflows into the plant and machinery. Incorrect. Now third, rely more heavily on debt to generate cash inflows. Okay. Now rely more heavily on debt to generate cash inflows. Now earlier in 15, if you are generating 100 rupees of cash, so from that cash only 2.3 is in the form of debt. But in 2016, if you are generating 100 rupees of cash, out of that 11.6 has been contributed by bonds. Now rely heavily on financing activity to generate cash inflows. That means as a percentage your borrowings has increased. The answer is yes. In 15 it was 2.3 and in 16 it has been increased to 11.6. So correct answer is C. Okay. So friends, with this we have covered this chapter. In totality we are having we were having 58 questions. Okay, and I think you should prepare your hand notes in a more elaborative manner, so that we should reduce our dependency on our reference book. Okay, so for this chapter, I recommend you not to refer the book. Refer your hand notes and complete this 58 questions in the proper manner. Okay, thank you. Now I'm going to start with my chapter. This is going to be a balance sheet. So what is the performer for balance sheet? Now the performer for balance sheet is right hand side is known as assets. Left hand side is known as liabilities. What is the meaning of assets? These are economic resources. These are resources because of which there's going to be economic benefit in the future. Now, what is the meaning of economic benefit? That means because of which there's going to be a cash inflow in the future. Same ways, what is the meaning of liabilities? These are obligations over the company, and these obligations will eventually lead to dash in the future. So this will lead to cash outflow in the future. Now, what is my format? Now, with respect to assets, our format is non-current assets, current assets. Within non-current, you're going to show plant and machinery, furnitures, land, building. And within current asset, we are going to show debtor, inventory, and cash. Now, what is the meaning of current assets? The meaning of current asset is anything which you think that will be converted into cash within a period of 12 months. Now, within a period of 12 months, this is going to be termed as current. What is the meaning of non-current asset? Any things which are having a life of more than 1 year, they will be termed as non-current. Same wise, then I'm going to, on the liability side, my first item is going to be equity, then debt, and my other liabilities. Now, liability can also be non-current liability and current liability. What is the meaning of current liability? Current liability means those liability which you have to pay within next 12 months. That will be current. And if you have to pay after 1 year, after 12 months, then it will be termed as non-current liability. So example of non-current liability is going to be a debt, bonds. Example of current liability is going to be your payables or creditors. This is going to be your current liability. Now my point is, let us assume that company has a total debt of 100 rupee. In next 1 year, company is planning to repay principal amount 10 rupees. This is a payment for next 12 months. And balance will be paid post 1 year. This is going to be 90 rupees. Now, how we are going to classify in the financial statements? So 10 rupee will be shown as current portion and 90 rupees will be shown as non-current portion. So what is the meaning of non-current? To be payable after 12 months. Current means to be payable within 12 months. Now, this performer of balance sheet is known as classified balance sheet. But point to be noted, this classified format of balance sheet will not be applicable over the financial companies. Now, financial companies such as banks, such as NBFCs. So in that case, you have to prepare your balance sheet P&L in accordance with RBI regulations. And RBI says that it has to be prepared in the sequence of liquidity. Now, whatever the assets are more liquid means that can be easily converted into cash. In that order, in the order of liquidity, you have to prepare your balance sheet. Now, how a company of banks will prepare this, we are again going to learn in level 2. So in level 1, our focus is only towards classified balance sheet. Now, classified balance sheet has how many parts? Current assets, non-current assets, equity, non-current liability, and current liability. In totality, there are going to be 5 components. Now, my point is very simple. This classified balance sheet, is it applicable over banking companies as well? A company like HDFC Bank? No. Their balance sheet will be prepared in accordance with RBI regulations, and this is going to be in the sequence of liquidity. More liquid asset will be presented first, and so on. In the order of their liquidity, more liquid will appear first, and so on. Okay, assets are resources because of which economic benefit will be there in the future. Liabilities are obligation because of which there's going to be cash outflow. Now go through LOS A and LOS B. Now go through LOS D. So instead of operating cycle, what is the meaning of operating? This we will learn in corporate finance. But as of now, read it as 12 months. Now go through LOS D. Read it as 12 month. So you have to go through till this particular part. Now I'm coming to my individual components. So first I want to talk about plant and machinery. Now first I'm going to talk about US GAAP. Under US GAAP, it is going to be shown at amortized cost only. That is the cost model. Cost model only. And whatever the usage of the asset during the period, how you're going to transfer this into your income statement with the help of depreciation. In totality, how many ways to compute depreciation? 3 ways. One is going to be SLM, second is DDB, and last one is unit of production method. But now under IFRS, the management has 2 options. One, cost, and second is long-lived assets. Second is revaluation model. Second is revaluation model. And now in totality, there are going to be 4 ways to compute depreciation. SLM, DDB, unit of production method, and one more method was under IFRS. That is going to be component depreciation. Perfect. Okay, name a asset over which depreciation will not be charged. That is going to be land. Now I'm coming about intangibles. Now intangibles, you're going to amortize. Everything will remain same. Now my point is one intangible which will never be amortized. That is going to be goodwill. But goodwill will be tested for impairment. Perfect. Now my next point is, okay, what about research and development? So we have learned 2 words, research and development. First, in case of US GAAP, research and development expense will be transferred to P&L. There was one exception. One exception is with respect to development of softwares. Perfect. Now, what about IFRS? Research expense will be transferred to P&L. And what about development? Capitalize. And how it will go to your P&L? In the form of amortization. Okay, perfect. Now go through this. Now I'm talking about inventories. Now to calculate inventory in totality, there are going to be how many methods under US GAAP? Under US GAAP, there are going to be 3 methods. Very good. LIFO, FIFO, and average. But what about IFRS? Only 2 methods are allowed. LIFO is not permitted. Okay. Does impairment is there in case of inventories as well? So what was the formula? Cost or NRV, whichever is lower. Perfect. Reversal of impairment charges under IFRS allowed. Under US GAAP. Perfect. Now go through this particular paragraph. Now I'm proceeding further. Next one is accounts receivables. Accounts receivable is nothing but debtors. Now my point is, suppose I make a sales of 100 rupees to a student. So one side sales will appear, and in your balance sheet, receivables will appear. Let us assume 100. Now I think that as a management, I think that I may not be able to receive this 100. So based upon prudence principle, Shall I show this as 100 receivable? No, you will show this receivable at. You think that you're unable to recover this amount. So now this will be 0, and correspondingly you're going to increase your expenses. Now at what value my receivables will be shown? Whatever the amount that you think, that is going to be recovered from that based upon the principle of prudence. Now accounts receivables are reported at net realizable value. Net realizable value means how much you think that you're going to recover by estimating the bad debts. Now management thinks that I'm not going to receive any amount, so entire amount is bad debt. This will be transferred to your income statement, and you're going to show receivables as 0. It is based upon which principle? It is based upon the principle of prudence. Now my next point is, suppose you are having a cash of 100 rupees in your pocket. So in balance sheet, I'm going to show this at 100. Any concept of impairment to cash applies? No. Okay. So cash will show at its true value. Second is going to be investments. Now investments can be of 3 types. Please help me. One is known as subsidiary, associate, and other investments. If it is a subsidy, that means your ownership is more than 50%. Then you're going to prepare how many financial statements? 2. One is known as consolidated, one is known as standalone. Consolidation would always be on. Consolidations would always be on 100% basis. And the portion which does not belong to the parent company, that will be termed as. This is going to be minority or non-controlling interest. Perfect. In case of associate company, there is going to be a single line item. Okay. In case of other investments, now you want to divide this into 2 parts. One is available for sale and second is trading. In case of available for sale and trading, both will appear at fair value. But in case of trading, unrealized gain and losses will be routed through P&L, and here your unrealized gain and losses will be routed through OCI. Now I want to add one more component here. So this I was talking about with respect to equity, but could be possible you have your investment into debt products. You are having investment into FDs where your return is fixed. Now if it is a debt, then debt can be classified into 3 ways. One, available for sale. One, trading, where trading means that you want to sell this security within less than 1 year, and if it is more than 1 year, then it is going to be available for sale. But now in case of debt, there is one more criteria which is known as amortized cost. Now what is the meaning of amortized cost? This we have already covered. Now my point is, suppose today I have an investment of 1,000 rupees in a bank. Okay, bank is paying me an interest of 7%, and this FD has a maturity of 3 years. So class, what is the amount of my investment at the end of 3rd year? You will keep on earning 7%. You're investing for 3 years and your amount is 1,000 rupees. What is going to be my investment value at the end of 3rd year? This is going to be 1,225. 1,000, 1.07 raised to the power 3 is 1,225. Now please help me, over this 3 years, how much interest you have earned in totality? 225. Now question number 1. Year 1, year 2, year 3. What is the interest amount for year 1? Your requirement is 7%. You deposited 1,000 rupees. What is the interest for year 1? My interest for year 1 is 70. And does bank pay you the 70 rupees at the end of year 1? It's a FD for 3 years. No. Now, what is the investment value at the end of first year? You deposited 1,070 is interest. This is going to be 1070. Perfect. Now, what should be the interest for second year? 74.9. Now your investment value is 1144.9. What is the interest for third year? My interest for third year is 80.143. And what is going to be my final value? This is going to be 1225. Now these values is known as amortized cost, and this is going to be your interest income. Now when amortized cost will be allowed? Amortized cost will be allowed if you are planning to hold the investment till maturity, then it is going to be you will show the asset at amortized cost. Now, in totality, investments can be of three types. Other investments. Number one, amortized cost. Number two, available for sale. Number three, trading security. If it is trading, it will be shown at fair value. Unrealized gain and losses will be through OCI, will be through P&L. But now, if it is an amortized cost, it will be allowed if you are planning to hold the investment till maturity. So this we use for debt, and this we use for equity. Now, debt can be of three types: amortized, available for sale, trading. But equity can only be of two types. We'll go through this particular part. Now, go through this part. Next, they are talking about payables. Jitna amount you have to pay, this you have to show in your liability side. Same wise, if you have received the advance and you have not delivered the services or delivered the product, then this will be termed as unearned revenue or advance received from customer. This will be converted into sales only when you have delivered the product or fulfill the obligations. If you have received any advance, obligations has not been fulfilled, then it is going to be shown as liability. Whatever the amount that you have received, this is going to be your liability. Now, what about my financial liabilities? Now, they're talking about bonds. Now, how bonds are valued? They are valued at their amortized cost. So this also we have covered in the chapter non-current liability. Now, my point is, so this was with respect to the balance sheet. Now, same goes with the equity as well. Now, how many components equity has? First one is contributed capital. This is the amount that you have invested in the company. The next word is retained earnings. These are the profits, cumulative profits that has been reinvested. Then next, within the equity, we have one more component. This is going to be known as minority. Now, this is the portion of subsidy that is not owned by parent company. Then we have one more component by the name treasury stock. Treasury stock means it is the common stock that has been repurchased by the firm. Now, class, my point is, whenever you go through income statement of any company where there has been a buyback, treasury stock will be a figure with a positive or with a negative. It is going to increase equity, it is going to reduce, it is going to reduce. Then preferred stock is also a part of equity. And finally, it is going to be accumulated other comprehensive income. So accumulation of EAT is known as reserves and surplus or retained earnings, and accumulation of OCI is known as accumulated other comprehensive income. Now go through LOSF. Now equity can again be of two types. Now let us assume that in totality, Company is coming up with an IPO at rupees 200. But now what is the face value of the share? Let us assume that face value of the share is 10 rupee. Now remaining 190 is known as security premium. Now how much extra we are taking over the face value? This is going to be 190 rupee. This will known as securities premium account. Now this is the amount that you have to in totality have invested. This is known as total amount contributed, equity share. Now this equity share will have two components, equity share capital and securities premium. So now if I go to money control, now recently there is an IPO by Kalyan Jewelers. Okay. So if I put here Kalyan Jewelers, now what is the face value? So face value of equity is 10 rupee, but their IPO price was 87 rupee. So now a shareholder has paid 87 rupees to the company. Now how accounting will work? What is the amount in totality you have paid to the company? 87. 10 rupees is face value and 77 rupees on account of securities premium. This contributed capital has two parts. Now, what is the disadvantage of balance sheet? So why we prepare balance sheet? So balance sheet basically help us to comment upon the solvency and liquidity of the company. So when I'm using the word solvency, that solvency means whether the company will be in a position to repay the debt, yes or no. Now my point is one company is having a very high debt to equity. So is it a high probability that this company will be in a position to repay the debt? They have a very high debt to equity. Now high debt to equity means that in your capital structure there's too much of debt and could be possible tomorrow you're unable to repay that. Now higher debt to equity signifies that there's going to be a lower solvency, that tomorrow could be possible that you're going to default on your debt obligations. Same wise, current ratio, where the current ratio formula is current asset upon current liability. Now my current asset is, what is covered under current asset? This is cash, debtor and inventory. And let us assume you have one current liability by the name creditor. And this ratio works out to be 2:1. Now what 2:1 is signifying? If you have to pay 1 rupee to the creditor, against this, how much assets you are having? Okay. Same wise, if the current ratio is 0.5, now what 0.5 is signifying? Against 1 rupee of creditor, you are having cash, inventory, debtor of 0.5. Now could be possible that tomorrow you are unable to repay this money. So now debt to equity ratio, higher the better, lower the better? Debt to equity, lower the better. Same wise, liquidity, though the answer is incomplete as of now, but prima facie liquidity ratios, higher the better, lower the better. Now higher the liquidity ratios, better it is. So this is the basic purpose of balance sheet. Again, you're going to compute the vertical common size balance sheet for the purpose of comparison, where we are going to divide everything as a percentage of total assets, similar to common size income statement. In case of income statement, we have divided by revenues, but in case of balance sheet, we are going to divide everything as a percentage of total assets. What is the purpose? Again, the purpose is time series and cross-sectional analysis. Then, what is the purpose of balance sheet? It is going to evaluate the company's liquidity and solvency. The moment I talk about liquidity, it includes current ratio, quick ratio, cash ratio. And the moment I'm talking about solvency, solvency is going to have 4 parts: debt to equity, then long-term debt to equity, total debt to equity, debt ratio, and leverage ratio. But one point is very simple, that solvency ratios lower the better and liquidity ratios higher the better, where higher liquidity signifying that you will be in a position to repay your obligations, And lower debt to equity signifies that yes, tomorrow the company is having sufficient equity to repay or to meet their obligations. Now my point is, now a company like Haldiram, so basically they are into the business of restaurants or manufacturing of sweets. So do you think that in comparison to the other players available in the market, Haldiram has a better brand image with respect to sweets? It is the market leader in the country. Answer is yes. Now my point is, they valued their brand. So what is going to be their brand value? So we perform brand valuations as well. So in our country, which company is having the highest brand value? This is going to be the Tatas. Now Tatas are having the highest brand value within the country. Now how do we value this? This is a separate case. But yes, we do value brand values as well. Now my point is, let us assume that EY values Haldiram brand value to be 1000 crore. That yes, they have a brand and that brand value is 1000 crore. Now my point is, can Haldiram book a goodwill of 1000 crore into their financial statements? Haldiram itself can book a goodwill of 1000 crore into their financial statements? Answer is no. But now let us assume that I purchase Haldiram brand. Haldiram is purchased by Vikas Vohra. Now, what is the fair value of assets that I'm getting? The fair value of assets that I'm getting in return, this is 50 crore. But I'm paying the fair value of assets that I'm getting, that is 50 crore. And in totality, I'm paying 1050 crore. Now, my question is, why I'm paying 1000 crore extra to the Haldiram? I'm getting plant machinery which is having a value of 50 crore. Why I'm paying this 1000 crore extra? Goodwill. Now, will goodwill appear in the books of Vikas Vohra? Okay. Now, point to be noted, Haldiram itself cannot book the goodwill, but definitely the purchaser can book the goodwill amount. So you yourself cannot book goodwill into your books, but definitely if you're going to sell this, the purchaser is allowed to book the goodwill. Now my question is, goodwill is going to amortize? Goodwill is going to amortize? No, but it will be tested for. It will be tested for impairment. Now class, I'm coming to my questions part. I request all of you to please proactively keep on replying. Okay. Now okay. Question number 1. Which of the following is an essential characteristic of an asset? Which of the following is an essential characteristics of an asset? That it is going to provide, they can be tangible, they can be intangible. Okay. The essential characteristics is they are going to provide future economic benefits. Okay. Now, question number 2. Now, in question number 2, A is correct. The value of Haldiram reputation is reported on the balance sheet at amortized cost. Incorrect. Shareholders' equity is equal to intrinsic value. Now, what is the meaning of intrinsic value? True value. Now, if I go to money control and I put here Maruti Suzuki, or I put here Nestle. So I put here Nestle. Now, please help me. What is the market cap of Nestle? 1 crore 68,000. Okay. So we assume that this is the true intrinsic value. Intrinsic value means values as per analyst. And let us assume that one of the analysts has valued the company at 1 crore 68,000 crore. But if I come to the balance sheet, how much money the promoters have introduced, the owner have introduced. So in totality, they have introduced, what is the total equity? Now total equity is somewhere close to, now class, I'm unable to see the figure, but let us assume that, take a second. But total equity is 20,193. But point to be noted, these figures are in million. So in terms of crore, what is the value? 2019. They have invested 2019. But currently, what is the value in the market? This is 1 crore 68,000. So this value in the balance sheet, it is a true value of the company. Class, it is a true value of the company? No, it is going to be known as book value. And whatever it is available in the market, that is known as the true intrinsic value. So balance sheet equity does not represent intrinsic value. It represents book value of the firm. Class, am I clear with option number B? C. Question number 3. This presentation is known as current, non-current, current liability, non-current liability, equity. This presentation is known as classified balance sheet. So question number 1, answer is C. Second, answer is C. Third, answer is A. Okay. Question number 2. Question number 2. Hint, it is similar to receiving advance from the customer. Question number 2. Now, how the proceeds received from advance sale of tickets to a sports event will be treated by the seller. So event has not been happened yet. Event has not been happened yet. Now, for example, there is a cricket match between India and Pakistan, and this cricket match is scheduled on 4th of April 2022, India versus Pakistan. And let us assume that this is the stadium, and in totality the stadium has a capacity of 50,000 and entire ticket sold on 29th of March. Now my point is how this advance that seller has received, seller is going to show into the books. Now my first point, this ticket that you have, the price that you have received, this is for this match. Have you fulfilled your obligations? No, you have not fulfilled your obligations. Am I allowed to book the sales? No, so sales will not be booked. Zero sales. But correspondingly, you're going to book a liability, a liability of 50,000. This liability is known as unearned revenue. Now on 4th April, this match happened. Have you fulfilled your obligations? Have you fulfilled your obligations? Sales 50,000, liability 0. So class, I have given you sufficient hint. Question number 2. So question number 2 is revenue is deferred until the event has happened. So answer is C. Question number 3. So finally, asset will be shown at cost or NRV, whichever is lower. Question number 4. Plant and machinery can be computed using under IFRS. It is going to be cost or devaluation. Question number 1. Company has created employee goodwill by reorganizing its retirement benefit plan. An independent consultant estimated the value of goodwill at 2 million. Am I allowed to book this goodwill of 2 million? Answer is no. It is a self-created goodwill. Answer is no. And company recently purchased a patent that was developed by a competitor. The estimated life is this. और आपने उसे वो पेटेंट खरीदा है, तो क्या उसको बुक करना अलाउड है? So class, answer to question number 1 is B. Then question number 2. At the beginning of the year, a company purchased 5 lakh shares of a company at 15 per share. So class, what is the consideration that you have paid? What is the consideration that you have paid? You have acquired 5 lakh shares at 15 rupees. So total consideration that I have paid is 75 lakh. Okay. Just before the acquisition date, company has a net asset of 6 million, 60 lakh, And parent determined that the fair value of the property is 1 million higher. Now my question is very simple. We acquire the assets at fair value. You are giving 75 lakh. Against this, you're acquiring assets of fair value of the assets. That is the book value. What is the fair value of the assets? So book value is 60 lakh and fair value is 10 lakh extra. So I'm paying 75 lakh and getting assets worth 70 lakh in return. Now why you're paying 5 lakh extra? Why you're paying 5 lakh extra? Good. Now please try to answer question number 2. Now question number 3 and question number 4 double star. So 3 is simple, 4 is difficult. For 4 I want to give you a hint. Within OCI, the term was unrealized gain and losses. So double star point is unrealized gain and losses. Unrealized gain and losses. Class question number 3 and 4. At the beginning of the year, company P purchased 1,000 shares of a company for 80 rupees. Okay. So what is the cost that I have incurred? I have incurred a cost of 80,000. During the year, company has paid a dividend of 4 rupees. That means in totality, I have received a dividend of 4,000. At the end of the year, company share price was 75 per share. Now, question number 3. What amount should company P report on its balance sheet if investment in S is classified as trading? So if it is classified as trading, then it should be shown at fair value, 75,000. Okay. And what is the amount to be reported if it is considered as available for sale? Whether it is available for sale or a trading. In both the cases, it should be reported at fair value, and my answer is 75K. So question number 3, what is the answer? Now answer is A. Now my question number 4 is, what amount you are going to recognize in the income statement? Now income statement ends at EAT. So what is the amount that you're going to recognize in the income statement? Okay. Now my first point is, I purchased the share for 80,000. By the end of the year, value is 75,000. So 5,000 gain or loss. 5,000 gain or loss. Loss. In case of trading, this loss will be routed through P&L. I incurred a loss of 5,000. But in case of available for sale, this loss of 5,000 will be routed through OCI. That means it is not a part of income statement. So here I put 0. Okay. Further, you have received the dividend. Now, dividend is unrealized gain or losses, or it is a realized one? Dividend received. Realized, unrealized. It is a realized. And realized will be the part of P&L. Whether it is available for sale or it is trading. Now here it is going to be 4,000, 4,000. So what is going to be my final answer? 1,000 loss in case of trading. And in case of available for sale, there's going to be a profit of 4,000. Whether it is a trading or it is available for sale, both in the balance sheet will be shown at fair value. Fair value. Fair value. Now, whatever the difference between the fair value and your purchase price, that difference is known as unrealized gain and losses. That has not been realized. Difference between your purchase price and fair value. Now, in case of trading, this will be routed through P&L, and in case of AFS, this will be routed through OCI. So I'm getting 5,000 loss in P&L and I'm getting 5,000 loss in OCI. Okay. Then you have received dividend as well. Now dividend received, this is a part of income statement under both. So I receive a dividend of 4,000. I receive a dividend of 4,000. So in case of trading, there is a loss of 1,000. And in case of OCI, there's a gain of 4,000. So dividend received is not an unrealized, it is a realized gain. Already you have received it. Income statement ends at EAT. If it is given in the question total comprehensive income, so OCI is a part of total comprehensive income. It is not a part of income statement. Income statement ends at EAT. And within this, if you add 4 OCI, then the statement is not known as income statement. It is known as total comprehensive income. Question number 1. What is the treasury stock? The meaning of treasury stock is the assets buyback during the shares buyback during the period. So you have, earlier you were having 92,000 shares and now you are having 84 outstanding. So what has happened during the period? 8,000 has been buyback. Now, what is the meaning of authorize? Authorize means how much shares company can issue in totality during its lifetime. So this is known as authorize. But we are least bothered with the authorize. How much shares companies earlier issued? 92,000. At the end of the year, 84,000 are outstanding. Now what happened during the period? 8,000 shares has been buyback by the company. Question number 3. What is the meaning of vertical common size balance sheet? As a percentage of revenue. Okay. Now, question number 4. Question number 4 is talking about solvency and liquidity. So, solvency ratios are debt to equity, debt to asset, debt to capital, leverage ratio. This is solvency. Lower the better. And then we have liquidity. Liquidity are current ratio, cash ratio, liquid ratio. Now try to answer question number 4. Try to answer question number 4. So answer is C. So with this, we have covered balance sheet as well. Introduction to financial statement analysis. Introduction to financial statement analysis. The best point is in this chapter also Institute has done lot many deletions. Okay. Now write concept number 1. Now write concept number 1. Right, concept number 1. Role of financial reporting. Role of financial reporting. Alternatively, you can read it as role of financial statements. Why companies should prepare financial statements. So, right, role of financial reporting is to provide variety of users with, useful data about the company. To provide varieties of user with useful data about the company. Now my point is, let us assume that you want a loan. You are working in a company, you want a loan. Now my point is, to your company, whether bank should give loan or not. What bank asks initially? Bank will ask the financial statements. Same wise, you want to do a credit rating of Maruti. What you need? Financial statements. You want to invest into Maruti. What you want? Financial statements. So why financial statements are important? So that they should provide variety of users with useful data. Next point. It is the responsibility of management. Underline the word management. It is the responsibility of management to prepare the financial statements. It is the responsibility of management to prepare the financial statements in accordance with IFRS or US GAAP. in accordance with IFRS or US GAAP. Third point, auditors' only responsibility is to provide reasonable assurance. Underline the word reasonable assurance. Auditors' only responsibility is to provide reasonable assurance that whether financial statements are prepared in accordance with IFRS or not. Now, to provide reasonable assurance that financial statements are prepared in accordance with IFRS or not. Now, my point is, what is the meaning of reasonable assurance? That means auditor is not going to check 100% data. They are going to do sampling. Based upon sampling, they are going to form the opinion. Next slide. Auditor can form following 4 opinions. Auditor can form following 4 opinions. Auditor can form following 4 opinions. Right as it is. Okay, in the top right, LOS 1 and 4. Okay, concept number 1 and concept number 4. Auditor can form following 4 opinion. Right as it is. Auditor can form following 4 opinion. Unqualified, qualified, adverse, disclaimer. Unqualified, qualified, adverse, disclaimer. Unqualified, qualified, adverse, disclaimer. Shall I start with the meaning of all? Now, what is the meaning of unqualified? Unqualified means your financial statements are in accordance with IFRS. There is no qualification, there is no condition. That means everything is 100% correct. Unqualified or clean opinion. Qualified. Qualified means, let us assume that the treatment of warranty expenses is incorrect. Rest everything is correct. Now, subject to following conditions. Now, auditor will mention the treatment of warranty expenses is incorrect. Rest everything is correct. Then auditor will form which type of opinion? Qualified. Qualified means subject to following conditions, subject to following qualifications. Then we have adverse opinion. Adverse opinion means there are going to be lot many mistakes in the financial statements. And last one is disclaimer. Disclaimer means management is not cooperating with us, because of which we are not in a position to complete the audit. Now, my point is, recently, Deloitte has resigned from the audit of Byju's. What is the reason they have given? They have formed an opinion that is going to be disclaimer. What is the meaning of disclaimer? That company is not cooperating with us. We left no other option. We are skipping this. We are leaving this. We are leaving the position of auditors. How many opinion auditor can form? 4. Number 1, this is going to be unqualified. Number 2, this is going to be qualified for small mistakes. Then it is going to be adverse for significant mistakes. And then it is going to be disclaimer, signifying management is not cooperating with us to complete the audit work. Right? Unqualified. Financial statements are, right? Explanation, qualified. Financial statements are, unqualified. Financial statements are 100% in accordance with IFRS. 100% in accordance with IFRS. Qualified for small mistakes, for small insignificant mistakes, such as incorrect accounting for warranty expense. Incorrect accounting for warranty expenses. Third, adverse opinion. In case of significant mistakes. Such as revenue recognition policy of the company. Fourth, disclaimer. Management is not cooperating to complete audit work. Management is not cooperating to complete audit work. Am I clear? Now let me show you where you find this annual report, this auditor's report. This you will find in the annual report. Now, if I show you the annual report of C8, now if I go to the financial statements, now this is the auditor's report. Now, who are the big four auditors in our country? PwC, Deloitte, EY, and KPMG. Now, their auditor name is BSR. Now, BSR stands for, so here we are talking about KPMG. For EY, you will find SR Butley Boy. For Deloitte, you will find Deloitte. For PwC, PwC is written. But for KPMG, their Indian name is BSR. And for EY, the Indian name is SR Butley Boy. Now, here they have expressed their opinion. Now, help me. What is the opinion? Unqualified, qualified, disclaimer, adverse. We have audited the financial statements of C8 Limited. In our opinion, and to the best of the information, financial statements given are in accordance with Companies Act 2013. Companies Act 2013 कहता है all the companies have to prepare financial statements in accordance with Ind AS. So it is in accordance with Companies Act 2013 in the manner so required and give a true and fair view in accordance with accounting principles generally accepted in India. Now, what is the opinion? This is going to be unqualified. Same wise, if the opinion will be qualified, subject to following conditions. Now, if you go back home, so the last time when Deloitte do the audit, their opinion was not for Byju's, it was not clean report. It was qualified report because they have lot many subjectivity with respect to the revenue recognition. Then we have adverse when there's serious mistakes. And then we have disclaimer when management is not corporate. Am I clear with this? Now, right, in India, detailed financial statements are given in annual report. As per Companies Act, this is not required, but just for the knowledge, as per Companies Act, annual report should be published maximum by 31st August. Maximum by 31st August. So financial statement, yesterday we covered that within 2 months. Na? So these are only the face of P&L balance sheet. Detailed financial statements you will find in annual report. It is to be available in the public domain by 31st August. In US, this is important. In US, we don't use a word annual report. Rather, we use a word Form 10K. Now, 10K is similar to annual report. Okay. Before I jump to that part, please go through this line. Am I clear with this? Now, if I go to Google Chrome and type here Pepsi 10K. Now, if I open it up, this is 10K. This is nothing but similar to annual report. Now you will find in this the income statement, everything. Now this is the financial statements. If I click upon this, you will find sales, everything mentioned in the report. But yes, this is not known as annual report. This is known as Form 10K. Am I clear with this? The next slide, double star point. In US, auditors has the responsibility. Auditors has the responsibility to test proper internal controls, to test whether the company is having proper internal controls or not, to test whether the company is having proper internal controls or not, as per Sarbanes-Oxley Act. As per Sarbanes-Oxley Act. Now, what is the meaning of this act? There was a company by the name Enron Corporation. This company has eventually collapsed. Same wise, there was a scam, Nirav Modi scam. Why these scams happen with PNB? Nirav Modi scam, Bhushan Steel scam, because the internal controls of PNB Bank is not strong. In the US, there's a requirement that you have to report upon internal controls also, whether the control system is good or not. Same wise, there's one popular bank by the name ICICI Bank. Has Chanda Kochar misused her power as a CEO and given the loans to the shell companies like Videocon, where they are not in a position to repay that? Eventually, this loss happened to the shareholders of the company. Now, we don't want this to be happen. That is why there should be proper controls in the company. It is the responsibility of the auditor to report on test of controls also. Am I clear with this? Okay. Next slide. In the same concept number 1 and 4, IFRS are prepared by, this we covered yesterday. IFRS are prepared by International Accounting Standard Board, and US GAAP are prepared by Financial Accounting Standard Board. In India, we use Ind AS. It is prepared by ICAI, Institute of Chartered Accountants of India.
Sir, India, sir, IFRS follow
अमेरिका में रेड लाइट पे गाड़ी रुकती है, इंडिया में भी रुकती है. अब सवाल है, रेड लाइट पहले कहां पे आई थी, इंडिया या अमेरिका? रेड लाइट पहले कहां पे बनी होगी, इंडिया अमेरिका? हमने फिर क्या करा? सो अकाउंटिंग स्टैंडर्ड्स भी पहले कहां बने, बाहर के देशों में. हमने उसको क्या कर लिया, कॉपी. वॉशरूम पहले कहां बना होगा, हमने क्या कर लिया, कॉपी. ठीक है, चलिए. क्या? हाँ, तो मैं कहता हूँ IFRS is not, Indias is nothing but copy of IFRS. बट अब IFRS वर्ड यूज करेंगे तो अच्छा नहीं लगेगा, इसलिए Indias. But content is exactly same. Shall I proceed? Now, right. Role of analyst. Role of analyst is to analyze the data. Analyze the data to support economic decisions. The role of financial statement analysis or role of analyst is to analyze the data to support economic decisions. Now, my point is, suppose you have to lend a loan to Maruti. You have to decide this. You are a credit manager in a bank. Now, what you will do to take these decisions, you are going to analyze the financial statements. Either your answer will be yes or your answer will be, if your answer is yes, then you have to also say how much amount we are going to give as loan. Now, this is the role of analyst. Now, my point is, before, if you're working in a mutual fund company, before investing into any company, are you going to analyze this? So what is the role of analyst?
to analyze the data to support the economic decisions. Now, write concept number 6. Concept number 6. Concept number 6. Financial statement analysis framework. Financial statement analysis framework. Now there are going to be 6 steps. Step number 1. State the objective of analysis. Step number 1. State the objective of analysis. Now what is my objective? Whether I should lend funds to the company or not. What is my objective? Whether should I lend funds? Whether should I give loan to the company or not? What is step number 2? Step number 2, gather the data. Gather the data. You will ask the company to provide with financial statements. Step number 3 is to process the data. Within bracket, now you will calculate ratios. You will prepare common size statement. Fourth, you are going to analyze the data. Fifth, you are going to prepare the report and conclude. Now, either the answer will be yes or answer will be no. Now, if answer is no, again this company comes after 1 year or 2 years. You have to update the analysis. So how many process? There are going to be 6 steps. Step number 1, state the objective. My objective is whether I should invest into this company or not. What is the second step? To gather the data. Step number 3, process the data, calculate ratios, prepare common size. Fourth, what do you have to do? Analyze. Fifth, you have to conclude. Now let us assume that I concluded that I'm not going to invest into Cholamandalam. As of now, I concluded this. Over the period of time, company performance changes, then you have to update the analysis. Am I clear with 6-step process? Step number 1. Step number 1, objective. Number 2, gather the data. Number 3, process. Number 4, analyze. Number 5, prepare the report. Number 6, update the analysis. Now my point is, if I show you one of the equity research report. So let me check for Bajaj Finance. Now, research report. Now, right now, there's a report by Sher Khan, 24th April dated, where they're given a target of 7,500. Now, my point is, will this target remain constant every time? No. Once quarterly results are available in the public domain, they're again going to update the report. So this updating the reports is a continuous process. Am I clear with this? Am I clear with this? Next slide. Next slide. Okay. Next slide. Concept number 3. Concept number 5. Next slide. Concept number 3. Concept number 5. Documents analysts should refer to analyze the data. Documents analysts should refer to analyze the data. Number 1. Number 1. Number 1. Financial statements. Number 1. Financial statements. Now, when I use the word financial statements, in totality, it comprises 5 statements. Number 1. Number 1. Income statement. Number 2. Balance sheet. Number 3. Cash flow statement. Number 4. Notes to account. Number 5. This we have not covered yet. Statement of changes in equity. This we are going to cover in balance sheet. Number 1, income statement. Number 2, balance sheet. Number 3, cash flow. Number 4, notes to accounts. Number 5, this is going to be statement of changes in equity. Not right. All the in notes to accounts, company will mention In notes to accounts, company will mention accounting methods and estimates, accounting methods and estimates used while preparing the financial statement. They will also disclose segment results. What is the meaning of segment results? Allow me some time. They will also disclose segment results, any legal proceedings, any acquisitions, or details of employee benefit plan. Now, what is the meaning of employee benefit plan? As of now, I'm not in a position to. This we will learn in the chapter of non-current liabilities. But yes, I want to analyze the word segment results. Now, what is the meaning of segment result? Now, my point is, there's one company by the name Reliance Industries Limited. Is it in a single line of business? They're into oil refinery. They're into petrochemicals. They're into telecom. They're into retail. They're into multiple line of business. Now you have to report in the annual report how much revenue you're earning from each of such businesses. This is known as segment result. Let me show you. Let me download Reliance annual report. रेटिंग क्या होगी रिलायंस की? ये फॉरेन बोरोइंग्स है, तो बड़ी कंपनीज में आपको डॉलर में भी उधारी दिखेगी. This is not opening. Okay, let me check this one. Now you have to control S segment results. रिलायंस का ना एनुअल रिपोर्ट में भी ये दिक्कत है. Okay, this is segment results. Now, page number 458. एक बार मैंने कोशिश करी थी इसकी एनुअल रिपोर्ट पढ़ने की, छोड़ दी बेटा. Okay, now this is their O2C, oil and gas, retail, digital service, that means geo, financial service, and others. This is known as segment results. Plus they have to disclose also how much they're earning from India and how much they're earning from other countries. So this is the total revenue of the company, out of which these are in crore. 5 lakh crore revenue is from India. 2 lakh crore revenue is from outside India. That means you have to provide segment reporting, how much you are earning from each of the divisions, plus you have to provide revenue bifurcations also. This you are going to find into the annual report under notes to accounts. Okay. Next slide. Management discussion and analysis. Management discussion and analysis. So पहला section था financial statements. Second is पहला लिखा ना financial statement means 5 items. Second point लिखेंगे. Second point लिखेंगे management discussion and analysis. Now, when you enter the corporate world, this is the most important section of any annual report. Now, management discussion and analysis. Now, if I jump to this part, in this, company will explain everything. How global economy is performing, how Indian economy is performing. Now, this company is with respect to the tire sector, how global automobile industry is looking like, then how global tire industry, then they will explain Indian industry, export, import, raw material prices. This is going to be the most important sections of the annual report. In this, company will explain how much money we are planning to raise, how much debt we are planning to repay, what will be the profitability going forward, how has been the profitability historically. So they're going to give detailed explanations about the financial statements. Now, at times, students ask me, I'm going to make some forecast, okay? Then you will ask me, how come your forecasts are 10% correct? So my forecasts are nothing, but we are taking this data from company. Now, for example, today I can tell you what will be the profit of Bajaj Finance after 3 years. Now, if I download investors presentation, Bajaj Finance. Now, if I download the investors presentation, Q4. Now, in this, have they provided the guidance? Now, if I look into the guidance, now please go to the guidance. Our AUM will grow in the range of 25 to 27. Our profit will grow in the range of 23 to 24%. That means company पहले ही बता देती हैं that what is going to be the profit growth. With the help of these numbers, we are able to forecast it. And is it a very narrow range? 23 to 24. Either you will be conservative, you multiply by last year profit with 1.23. Aggressive, you multiply by 1.24. You arrive at the answers. Now, where all this data you will find? This is going to be management discussion analysis. It is a very important section of the annual report. Now, right, management discussion analysis. In this, company will report current business trend, future capital needs, significant events. For example, how COVID impacted their business, significant events, and significant choices of accounting methods requiring judgment. Significant choices of accounting methods requiring management judgment. So first, you have to go through financial statements. Second, you have to go through management discussion analysis. Third, quarterly statements. Quarterly statements. In India, listed company declare the results quarterly. So you have to go through that also. Fourth, earning guidance. What will be the profit next year? Company's expectation. Number 5, proxy statement. It means proxy statement, it contains It contains matter on which you require shareholder vote. It contains matters on which you require shareholder vote. Now my point is, shareholders are, directors are appointed by shareholders. Their remuneration is decided by shareholders. Auditors are appointed by shareholders. Now, before you invite the shareholders for a meeting, you have to give them the agenda. This agenda is mentioned in proxy statement, right? For example, auditors are appointed by shareholders in a AGM, annual general meeting. In AGM, annual general meeting. Now, agenda of this is mentioned in proxy statement. Same wise, management compensation is approved by shareholders. Disclosure of this will be given in proxy statement. Now, double star question. Also, these are the documents that you have to refer. So let me show you in case of Bajaj Finance. Now, this is the investors presentation. Okay. We go through these presentations to better analyze the financial statement. So you have to go through the financial statements. You have to go through the investors report. You have to go through the quarterly reports. You have to go through the management discussion analysis. Write the last one. Go through similar documents. For comparable companies.
So please repeat.
Now my double star question is, on Friday, I think, Wipro disclosed it.
Sir, can you please repeat?
Thursday. On Thursday, Wipro disclosed the result. My double star question is, are quarterly results audited? So let me show you one of the quarterly results. So TCS has already declared. So let me show you the quarterly results. This is the quarterly results. Results. These are the results of the company. Independent auditor report, BSR, again KPMG. And these are the quarterly results. Okay, these are the quarterly results. Are quarterly results audited? Right, quarterly results are not audited. They are reviewed by auditors. Audit means detailed checking. Review means prima facie checking. Now let me show you one more company. That is Muthoot Finance. Now they disclose their earnings.
पॉज करने का ट्राई करती फिर समझ आया चलाएगा भाई मैंने 40 रुपए के लिए थे तब भी उसने इतने दिए थे इससे ज्यादा दे दी बल्कि
Now help me.
कब भी लाया है बकवास है तभी इतने कैसा करो कि खत्म हुआ है
ये एक्चुअली लास्ट क्वार्टर वाज एक मिनट तो 31 मार्च है मार्च के तो ऑडिटेड होते हैं
ऊपर वाले खा लियो ऊपर वाले मत खाओ चाट खा डाला होता है नीचे वाले टेस्ट करो सुनील
These are the results. I'm not talking about last quarter, okay? What is written? What is written? Limited review. They are not detailed audit, detailed checking. They are limited review by the auditors. Am I clear with this? Now go through. Go through this point. Is it making sense? Okay, this is testable. Now,
It is for just Indian gap or both Indian as well as US gap?
so both Indian as well as US, they are limited review. Only the last quarter results, along with the previous quarter, they are detailed check. But prima facie quarterly results, we don't have the time for detailed checking. So they're limited review by the company. They're limited auditors. Okay. Next slide. Next slide. In India, regulator is India regulator is SEBI. In India, regulator is SEBI. In US, regulator is Securities and Exchange Commission, SEC. Securities and Exchange Commission, within bracket SEC. Now my point is, if Indian companies does not prepare financial statements in accordance with IFRS, do you think that SEBI is going to take decision? SEBI is going to take actions against this company? Yes. Now, right? All the regulators globally are member of. All the regulators globally are the members of International Organizations of Security Commission. International Organization of Securities Commission. International Organization of Securities Commission. Now, what is their objective? Number one, objectives of International Organization of Securities Commission. First objective is to make the markets efficient. Make the markets efficient. Second is to protect the investors. Promote the investors. Third, promoting cross-border cooperation. Now we say that there are IFRS. So these IFRS has been prepared by the recommendations from all the countries. So promote cross-border cooperations. And last, reduce systematic risk. Last, right, reduce systematic risk. Now, what is the meaning of systematic risk? This we will learn in portfolio beyond my scope, but simple meaning is to reduce the risk of the market. Number one, ensure markets are transparent, reduce systematic risk, protect investors, and to promote cross-border cooperation. Now, my point is, it is the responsibility of this organization to punish the wrongdoers, to take legal actions against any company which is not following IFRS. No, it is the role of regulators. It is not the role of this organization, right? Punishing the wrongdoers is the responsibility of audit. It is the responsibility of regulators, not ISCO. इसको ही बोलेंगे ना, इसको, not ISCO. इसको ही बोलेंगे. मेरे को यही समझ आया, मैंने ये बोल दिया. ठीक है. Now with this we completed this chapter. In totality there are 30 questions. You have to answer proactively. Okay. So please revise in totality. Take 2 minutes. Then we are going to solve all the 30 questions. Can you show that where all the details of report of a company is given? Okay. So if you want to find the reports where it will be given, simply go to any listed company. For example, अब आप बताओ, नहीं तो आप बोलोगे मतलब कोई कंपनी आप बताओ. Any Balkrishnan? Okay, Balkrishnan Industries. It is a listed company. They are into the off-the-road tires. Okay, it is a market leader in tire business. Now this is the company. Control F, investors. Now in this you will find everything: financial data, presentations, annual report, everything. So you always find this investors column in case of listed companies. हाँ, सर्च करने के लिए. हाँ, क्वार्टरली डेटा होगा ये ना, quarterly results, then we have annual report, then we have presentations, everything will be on investor section.
Sir, like the earnings guidance that you showed us in the investor presentation, is that a reliable data?
It is a part of presentation. So if I download this presentation, in case BKT is a very renowned company, okay, so definitely they have mentioned their guidance also. So if I find here control F guidance, दिया होगा यहाँ कुछ लॉन्ग टर्म करके, एक मिनट. तब तक आप रिवाइज करिए. So generally the guidance is given in investors presentation. ये रहा. Now the company remains positive for FY24 on margins, raw material cost has been hedged XYZ. That means they are giving indication what we have earned in 2023. More or less, we are going to have the same margins in 24. They also give guidance with respect to sales also. Let me check. Okay, so here guidance was not given. So giving guidance is not mandatory, but you will find this for IT companies. All the IT companies gives their guidance. TCS, Wipro, Infosys. Now this time Wipro results were very poor. Despite that, Wipro does not fall at all. Why? Because the guidance was very strong. Plus, could be possible that let me check. Maybe. Okay, is this forecast reliable? So if I talk about companies like Bajaj Finance, these companies are known for governance. Their guidance are very strong and reliable. Guidance by HDFC Bank, it is a very reliable. Guidance by Tata Motors or TCS. So that depends from management to management. Guidance by JK Tyre, not reliable. For the last 5 years, they're saying that debt level will reduce. Debt levels are continuously increasing. Okay, so that depends upon management to management. Shall I start? अच्छा, मैं आपको दिखा देता हूँ ऐसे. Like how confident I am. Let me show you once. Let me show you once. Okay. मतलब मैं आपको प्रूफ कर दूंगा कि आप जेपी मॉर्गन के एनालिस्ट से कम नहीं है. मैं भी 2 मिनट में प्रूफ कर सकता हूँ. देख लेते हैं. What is the profit in FY23? What is the profit in FY23? 11,000, लिखेंगे 11,507.69 crore. 11,507.69 crore. As per management guidance, profit will grow at a rate of 23 to 24% for upcoming 3 years. Calculate the profit for next 3 years. आप एवरेज ले लेना या कंजर्वेटिव हो जाना. Okay, let us become conservative. Let's grow at 23. One 507.69 1.24 sorry 1.23 लेना ना 23 14,154 17,400 21,400 करेक्ट. अब ये देखिए are these the same whatever you have forecasted? 14,279 17,422 22,355 मोटा माटी नंबर इसी में है. Even if I calculate the variance 14,279 17,400 22,300. Now what is the variance? यहाँ पे कुछ नहीं, यहाँ पे कुछ नहीं, यहाँ पे 4% का वेरियंस है. दैट्स इट. बन गए आप भी. यही एनालिसिस करता है, काम करते हैं. एंड बिलीव मी और नॉट, फॉर दिस वर्क their salaries are in crores. अब मैं बच्चे को बोलूंगा प्रॉफिट यही आने वाला है और आएगा भी यही. बच्चा कह रहा है सर को पहले से कैसे पता था? सर में अगर इतना दिमाग होता तो सर आपको पढ़ा रहे होते. कई बार मैं सोचता हूँ अगर मेरे में इतना दिमाग होता तो मैं आपको पढ़ा रहा होता, मैं कुछ अच्छा ही कर रहा था लाइफ में. तो सर भी आप ही की तरह ही है. ठीक है, चलिए proceed further. This is not the case with this company. This is the case with lot many companies. We make estimates in this manner only. We don't go for what is GDP growth rate, what will be the movement of dollar, crude oil prices. हम बातें ऐसे करते हैं so that लगे कि हमने कुछ करा है, but we simply do last year profit multiply by 1.24. Shall I proceed? And believe me or not, I'm going to prove in my class that making money is very simple till the time you follow the instructions given in the class. ठीक है, so मैं दिखाऊंगा whatever the mistakes I have committed in my life and how I'm improvising now. Okay, so this we covered eventually. Earlier when I was making losses, I used to analyze a lot. Now when I'm making profits, I need not look into the market at once. छोड़ देता हूँ और मैं प्रॉफिट कमा रहा हूँ. मैं आपको प्रूव भी करूंगा. ओके, ठीक है. सो ओके, लेट मी शो यू. ये भी देखिए लो क्या रखा है. वैसे वो 30 सवाल करने आपको पता है फटाफट करा देगा, फिर घर चले जाएंगे. इस अच्छा इसका पोर्टफोलियो देख लो. चलो ठीक. Okay, please go through once. This is important disclaimer. 9 out of 10 traders make losses. On an average, their loss is 50,000. On that loss, they incur 28% transaction cost. That means your loss will be somewhere close to 50,000 plus 50%. On an average, 9 traders are making a loss of 75,000 per annum. That means what is the probability of losing? 90% is the probability that you will lose. Now, if I see my DMAT, In this, I have invested 1 crore. This is the P&L for last 3 months. What is the profit? Close to 5 lakh per month. कितनी positions loss में है? 1, 2, बाकी सब किस में? Profits में. Loss होता ही नहीं. इस करने के लिए, इस काम को करने के लिए, now this is 5% per month. 5% per month. Gradually जैसे हम आगे बढ़ते जाएंगे, today it is July, when we see in the month of August, I guarantee you this will be 20 lakh. In the month of September, it will be 25 lakh. In the month of October, it will be 30 lakh. It will keep on increasing at a rate of 5. और आप देखते जाओगे यहाँ पे एक भी नेगेटिव नहीं आएगा. Now, if I show you my open positions, अभी लॉस आ रहा है. This loss will again convert to 0. As of now, out of my 5 positions, I'm in loss in 3. But कुछ ऐसा होगा आगे जाके कि 5 के 5 किस में हो जाएंगे? ये प्रॉफिट्स में हो जाएंगे. And I guarantee this. And once we cover derivatives, you will analyze all my positions, whatever I'm making. So I'm a seller. Look into the quantity. All my quantities are, none of my quantity is positive. All my quantities are negative. And by doing so, the probability will always be in your favor. All my trades are at a probability of more than 95%. तो मेरे जीतने के 95% चांसेस हैं. दो मैं अभी हार रहा हूँ, but eventually it will turn into profits. तो मैं आपको धीरे धीरे दिखाता जाऊंगा. मेरे एक और डीमेट अकाउंट भी है. इसमें गेन्स लाखों में है, उसमें गेन्स थोड़े ज्यादा है. ठीक है. एंड इन टोटलिटी आई हैव 3 डीमेट अकाउंट्स. ओके. जब आप तीनों का ऐड कर लोगे पर मंथ, तो आपको लगेगा एक बहुत ही अच्छा नंबर सर कर रहे हैं. एंड सर इज डूइंग नथिंग फॉर दिस. ठीक है. So this I'm going to share in derivatives. हाँ, ये nothing आपको भी share. But इसका सिर्फ एक ही drawback है of my strategies, that you need at least 1 lakh rupees. You need at least 1 lakh rupees. Okay. And one more thing, if by September you have 1 lakh rupees, then please buy gold sovereign bond. It is going to be coming in the month of September. Okay. So what it is, have a trust on the teacher, but I want at least you should buy for 1 lakh rupees. ठीक है. तो अभी पहले बता दिए. Today is 16th. By 11th, try to collect 1 lakh or borrow from your parents, only from your parents. Market से कहीं किसी से ले नहीं लेना. So only from your parents, because borrowing from parents is a borrowing which you need not to return. कोई obligation नहीं है. So then we will learn how we are going to make profits. Okay. But I guarantee the probability of winning will be 95%. There will be sure certainty that you're going to make profits, until unless you yourself are going to commit some mistakes. Okay. So अच्छा, how long you have been practicing selling? मेरे को हुआ बहुत कम टाइम है. I think 1 year. Prior to that, I have huge losses. Earlier, I was buyer, and now I turned seller. तो जब मैंने बाइंग पे लॉस करा, तो मैंने सोचा सेलिंग कर लेते हैं. Then मैंने 2-3 कोर्सेज करे. Then I understand the power of option selling. Okay. Importance कोर्सेज की नहीं है. जितना मैं पढ़ाऊंगा, this is going to be more than sufficient. ठीक है. तो टेंशन लेना था. प्रोबेबिलिटी ऑफ विनिंग इज 90%. ठीक, करेंगे. चलिए आंसर करेंगे. रीड केयरफुली. इट इज नॉट रिटन कैलकुलेटिंग रेशियोज. रेशियो एज एन इनपुट यूज इन विच स्टेप. अच्छा, अब बच्चा पूछ रहा है व्हेन वी विल स्टार्ट डेरिवेटिव्स. ओके. September से पहले तो नहीं है, because suppose that we are going to start with equity, then we are going to start with fixed income, and then we are going to start with ethics. So September से पहले नहीं है, but yes, I strongly request, if possible, invest 1 lakh rupees in gold sovereign bond. ठीक है. चलिए, answer me. Ratios are an input where you use ratio. While प्रोसेस के लिए तो कैलकुलेट करते हैं, यूज एज इनपुट, एनालिसिस के टाइम इनपुट की तरह यूज करेंगे ना. सो व्हाट विल बी द आंसर? आंसर इज सी. While analyzing data, we use ratios as input. Correct? Question number 2. Think logically. Step number 6. Step number 6. सी कौन सा स्टेप है? सी है स्टेप नंबर 5. स्टेप नंबर 6 फॉलो अप. रेगुलर रिपोर्ट नहीं बोल रहा है, कौन सा रिपोर्ट बोल रहा है? सो इट विल बी इन स्टेप नंबर 6 पोस्ट फॉलो अप. व्हाट इज द रोल ऑफ analysis? You are analyst. You are analyst. To provide financial statements, it is responsibility of management. To form expectations, it is responsibility of. So it is written analyst. What should be the answer? Before I proceed, again I want to repeat. Ratios are an input. That means where you calculate the ratios, no, where you're using as an input while analyzing the data. Then updated reports, that means follow-up. Then we have what is the role of analyst? Role of analyst is to form. Am I clear? Question number 4. Again, analyst. Again, analyst. What is the role of financial statement analysis? Again, क्या बात कर रहे हो? एक मिनट. Providing information is responsibility of. फिर आप ए कैसे कर सकते हैं? Evaluating a company for the purpose of decision making. Now, why C is incorrect? Use financial reports prepared by analyst. Analyst does not prepare the financial reports. What will be the answer? B. Why is incorrect? Providing information responsibility of. Then using financial reports prepared by management होना चाहिए था, analyst लिखा है. C is incorrect, A is incorrect. Correct answer will be.
So what do they mean by economic decisions?
Economic decisions means whether to lend the money or not, whether to invest the money or not. Economics means पैसे का लेन देन. Now I want money as a loan, or you want to invest as equity into Reliance Industries. So whether we should or we should not, this is known as economic decisions. Economic means anything related to money. Question number 5. Which entity developed IFRS? International Accounting Standard Board. Which entity develops US GAAP? Financial Accounting Standard Board. Shall I proceed? What is the objective of International Organization of Securities Commission? Go through options very carefully. A में लिखा हुआ eliminate. What eliminate is incorrect. What is reduce? A is incorrect. Markets are fair, efficient, and transparent. 8. Why notes to accounts should be given? They provide additional data. Question number 9. accounting policy, estimates, method are given in चलो आगे. Information about, think logically, go through hand notes. Information about director compensation, management compensation. Information about strategies, risk, objective, management commentary. What type of audit opinion is preferred while analyzing financial statements? Answer. There is only one mistake with respect to inventory reporting. What will be the auditor's opinion? 14th, independent audit report is most likely to provide reasonable. The next, interim report, quarterly reports are unaudited. 16th, which of the following data is found by analysts outside company annual report? कंपनी के एनुअल रिपोर्ट में नहीं होगा, कहीं बाहर होगा. Sarbanes-Oxley Act deals with internal. Answer. Least likely required by US. Least likely required by US. Annual report. We don't have annual report. We have form. 19th. Interim reports are so either they could be semi-annually, quarterly. In India, they are 20. अच्छा, ये full set of नहीं होते. They are only sales expenses. There will not be any detailed notes to accounts. They are only the face of P&L. 20. High probabilities you give me an incorrect answer. Go through each and option very carefully. Why is incorrect? It is not the responsibility of auditors to prepare. It is responsibility of management. Is incorrect. Express an opinion about effectiveness of internal control. Even A is incorrect. Even A is correct if instead of prepared, it was written reasonable assurance. Reasonable assurance is not there. What prepared is there. Preparation is not the responsibility of auditor. It is the responsibility of management. So correct answer is. Ensure का मतलब होता है 100% surety. It should be a reasonable assurance. Surety नहीं. अब बच्चा मेरे से पूछता है, सर आपसे कोचिंग करूं पास हो जाऊंगा? मैं बोलता हूं हाँ, this is reasonable, this is absolute assurance ना, हो जाओगे. This is a reasonable assurance. ठीक है ना? 21. Common size statement process. 22. Providing financial reporting. Again, International Organization of Securities Commission, which of the following is correct? Promoting. 24. Complete capital source. Complete capital source means what already you have and what you are planning to. That is going to be C. Now, in management discussions, we explain how much loan we are having and how much we are planning to. It only have balance sheet, notes to accounts only have historical data. They don't have forecasted rate. 25th. Policy method estimate. Disclaimer. Meaning of disclaimer. Management is not cooperating. Or 27th. Significant mistakes. Qualified. Qualified. Not unqualified. Qualified. Subject to qualification.
With some limitation.
Again, common size. Role of reporting. Reporting. मैनेजमेंट का रोल क्या है?
So providing information free option.
Chapter finish हो गया. Learning module. Topics in long-term liabilities. Topics in long-term liabilities and equity. Topics in long-term liabilities and equity. Okay, now what will be my strategy? It's a pretty simple chapter. They have deleted the accounting treatment of bonds. So now this chapter is really simple. So once we complete all the LOS, then we are jumping to all the questions. I think in totality there are 27 questions. Okay. All right. In this chapter, we will learn accounting treatment. In this chapter, we will learn accounting treatment for following items. For following items. Number 1, financial lease. Number 2, operating lease. So this is most important. Both of them most important. Financial lease, operating lease. Another name of financial lease is long-term lease. Then we have short-term lease. Third, this is going to be ESOPs. Full form of ESOP is employee stock option plan. So this is new introduced into the curriculum. Earlier it was not there. And last we have defined benefit and defined contribution expenses. So financial lease, alternative name is long-term lease. Operating lease, alternatively known as short-term lease. ESOPs, and finally we have defined benefit and defined contribution expenses. Okay. Now let me start with financial lease, most important. Financial lease, and corresponding to that, right, operating lease. Now, what is the meaning of operating lease? Operating lease simply means taking an asset on rent. If you're taking any asset on rent, this is known as operating lease. Then what is the meaning of financing lease? Buying asset with the help of loan. If you are buying any asset with the help of loan, it will be termed as financial lease. If you're taking an asset on rent, then this will be known as operating lease. There will be two parties, one will be lessor, one will be lessee in both the cases. So to be simplified, here will be two parties. One will be lessor Alternative name of lessor is whosoever is going to lend the money. So I will take one example. In my case, lender will be either the lender will be HDFC or lender will be Maruti Suzuki. So I'm going to take one example. Then we have lessee. Lessee stands for borrower, and borrower will be Vikas. Same wise, in case of operating lease, there are going to be two parties. One will be lessor. Lessor stands for landlord. And then will be lessee. Lessee means tenant. Shall I start? Shall I start? Okay. Now I'm going to start with operating lease. Operating lease means taking the asset on rent. There are two parties. One will be landlord, one will be tenant. So accounting entry is very simple. What landlord will report? Landlord will report rental income. This will be profit and loss account, rental income. What tenant will record? Rental expense. Okay. Now my point is, risk and reward belongs to? Risk and reward belongs to? Lessor. Now, for example, tomorrow there is a fire in this property, or the prices of this property increase significantly. Risk and reward belongs to? Lessor. Then, this is the first point. Second point, risk and reward belongs to, क्या कर रहे हो मैम, आप लिख क्यों नहीं रहे हो? तो जो मिस हो गया अब 4 घंटे ऐसे ही बैठने वाले हो आप? Risk and reward belongs to lessor. If risk and reward belongs to lessor, then whose books of accounts will this property be appear? In the books of account of lessor. Third, property will be shown in the books of lessor. And last point is, who is going to charge depreciation on this property? And last point is, depreciation will be charged by lessor. So I want to repeat all the points. What is the meaning of operating lease? Operating lease simply means taking any asset on rent. There will be two parties. One will be landlord, one will be tenant. Now, landlord will book the rental income. Lessee will report the rental expenses. Risk and reward belongs to landlord. That means in the books of accounts of lessor, property will be shown, and accordingly he is going to charge depreciation. Till this point, am I clear to all of you? This is the accounting treatment for operating lease. Now there is a catch. This is simple one. The last catch is, this is a new update. However, now I'm talking about tenant. However, lessee will record. Lessee को ही tenant कहते हैं. However, lessee will record a liability by the name lease payable or rent payable, and equivalent amount of asset by the name by the name, right to use asset, by the name, right to use asset. If period of lease more than 12 months. If period of lease more than 12 months. Okay, now what I'm trying to say, write an example. Mr. A, tenant, enter into agreement with Mr. B, landlord. Total agreement period 3 years. Annual rent of property 10,000 rupees. 10,000 rupees. Now, what we have to do, we have to pass the accounting entries. Shall I start? All right. Solution. Prepare the timeline. How much rent he will pay at the end of year 1? 10,000. How much rent he will pay at the end of year 2? 20,000. How much rent he will pay at the end of third year? 10,000. Correct? Now my point is the lease agreement more than 12 months? Yes. Now what I will do, whatever the amount he has paid at the end of year 1, in the profit and loss account, this will be my rental expense, 10,000. Correspondingly, cash will be deducted. Accordingly, equity will also be deducted. So my balance sheet will tally. I'm going to book one expense. Now what will happen in the balance sheet? So need not to write. In the balance sheet, cash will reduce by 10,000. Assuming tax rate is 0. Because of these expenses, EAT will reduce by. Accordingly, equity will reduce by 10,000. My balance sheet will get tally. But now you have to book in the balance sheet. You have to book one liability and one asset. Now what is the asset? Right to use asset. Now this is at the end of year 1. How much right to use is? How much more rent you have to pay in the upcoming years? 20,000. Correspondingly, you will book a liability. Lease payable 20,000. Now my point is, this is for the year 1. How much rent you will pay for year 2? 10,000. Now help me. How much right to use? 10,000. How much lease payable? 10. How much rent you will pay in the third year? 10,000. How much right to use? How much lease payable? So this will be the accounting treatment. Earlier, what was the accounting treatment? Only we show the rental expenses. Now they have made a change. You have to book a liability as well as you have to book one asset. As you keep on paying the rentals, liability will reduce, asset will reduce. The name of the asset is right to use asset. हो रहा है. Now this is a new change, and yes, it is now. Now it is if rent agreement is more than 12 months, you have to do this particular accounting treatment. Whatever the rent you have to pay in the future, you have to book one asset, and correspondingly you have to book one liability. Am I clear with this? Am I clear with this? So let me revise all the points. What is the meaning of operating lease? What is the meaning of operating lease? Taking any asset on rent. How many parties? 2 parties, landlord and tenant. What landlord will report? One rental income, one depreciation. What lessee will report? Rental expenses. Plus he is going to book one asset, one liability by the name. Liability name will be lease payable. and asset name will be right to use for the remaining period of rent agreement. Is it clear enough? Now I'm moving to financial lease. Financial lease means, Karthik, you want to say anything?
So can you just explain me the solution once?
So how much more rent you have to pay?
So in
20,000.
first, yeah, I have to pay more 20,000.
So 20,000 will be lease payable.
Okay,
20,000 right to use.
okay, got it.
Then you pay rent of 10,000. Again, you pay a rent of 10. How much is left?
Yeah.
10.
Okay.
Right.
Okay, got it. Okay.
Okay. Now I'm moving to financial lease. Financial lease means buying a asset with the help of loan. Now, right. In financial lease, risk and reward belongs to Now, for example, tomorrow there is any damage to this car, it is a loss to Vikas, it is a loss to HDFC Bank. So risk and reward belongs to lessee, within bracket Vikas. If risk and reward belongs to lessee, in whose books of account it is going to be recorded? In books of account of Vikas. Asset will be recorded. And Vikas will charge depreciation. On asset. Now my point is, when you take anything on rent, one party earns rental income, another party rent expense. Now here what HDFC Bank is earning? So right, lesser will earn interest income, and lessee will record interest. Expense. Okay. So as of now, I'm ignoring the books of HDFC Bank or Maruti. My entire focus is on the books of Vikas. Write one example. Vikas purchased a car. This car financed from HDFC or Maruti. This car financed from HDFC or Maruti, where Vikas has to pay 1 lakh rupees per annum for a period of 3 years. Rate of interest 10% per annum. Fair value of car 2,80,000. Fair value of car 2,80,000. Estimated life of car 5 years. Estimated life of the car 5 years. Vikas will use the car only for 3 years. Vikas will use the car only for 3 years. Record asset in the books of Vikas. Am I clear with this? Okay. Now help me. Who is lessee? Lessee. Vikas is lessee. Whosoever is borrowing the money. Who is lessor? So I'm ignoring HDFC, Maruti Suzuki as of now. Okay. How much EMI I have to pay?
1 lakh.
1 lakh per annum. Rate of interest is 10%. What is the fair value of the car? 2 lakh 80. What is the life of the car? Vikas will use the car for 3 years. Okay. Write one more thing. Vikas will use SLM method of depreciation. Vikas will use SLM method of depreciation. Okay. Now, write the solution. It is very simple one. Write the solution. First, you have to prepare the timeline. 1 lakh, 1 lakh, 1 lakh. Fair value of the car means if you go to the showroom, at what price the car is available. What is the price of new car? Now my point is, this much EMI you have to pay to the bank. HDFC in totality will receive 3 lakh rupees. Whatever the amount it will lend, will it be more or less? Less. So help me with PV. You are going to discount by the rate of interest of 10%. Now this will be 248,685. Correct? This is the amount that bank will lend me. This is the amount I've actually borrowed from the bank. Okay. Now, my point is, if you go to the showroom, car is available at 2 lakh 80. But if I take a finance from a bank, bank is giving me a loan of 2 lakh 48. Now, what we are assuming, the balance is given as discount. Balance is given as discount. Now, my point is, right, Vikas will record car at, following the principle of conservatism or prudence, Vikas will record car at lower of fair value of car or PV of lease payment. PV of lease payment. That is lower of lower of 2,80,000 or 2,48,685. Now, point is, that is, I'm going to record the asset at 248,685. Correct? I will record asset at fair value of car or lower of or PV of lease payment, whichever is lower. Am I clear? Now I'm going to charge depreciation using SLM for 5 years, 3 years. For 5 years, 3 years. So I'm least concerned with for how many years the others are using. I'm concerned with my usage. I'm going to charge depreciation in 3 years. Now it is very simple. That means in the balance sheet, at time 0, you will record asset at 2,48,685. Over the period, you are going to charge depreciation using SLM method. So what will be depreciation for first year? This will be 82,000 895. How much I'm left with? 1,65,790. Again, I charge a depreciation of 82,895. I'm left with 82,895. Again, I charge the same amount of depreciation. How much I'm left with? 0.
So although the life of the asset is
It is 5 years that suppose
India may the validity of car is 15 years. I'm least concerned with for how many years the others are using the car. For how many years I'm going to use. This is my books of account. In somebody's house, chicken is also being prepared. You are a Jani, will you eat chicken? I'm not concerned with others.
so, but then we are using a different estimate, right? Like
Yes, this is my policy. In my company, there's a policy that we are going to replace the plant and machinery at the interval of 3 years.
the difference in total cost, fair value of car was
That is a cash discount.
down payment.
No, we don't consider it as a down payment, we consider it as a discount. Until unless specifically mentioned in the question, then yes, we consider this as down payment. If question is silent, that means the car dealer has given us the discount. So in the absence of information, it's a discount. Agar down payment hota, it will be mentioned in the question. If question is not saying anything, I assume this to be a cash discount. चलो यहाँ
क्वेश्चन है थोड़ा सा अलग है तो जैसे कई चीजों की डेप्रिसिएशन फिक्स है बाय गवर्नमेंट की फर्नीचर पे इतना ही लगेगा सर मतलब
incorrect, that is in income tax act. This is not in IFRS. आगे बोलिए.
Sir,
चलो.
one doubt, sir.
Hmm.
Sir, how did you compute the present value of that car, sir, as 2,48,685?
So in practical life, there will not be any discount between the two. So what we do in practical life, we are taking this amount as loan. Okay, we are taking this amount as loan. Now in the calculator, 248,685 will be PV, 3 will be N, 10 will be I by Y, compute PMT. You will get the same EMI.
Okay, sir.
Karthik, in the calculator, you have to give command second clear TVM. 1 lakh will be a PMT, 3 will be N, 10 will be I by Y, compute PV. You will get this amount. And how I calculated the depreciation? This car I'm going to use for 3 years. So what is the expense every year? Divide by 3.
Thank you, sir.
Am I clear till this point to all of you? Any doubts on this? Any doubts on this? So every year you're going to charge the depreciation. Now prepare loan amortization schedule. This we covered in last class also. This we covered in TVM also. Give it a try. Prepare loan amortization schedule. You are borrowing 2,48,685 from a bank at a rate of interest of 10%. Every year you're going to pay installments of 1 lakh. Please prepare loan amortization schedule or loan repayment schedule. You made a payment of 1 lakh. Again, you made a payment of 1 lakh. Please check the answers. Please check the answers. Now, help me. This will be transferred to books of accounts as interest expenses. What is the interest expense for first year? 24,869. What is the interest expense for second year? 17,355. And what is the interest expense for third year? This is going to be 9091. Same wise, what will be the interest income for HDFC Bank? First year, 24,869. Second year, 17,355. And third year, this is going to be 9091. So this will be interest expense for Vikas and interest income for HDFC or Maruti Suzuki. And this will be the liability. This will be the liability in the books of Vikas. So this is loan payable liability in the books of Vikas. In the books of HDFC or in the books of Maruti, it will be loan receivable in the books of HDFC, in the books of Maruti. That means Vikas will report two expenses. One will be interest expense, one will be depreciation. How much income bank will report? Income for first year is 24,000, second year is 17,000, third year it is 9,000. This will be the interest income for HDFC Bank. For Vikas, this is going to be interest expense. Vikas will also report one liability. These will be the values of liability. What are the values of liabilities? These are the values of liability. Am I clear with this? Am I clear with this? Am I clear with this? Now write an example.
So what about the 1 lakh payment every year?
So 1 lakh your payment, out of which 24,000 is interest, 75,000 is principal. So this will be shown in cash flow statement. It will have two parts. Interest, whatever interest you have paid, it will be as operating. Whatever the principal you have paid, this will be a part of financing activity. मैं एक मिनट लिखवा देता हूँ, दो डेज कैसी बातें कर रहे हैं। 1 लाख रुपए की किश्त दी है, 24,000 रुपए ब्याज है, 75,000 ने लोन वापस करा है। लिखेंगे in the books of Vikas, asset will record at asset will record at lower of fair value of asset or PV of lease payment. This is the first accounting treatment. Second, whichever value is lower, Vikas will charge depreciation. Vikas will charge depreciation based upon his usage. Based upon his usage. Third, help me. We prepare loan amortization schedule. We will prepare loan amortization schedule. This schedule will provide with two figures. It will provide with interest expense every year along with loan payable at the end of each year. Now, if I summarize the balance sheet, first I want to prepare my P&L. Year 1, year 2, year 3. What is depreciation? $82,895. Then I'm going to record one expense, interest expense. First year 24,869. Second year 173,555. Third year 9,099. Then help me. This is my P&L. Now prepare balance sheet. 0, 1, 0, 1, 2, 3. Value of asset. $248,685. 165,790. 82,895. Finally, it will be. And what is the loan payable? $248,685. Loan payable at the end of year 1 is 173,554. 9090. Really? Now, this is all what we have to do. This is most important. Out of 27 questions, 15 questions are based upon operating and financial lease. Out of 27, 15 questions are based upon operating financially. I'm giving 2 minutes. Please revise till this point. Any doubt, please let me know. Zoom students, any doubt, please let me know. Okay.
So whatever entries we have passed now for profit and loss and balance sheet, these basically relates to the books of lessee.
These all are in the books of Vikas. Lessee. Yes. Whatever we have discussed as of now, we have discussed in the books of lessee.
So will we also be discussing the treatment in the books of lessor?
Yes. Allow me some time now.
Yeah.
I'm giving 2 minutes. Any disconnect, please let me know. For that apple to apple comparison, some companies are taking asset on rent. Some companies are taking asset with the help of loan. So whatever taking on rent, in their books of account, there was not any asset. So it was not apple to apple comparison. So for apple to apple comparison, there's a requirement that you should report one liability, plus you should report asset also. Earlier, what happened in operating case, you are not reporting any liability, not reporting any asset. So it was underinflating your balance sheet. So it prima facie feels that you have no liabilities on you. So this is an incorrect way. For apple to apple comparison, you should show a liability, because the companies which are running on financial lease, they are showing liability for apple to apple comparison. So for example, there's one company by the name SpiceJet. This is very common in aeroplane business, airline business. So this company used to take aeroplanes on rent. So they will not report any liability. They will not report any asset. On the other hand, Indigo take assets with the help of loan. In their books, there will be high liability, high asset. So now you can say that this company is having huge debt. So this is also in case of SpiceJet also. So earlier there was a problem that we are not showing. So it was not, we were not able to analyze both the companies properly. Shall I proceed? All right. In the books of HDFC, this is known as direct financing. This is known as direct financing. Then in the books of Maruti, it is known as sales type financing. One is direct financing, one is sales type financing. Now, few things are common. Number one, interest income, same. Whatever the interest expense of Vikas, that will be interest income of HDFC or Maruti. So it will be same. Then second, lease payable, lease receivable, same amount. So if Vikas is saying I have to pay this much to HDFC, HDFC will say this much amount I have to receive from Vikas. So how much amount? 248, 173, 909, and accordingly 0. So this is exactly the same. But now Maruti will report one more income, that is profit on sale of car. So this entry will not be there, but this entry will be there. Now let us assume that you purchase the car for 2,48,685. Now, if you borrow this amount from HDFC will only earn interest income. But Maruti is making two profit. One is interest income. Second one is profit on sale of this car. So what will be accounting entry in the books of Maruti? First, Mr. A, yeah, Vikas, two sales. How much amount I have to receive? 2,48,685. 2,48,685. Second accounting entry will be COGS to inventory. Now help me. Let us assume that manufacturing cost of this car is 2,40,000. 2,40,000. Now think logically. How much profit Maruti booked at time 0? They booked a profit of 8,685. Plus over the period they're going to book interest income. This income will not be there in case of HDFC Bank. That means HDFC Bank is only earning interest income. Maruti is earning two income. One is interest. Second one is profit on sale of car. So now what you have to remember? So when profits will be maximum? In case of direct financing, in case of sales type financing. So profits will be maximum in case of sales type, right? Profits will be maximum in case of sales type financing. In case of sales type financing. Okay. Now write one example. Mr. A takes a property on rent. For 4 years. Rent payable every year, 70,000. Rent payable every year, 70,000. Help how to record in books of account. 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 कर लो बेटा. Let's start. अब घर जाके करोगे. अच्छा. Let's start. Now operating lease, financing lease. Operating lease. So now I'm talking about tenant. What tenant will record? Let's see. Year 1, 2, 3, 4. You're going to report rental expense 70K, 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 70K. Then you will record one asset by the name right to use. In financials also we can say car or right to use. Okay, right to use. How much? How much? 210. Then 140. Then 0. Then you have to record lease payable. How much? How much? 210, 140, 70. That's it. What lessor will report? Rental income. Plus is going to charge depreciation. So depreciation data is not given, but if there is given data given, depreciation to be charged by lessor, not by lessee. Am I clear with this example? Am I clear? Now, right? Last example. Mr. A buys a asset. Mr. A buys a asset. Fair value 7 lakh. Fair value 7 lakh. Fair value 7 lakh. एक सेकेंड, just एक सेकेंड. It is financed from a bank. It is financed from a bank at a yearly installment of 2,35,000. At a yearly installment of 2,35,000 for a period of 3 years. For a period of 3 years. Rate of interest 17%. Rate of interest 17%. With Mr. A will use the car for 3 years. Mr. A will use the car for 3 years. Help with accounting and help with SLM. Help with accounting treatment. Rate of interest कितना दिया? 7 कर दीजिएगा. Rate of interest 7. फेयर वैल्यू कितनी दी है? 7 लाख है. हाँ 7 कर दीजिए, दोनों 7. Name of the asset is also right to use. Here also right to use. Please check this part. You will record asset at 6,16,714. You will charge depreciation for 3 years. Then you have to prepare loan amortization schedule. Please check the calculation marks. This will be the value of will be the value of interest expense, and this will be the value of liability. HDFC will report this as rental income, this as loan receivable. Plus, if it is Maruti, then Maruti is going to book one more revenue by the name gross profit on sale of car. Now, there is one problem. Student says right to use means operating lease only. This is incorrect. In case of financial lease also, we can say that this is right to use. Okay. Now, with this, we have covered operating financial lease. I'm giving 2 minutes. There are going to be 15 questions on this. We are going to solve. Any disconnect, please let me know. Any disconnect, please let me know. Any disconnect, anything logically incorrect, please let me know. But yes, I want you to proactively then reply to those 15 questions. Zoom students, am I clear with this to all of you? I'm still waiting for more replies. Students, am I clear with this to all of you? Question number 7, read carefully, then answer. Question number 7. See, you have taken any premises on a rent for 3 years, right to use. You are buying a new car with the help of loan for more than 1 year, again, right to use. Question number 8. Lesser asset will appear on his books. Question number 8. Okay, let me help you. Question number 8. One is financial lease. Who charge the depreciations? Who charge the depreciation? Lessee. So in my case, lessee was Vikas. Then operating lease. Who charge the depreciation? Lessor. That is landlord. And he is borrower. Correct? Now again read. Lessor will charge depreciation in which lease? Lessor will charge depreciation in which lease?
Operating.
Lesser depreciation. Which lease? Operating lease. Shall I proceed further? Question number 9. When revenue will be highest?
Sales type.
Sales type. Revenue will be highest. 10th. Operating lease, landlord. Landlord. So lessor will report rental, landlord will report rental income and depreciation over the period. Correct? 11th.
B.
ऑपरेटिंग लीज का मतलब है एसेट को खरीदना. What is the meaning of operating lease? Taking an asset on rent. Why it will be B? 12th. Financial lease, borrower.
B.
There will not be a single payment. There will be payment over the period. And as liability will increase, liability will decrease. Initially, liability was 6,16,000. Eventually, it becomes every year it keeps on reducing. Because installment has two amounts. One is interest, one is principal. Liability will every year will reduce. Am I clear to this? 13th. These are the lease payments for 3 years. Fair value is 49 million. PV is also given 47. You will record a liability at
A.
Whichever is more.
so what will be liability value?
A.
Shall I proceed? 16th. Relative to purchasing, taking a asset on rent. ऐसे read करिएगा. Relative to purchasing means relative to financial lease. Operating lease generally. Okay. Now I give you two options. Question number 16. One, to buy a house with loan. Second, to take a house on rent. Which one will be more costlier? Here you have to pay interest. You have to pay down payment. Plus there is a risk of obsolescence. Now, for example, this society is not good enough. So यहाँ पे risk higher है, outdated. Risk is higher. Then there will be more restrictive terms by bank. Now, what will be terms and conditions of bank? You cannot sell this till the time loan is not paid. You cannot sell this house. But do you think that when you take anything on rent, you have to pay interest, down payment, chances of outdated, or there will be more restrictive terms? No, that is relatively simpler. Now again, read question number 16. Why we take assets on rent? So now it is less costly financing because we need not to pay any sort of interest. Then more restrictive, less restrictive. Then requires a larger payment. No, it requires a lesser payment. So C is incorrect, A is incorrect. What will be the correct answer? That is going to be B. Question number 17. Example of Maruti Suzuki. What Maruti will record? What Maruti will record? We covered two accounting entries for Maruti. Help me with the answer. Help me with the answer. COGS मार्केट वैल्यू क्या होगा? जो लागत आपकी खुद की लगी है. Market value तो 2,48,000 था, 2,48,000. Then what is your profit and loss? Maruti will not record the market value as COGS. COGS will be the cost incurred to manufacture the car. Why market value? क्या था accounting entry? Maruti will record two accounting entries. Number one, Vikas to sales. This is revenue equal to value of asset. COGS will be actual cost incurred to manufacture the product. Difference between the two will be my gross profit. Help me. A, B, or C? So in C, to be correct, it should not be COGS equal to market value. It should be COGS equal to cost incurred to manufacture the product. So what will be the answer? Question number 19, high probability you are going to commit mistakes. Right? Question number 19. Help me with the answer. The only catch is first installment is not at the end of year 1. It is at time 0. This is the only catch. Give it a try. Question number 19. You have to pay 5 installments with first installment starting from today. This is the only catch. Okay, let me help you. Useful life of the equipment is 7 years. I'm taking on a lease for 5 years only. So I will depreciate in 5 years, not in 7 years. How much? Very good. Write the solution. Solution 19. Solution 19. So in totality, there are going to be 5 payments. 25,000, 25,000, 25,000, 25,000, 25,000. Now, what is the rate of interest? 8%. We covered one BGN mode. Now, or what you can do, simply go to the CF function. CF0 will be 25,000. CF1 will be 25,000. What will be frequency now? 4. Press NPV. I by Y will be 8. Compute PV. This is going to be 1,07,803. Now, how much depreciation I'm going to charge in the beginning for each years? I'm going to depreciate in how many years? 5 years. So my depreciation will be 21,560. Correct? Now you have to prepare loan amortization schedule. Loan amortization schedule. Now I start with year 0. What is the opening value? 1,07,803. Correct? But the moment you borrow this amount, how much you have paid? The moment you have borrowed, you have paid 25,000. That means effectively how much you are borrowing? 82,803. Interest at 8%. Now how much interest you will pay? 6,624. What is the payment? 25,000. What is the closing value? Closing value will be 64,427. Now my point is, what is the total expense you have paid? Now total expense that I have paid, that will be equivalent to, that is going to be 28,000. So there are 2 catches in this question. First is you paying the installment right from year 1. So you're not borrowing 1,07,000. Effectively, you're borrowing only 82,803. This is the first catch. Second is life is 7 years. I'm least concerned with for how many years I'm going to use the asset. 5 years. So we'll depreciate in 5 years. Shall I proceed? Zoom students, am I clear with this to all of you? सबको clear है? Am I clear with this? Please answer question number 21. Least likely advantageous to tenant. Least likely advantageous to tenant. So having a higher residual value, this is more beneficial to the lesser. घर की ज़्यादा resale value है, किसके फायदे की बात है? So that is beneficial to the lesser, not to the lesser. Resale value. अब घर की कीमत 10 करोड़ हो जाए, 50 करोड़ हो जाए, you are still paying a rent. Question number 22. Second year. Lessee, tenant will report a okay, let me help you. Question number 22. If your tenant, what you will record? If your tenant, what you will record? Rental expense only. If you're buying an asset with the help of loan, that means you are borrower, you will report number one. Second, you will report depreciation, correct? So you have to compare both of them. You are tenant, you will record higher rental expense, lower depreciation, lower interest expense. So depreciation will be low. Clear है? तभी तो लोअर, उसी को कम कहते हैं बेटा. लोअर का इंग्लिश क्या होता है, ज्यादा या कम? तो जब मैंने रेंट पे लिया, मैं डेप्रिसिएशन नहीं दिखाऊंगा, तो लोअर डेप्रिसिएशन दिखाऊंगा. 23rd. Now I want to give you a hint for 23rd. Hint is on this paragraph. So this is the hint. I want you to read. However, lessee will record a liability by the name lease payable, rent payable, and equivalent amount of the asset by the name right to use only if period of lease is. Sorry, answer question number 23rd. So whatever the rent you have to pay, only you will pay that rent. That's it. Nothing will be recorded. No asset, no liability. 24. Okay, let me help for 24 also. First is what lessor will record. So we have two options. One is financial lease. In financial lease, HDFC Bank. What lessor will record? Loan receivable, lease receivable. He will record, correct? Then we have operating lease. Landlord is Mr. A, landlord. What he will record?
Rental income.
Rental income. Any asset? Yes, let us assume house. But anything with respect to the lease? Anything with respect to the lease? No. Now answer it. When you are going to record lease receivable in the balance sheet? Only in case of? But if it is a case of liability, liability is booked here, liability is booked here. But lessor will not record any sort of asset. यहाँ पे हमने एक liability book करी थी. Right to use asset plus lease payable. ये किसके केस में था? This is in case of lessee. This is not in case of lessor. So it is in case of lessee, but not in case of lessor. Answer 25th. What is the motto to take asset on lease, rent, rather than purchasing it? Why you want to take on rent rather than purchasing it? Question number 27. Compared to purchasing, compared to financial lease, operating lease is less exposures to obsolescence. That means outdate होने की possibility क्या है? Less. Answer will be C. Now, out of 27 questions, around 15 questions are based upon leases. So this is going to be the most important concept from exam point of view. Am I clear with this? Okay. Now, right? Compared to purchasing, where you purchase the asset. So compared to financing lease. क्लियर है मैम? एक में ऑब्सोलेंस का रिस्क परचेज में है, किराए पे क्या दर्द है? घर पुराना हो गया, क्या करोगे? चेंज कर लोगे. मैम, कंपेयर टू फाइनेंसिंग लीज, ऑपरेटिंग लीज मोस्ट लाइकली लेस रिस्क, रिड्यूस लिखा हुआ है. चलिए प्रोसीड. चलिए लिखेंगे अकाउंटिंग ट्रीटमेंट. Accounting treatment for ESOPs, employee stock option plans. Accounting treatment for ESOPs, employee stock option plan. Number one, ESOPs are given to employee. ESOPs are given to employee. ESOPs are given to employee in order to attract new employees, in order to attract new employees, in order to attract new employees, then retain existing employees, and last one is align interest of managers with shareholders. ESOPs are given to the क्या लिखा था? ESOPs are in order to attract new employees, retain existing employees, align interest of managers with shareholders. Next point. It is given in the form of equity shares. It is given in the form of equity shares or cash component. It is given in the form of equity shares. It is given in the form of equity shares or settled in cash based upon stock performance based upon stock performance. Okay. Third, because of ESOPs, at times employees take more risk. At times employees takes more risk, and at times employee takes lesser risk. At times employee takes more risk, and at times employee takes lesser risk. ठीक है, चलिए. Now let me start. Now my point is, if we see on the Facebook or Insta, there is a deal by the name of Satya Nadella or Sundar Pichai. They have a salary of 3,000 crore. They have a salary of 4,000 crore. Is it true they have so much of salaries? 3,000 crore, 4,000 crore salary of Sundar Pichai, salary of Satya Nadella. Is it true? Is it true? Is it true? Answer is yes. But their compensation is not in the form of cash. Their main compensation is in the form of stocks performance. How stock is performing. And yes, companies owned by shareholders, companies run by managers. Now, Larry Page is the owner of Alphabet, Google. But this company is run by Sundar Pichai. So that Sundar Pichai takes into consideration the interest of shareholders, ESOPs are given. What Larry Page wants? Share price to increase. So that Sundar Pichai should work for increasing the share price. His compensation is in the form of ESOPs. Correct? Now, what company will say? Company will say, let me take an example of Alphabet, Google. Google current share price is $132. So what will we say to Sundar Pichai? We want to retain him. So we say that, okay, we want to give this share at a price more than 132, less than 132? Less than 132. Let us assume $120. Now this 12 rupee is known as option cost. This is a cost to the company. बच्चा कह रहा more than 132. More than कैसे होगा? अभी मार्केट में कितने का बिक रहा है? आपने कहा $140 पे दूंगा, तो सुंदर पिचाई क्या करेगा? मार्केट से खरीद लेगा, साले पागल करा. आप जब कंपनी आपको ऑप्शन देगी to buy at more than 132, less than 132, less than 132. Let us assume that $120. Now Sundar Pichai will try its level best that for upcoming periods, share price should not fall below the level of 120. He will always want the share price to increase. Now, as share price will keep on increasing, his compensation will also increase. Now, let us assume that share price touch a level of 180. Now, point is, what is the profit of Sundar Pichai? That is going to be $60. Am I clear with this? So he always wants the share price to increase. This is the reason why we give ESOPs. Now we have to learn the accounting. But before that, ESOPs are settled in cash or in form of equity. Now, what is the meaning of this line? Now, here I have the obligation to give you one share at a rate of 120. What is the rate in the market currently? 180. After 1 year, 180. Now, one option is company will give $60 to Sundar Pichai. One option. Second option is company will issue one more equity share at a price of 120, which Sundar Pichai will sell in the market and book a profit of 60. So you have both the options. Either you want equity shares, company will give you equity shares. You have to pay 120, company will issue one equity share. Alternatively, if you want 60 rupees, company is willing to pay that 60 rupees also. Now, because of ESOPs, what will happen? Now there are two chances. Sundar Pichai will want share price to increase. He may enter into risky businesses. This could be one point of view. Second is he becomes too conservative, because of which he is not taking the risk. So at times, whenever ESOPs are there, some employees takes more risk, some employees takes lesser risk. Now the classic example is Bajaj Finance. The name of the CEO is Rajiv Jain. Now under his guidance, this company is growing at a CAGR of around 35%, which is a phenomenal number. Now he is very aggressive. At times management is aggressive. At times management becomes too conservative. So that depends upon the management. Okay. Now Right? Example. Right? Example. Company Bajaj Finance. Company Bajaj Finance has given following ESOPs. Number one, exercise price. This is a price that employee has to pay. Suppose this to be 100 rupees. Current market price. Current market price 120. Number of options. So there are 10,000 options. Or number of employees. Number of employees to whom option is given. To whom option is given. Assume this to be 15 employees. Assume this to be 15 employees. Number of shares to be issued. Assume this to be 600. Assume this to be 600. Then we have vesting period. This is important. Vesting period 3 years. Exercise period 1 year. Now, what is the meaning of vesting period? These options will only be given if you work for 3 years for the company. Then, once 3 years is over, you have the right within 1 year to purchase the stock from the company. Again, I want to repeat. And this is known as grant date. When this grant is given, so today date is, let us assume 1st April 2023. Again, I want to repeat, we are standing on 1st April 2023. What is the price of the stock? What is the price of the stock? 120. We have given the option to the employees that you will be able to buy the stock at a price of 100. What is the condition? You have to work for 3 years. Then you have a 1 year exercise period when you can exercise this option. This option is given only to 15 employees. How many shares they can purchase? How many shares they can purchase? This is going to be 600. Now, my point is very simple. If I prepare the timeline, employee will work for these 3 years. This is known as vesting period. Then this 1 year is known as exercise period. Correct? Now, point is expenses to be booked here during vesting period or during exercise period. Expenses to be booked during vesting period or during exercise period.
Vesting period.
Employee has worked during the vesting period. Expenses to be booked during the vesting period. Again, I want to repeat. It will be given during exercise period. But when they are working during the vesting period. Expense to be booked during the vesting period. Correct? Now, my point is, right solution. Fair value of stock grant as on date of grant. That means when this option was given on 1st April 2023, what is the fair value? Means what is the gain to the employee? Gain to the employee is 20 rupees per share, or I can say this is the cost to the company, 20 rupees per share. Correct? Now, make this 121. Okay, make this 121. Now what is the fair value of the option? 21 rupee per share. This is a cost. This cost you're going to incur in how many period? 3 years. Now what is the cost per period? Now cost per period. How much? 7 rupee per share. Now total cost per period. 7 multiply by 15. How much expense you will book? 63,000 expense. 63,000 expense. 63,000 expense. 63,000, 63,000, 63,000. My question is, have you paid this amount at the end of year 1? You have not paid, cash will not reduce. Correspondingly, you have to show one liability. Now, what will be accounting treatment? In the profit and loss account, you will say employee compensation. Year 1, 63,000. Year 2, 63,000. Year 3, 63,000. This compensation is not paid. In the balance sheet, you will report one liability. Employee compensation payable at the end of year 1. At the end of year 1. At the end of year 2. At the end of year 2. 126. At the end of year 3. 189,000. Am I clear till this part? Am I clear till this part? Am I clear till this part? Now what will happen? Now in exercise period. In exercise period. Now how much amount you will receive? How much amount you will receive from employee? 100 multiply by 15 multiply by how much amount you will receive? This is going to be 9 lakh. Now your liability was 1,89,000. Now you will issue shares. Now this will reduce. Now you will increase liability, equity, share capital. Now what is the value of share? नहीं तो current market price है ना. एक second. Sorry. What is the share? 121. 121 multiply by 15 multiply by 600. 10 lakh 89,000. एक सेकंड ना, मैंने कुछ गलत करा था. लाइबिलिटी रिड्यूस हो गया. एक सेकंड, मैं कुछ गलत करा. एक सेकंड मेरा. हाँ ठीक है, टैली हो गया. नाउ प्लीज हेल्प मी. My liability reduced by, this liability was 189. This liability reduced to 0. Correspondingly, मैंने shares issue करे and I receive a cash. Now, what is the difference between the two? What is the difference between the two? This is going to be the cost. Now, what I'm trying to say is, no doubt, options will be exercised during this period, but you have to book the cost during vesting period. How much cost you will book? That is going to be 63,000 every year. Once this period is over, you will receive 9 lakh rupees. Equity share capital will be 10 lakh 89,000. Net, what is the difference? Difference is of expense, which we have already booked. Now, what point you have to remember? First point is, this ESOPs can be settled in cash. This ESOPs can be settled in the form of equity shares. Now, what we can do here, once this period is over, we can say to the employee that, okay, whatever its expense is, 1,89,000, we want to pay you this in cash. This option is also there. If you want shares, we are going to pay him the shares also. Then, because of this, some employees may take more risk, some employees may take less risk. And the important point is, we are only concerned with one value, that is fair value of stock grant. Fair value of stock grant at the date of grant only. That means I'm only concerned with one date, that is on 1st April 2020. Write one example. Current market price 50. Current market price 50. Exercise price 20. Number of options 3,000 shares. Number of employees 2. Vesting period 5 years. Exercise period 1 year. Calculate expense every period.
So what have we written after number of options?
Number of employees 2.
Okay.
This is 3,000 shares. This is 2. Vesting period 5 years. Exercise period 1 year. What is the expense every year? 36,000 for a period of? For a continuous period of 5 years.
5 years to 5 years to 180, 36,000.
This will be 30 multiplied by 3,000 multiplied by. This will be 1,89,000 divided by. This will be 36,000 per annum for a period of 5 years. मैंने कहा हम जो काउंटिंग करेंगे आज के रेट के अकॉर्डिंग करेंगे. हम जो काउंटिंग कर रहे हैं, हमने बढ़ भी गया. मैं तो मार्केट से नहीं खरीद रहा ना, मैं तो नए शेयर्स इशू कर रहा हूं, तो मैंने अपनी कॉस्ट फिक्स कर ली, जो आज का रेट है उस पर मैंने बुक कर ली. So what we are trying to say is, today company will buy from market. Today company will buy from market and will return to employee during exercise period. तो मैंने आज 121 का खरीदा, एम्प्लॉय से 3 साल बाद 100 रुपए ले लिए. So my total cost is 21 rupee per share. Shall I start now? Now please answer. Question number 1. What are the drawbacks of ESOPs? Then question number 2, what is the objective of share-based compensation? Alignment of employees' interests with those of management, incorrect. Alignment of management interests with, answer will be question number 3.
B.
Skip question number 4. I think question number 4 is incorrect. Okay. Skip question number 4. Question number 5. Okay, let me help you. When company has given the option in which year? So grant date is 2021. I'm only concerned with fair value as on 21. What is the fair value of 21? 20.86. How many shares in totality are going to issue? In how many years? So what is your total cost? 18,000 multiplied by 20.86. This is 3,75,480 in 3 years. What is the cost per period?
Option A.
So in 2021, we will book a cost of 125. In 22, we will book a cost of 125. In 23, we will book a cost of 120. Question number 6. So total expenses given. This expense belongs to 3.2 years. So 22, 23, 24. How much you will book in 25? So at the end of 21, we calculated total expense to be 6,30,000. This amount we are going to book in 3.2. How much amount you will book in 2025? Now let me start. So what is total expense? 630. How much period? What is
39 million.
What is the expense per period? 186.875. So how much you will book in 22? 196.875. How much in 23? 196.875. How much in 24? 196.875. Totality 630. How much you will book in 25? This is going to be 39.375. So alternatively, what we can do, this is per year. For this to be only for 0.2. Answer will be? Answer will be A. What is the expense for 2022, 23, 24? What is the expense for 2023, 22, 23, 24? 197. What is the expense for 25? What is the expense for 25? 30. Now, Again, I want to repeat one point. Price that you are paying. 100. Current market price is 121. What is the fair value? Fair value is 21. That means cost to the company is 21 rupee per share. What is the total cost? Multiply by 15, multiply by 600. To be divided amongst vesting period. So cost will be booked during vesting period, not during exercise period. ठीक है. लिखेंगे last one example. Vesting period 3.7 years. Vesting period 3.7 years. Fair value of stock options. Fair value of stock grant 21. Number of grant 10,000. Calculate expense for each of the period.
What is the stock option price?
Fair value is 21, 10,000 in 3.7 years. So expense for year 1 will be 56,000. Second year, same amount. Third year, same amount. What will be amount for fourth year? $39,729. Please verify the answers. Am I clear with this? एक बार फटाफट करते हैं फिर से. What will be answer to question number 1? Answer to question number 1? C. Answer to question number 2? A. Then answer to question number 3? B. Fourth, I think there is some problem in fourth, so ignore that. What is the fair value as on the date of grant? Fair value 20.86. Employees have period for 3 years, vesting period 18,000. 18,000 multiplied by 20.86 divided by 3. And this you have to find out the value for 0.2. So we divided by 3.2. Whatever expense you calculated for 3 years, subtract that from 630. You will arrive at 13. Clear है? चलिए. Now I'm not proceeding further. Now defined contribution. Then we have defined benefit. Okay. For defined contribution, accounting entry is very simple. Whatever the amount employer has to pay, whatever the amount employer has to pay, he deposit this amount with government. Whatever defined contribution, whatever the amount employer has to pay, he deposit this amount with government. Amount deposited will be shown as pension expense, or will be shown as pension expense under employee cost, And third is no asset liability recorded. No asset liability recorded. And employee, important line, employee assumes reinvestment risk. So now, what is the first point? Whatever the amount employer has to pay, he deposited this amount with the government. Amount deposited will be shown as pension expense under employee cost. No asset liability recorded. Employee assumes the reinvestment risk. Now, let me take one example, very simple example. Let us assume that you're working with HDFC Bank or you're working with TCS. Now, my point is, in your pay scale, in your pay slip, there is one item by the name Provident Fund, PF. Now, let us assume this amount is 8,000 rupee per month. So, for example, if your salary is 1 lakh, what your employer will do, he will not transfer this 1 lakh entirely to your account. 8,000 is PF. Remaining 92,000, he will transfer to your account, but that is also subject to some income tax. TDS will be deducted. Now, my focus is not on the TDS, my focus is on PF. So he will deduct this PF and he deposit with the government regulators. Now, my point is, why government says need not to transfer 1 lakh to employee, pay a portion of that and one portion of that to be deposited with government. Why there's a regulation for that? Why there's a need for this? Now, my point is, you're going to work for, let us assume, till you attain the age of 60, but you're going to die at the age of 80, let us assume. Now, in this 20 years, you have some expenses, but you don't have any income. So that government want, you should not be dependent upon somebody, because of which government does not transfer the entire amount to your account. One portion is deposited with the government. Now, my point is, sir, currently I'm 22 years old. When I will be able to withdraw this amount, you're not allowed to withdraw this amount till the time you retire from your job. That means, what I'm trying to say, if today your age is 22, your employer has deducted 8,000. That depends upon your level of income also. Now, as you keep on growing till you attain the age of 60, this amount will keep on getting accumulated with the government. And once you retire, government will pay you this amount. Now, my point is, today you deposited 8,000. This is your amount that employer has deposited. You will get this amount after 40 years. Will you demand 8,000, more than this, less than this? Government will pay interest on this also. Currently, interest is somewhere close to 8.5% per annum. Now, my point is, if tomorrow government increase the interest rate, reduce the interest rate, this is a risk belonging to employee only. Same wise, tomorrow, let us assume you leave this company, you join somebody else's company. Will you ask this amount? Will you ask this amount from TCS? No. Go to the government authorities. So you have one UAN number. This is linked with your employer. You have nothing to do with employer. You have to go to the PF authorities and you have to withdraw the amount. That means my obligation was to deposit one amount. I have deposited that amount. Need not to record any asset, need not to record any liability. If tomorrow interest rate increase, decrease, this is beyond my scope. This will be risk of employee. Accounting treatment is very simple. My obligation was to deposit 8,000. I have deposited it. So one time cash will be reduced by 8,000. P&L expense will be booked 8,000. Accounting treatment is very simple. Who assumes the risk? Who assumes the reinvestment risk? That means if tomorrow interest rate increase or decrease, this will be a gain or loss to. This will be gain and loss to employee. Employer has no role in this. Am I clear with defined contribution plans? Am I clear with defined contribution plan? Okay. Now I'm coming to defined benefit plan. Defined benefit plan. Now just focus on the screen. Now my point is, all of us want to have, earlier we want to have government jobs. What is the benefit with government jobs which is not with private jobs? Pensions. Now what is the meaning of pension? What is the meaning of pension? Once you retired from the job, you're going to get one amount with certainty till the time of your. Once you retire, till the time of your death. This is known as pension. Correct? Huh? Even wives gets. ठीक है, अभी ले लेते till the time of your death. Now my point is, this is known as defined benefit plan. Now what is the meaning of defined benefit? Employer has promised that I will pay X amount from retirement till date, till your death. Now my point is your death certain, uncertain? Uncertain. This X amount will be, for example, 2% of last drawn salary. Certain, uncertain? Certain, uncertain? Uncertain. It will only be paid to those employees who will retire from my organization. Certain, uncertain? Uncertain. That means employer has promised that I'm going to give you 2% of last drawn salary, but this is based upon lot many assumptions. First assumption is, what will be your last drawn salary? When you will be 60, what will be your salary? Second is, how much you're going to live for? If you're going to live for 80, I'm going to pay you for 20 years. If you're going to live for 90, I'm going to pay you for 30 years. If you're going to live for 100, I'm going to pay you for 40 years. And third assumption is, whether you will be working till the time of 60 years or not. This is one more assumption. Now my point is very simple. When you're going to record the expense, during this period, when employee is working, or during this period, when you're actually paying the amount, but employee is retired. Post-retirement, pre-retirement. Because employee has worked pre-retirement, expenses to be booked pre-retirement. But my point is, are you paying them in cash? Are you paying them in cash? No. So what will happen? You will keep on booking one expense. But since you're not paying this, your liability will keep on increasing. And this liability will keep on reducing. Post this period, liability will reduce and cash will reduce. Am I clear with this? Now my point is, this amount you have to pay after 40 years. Today you are saying to an employee, I will pay you 500, 500, 500. Now my point is there probability that here employer will default on the payment? Could be possible. Now what government says, you have to deposit this amount with me. So you have to deposit this amount, you have to invest this amount, so that once employees retire, you are able to honor the obligation. Now my point is, one will be liability. To honor that liability, you have to invest into plan asset. Now, accounting treatments are slightly more difficult, which you are going to cover in level 2. But who perform all these calculations? The students who are pursuing actuarial science. So it is a job of actuarial to help us with the calculations. So let me show you one annual report. See here, annual report. Now, in this annual report, simply you have to type actuarial. Now, we are going to learn this, but we are going to cover all this. But who perform these calculations? So this is by actuarial ones. Okay, now right. Now right. So have you noted all the 4 points? Now right. Here, employer promised. Here, employer promised Here employer promise to pay 2%. Here employer promise to pay 2% of last drawn salary. Last drawn salary at the time of retirement. At the time of retirement, multiply by number of years employee serve the organization. Here employer promise to pay 2% of last drawn salary at the time of retirement, multiply by number of years employees serve the organization from the date of retirement till the time of death. Now employee is working. Prior to retirement. He will receive the amount post retirement. Company should book the expense. Pre-retirement, post-retirement. Company should book the expense during pre-retirement phase. As this liability is not paid, as this amount is not paid, it will be shown as liability. Every year. Amount of liability will increase every year till retirement. And post that liabilities to be settled. Am I clear till this point? Now, let us understand. Need not to write anything. So let us assume TCS has only one employee. That is Vikas. Vikas currently is 22 years old. Now TCS anticipate. Take an assumption that Vikas will continue to work for till he attains the age of 60. And Vikas will die at the age of 74. These all are assumptions. My current salary is 100. This will keep on growing at a rate of 10% per annum. Suppose here the salary will be 25,000. Now how much amount I will receive? 2% of this every year. Okay, now right. Components of expenses. IFRS, US GAAP. Number 1, current service cost. Number 2, interest expense. Number 3, interest income. Whether it is IFRS, US GAAP, it is a part of P&L. Fourth, change in gain and loss on account of change in actuarial assumptions, OCI. And last one is past service cost. This is P&L. This is OCI. Shall I start? Okay. Now my point is, whatever he has worked, whatever the amount belongs to this period, for example, from 22 to 23, this amount is known as current service cost. Now, how to compute that amount? This we are going to cover in level 2. This is a part of P&L, both under IFRS, US GAAP. Same wise, from 23 to 24, again there will be whatever he is working here, whatever the amount for this is known as current service cost. But now think logically. Suppose in 23 amount due is 100. In 24 again the amount is 100. Let us assume 100. But now, since this liability is not paid in 23, you will keep on increasing the liability on account of interest. ये interest भी किसका part है? Interest भी part P&L का. Again, I want to repeat. Employee is working currently till the date of retirement. If he's working today, expenses to be booked. The name of the expense is current service cost. This amount should be paid. This amount is not paid. Now it is carried forward to the next year. Employee will want something extra. That extra is on account of interest expense. Interest expense is also a part of P&L. अभी तक clear है? First one is current service cost, part of P&L. Interest expense, part of P&L. Now my point is, what government says, could be possible that once employee retired, you can dishonor the payment. To avoid the risk, today you need to invest. On investment, what you will earn? Interest income. It is a part of P&L. Now my point is, ध्यान से, current service cost, part of P&L. Interest cost, part of P&L. Plus whatever the investment we have made, that is going to be, on that we are going to earn interest income. Now what I'm trying to say, let us assume that your pension benefit obligation is, at the end of 60 years, is 10,000. This is the total amount that you have to pay at the end of 60 years. But we will discount this amount. PV of this liability is 7,000 or 2,000. Now to ensure that you are in a position to pay this amount, you have to invest this amount in some assets. So this is known as plan asset. Let us assume 1,500. On this investment, what you will earn? On this, you will earn some interest income. Interest income is a part of P&L. Now my point is, what is your liability? 2,000. How much you invested into the assets? 1,500. Now my point is it overfunded, underfunded? Liability is 2,000. Asset is 1,500. Now in the books, we will show net PV of PBO. How much? This is going to be 5,000 or 500. Now what this 500 is signifying? It is underfunded by 500. Same wise, if this amount is 3,000, underfunded, overfunded? Overfunded. Now we will show net plan asset of 1,000. That means मैं कहना क्या चाह रहा हूँ, जितना अमाउंट आज आप बुक कर रहे हो, उसका कॉरेस्पॉन्डिंग अमाउंट आपको क्या करना पड़ेगा? आपको इन्वेस्ट भी करते रहना है. तो कंपनीज क्या बना लेती हैं? कंपनीज ट्रस्ट बना लेती हैं, जिसकी मदद से ये ट्रस्ट क्या करेगी, जब आप कल रिटायर्ड होगे तो ये पैसे को पे करेगी. Now, whatever you're earning on the trust, this will be income. It is a part of P&L. How much component you have worked, that is a part of P&L. And since this amount is not paid, next year you have to pay interest also. So there are going to be 3 components. Whatever you have worked for this year, this will be known as current service cost. Since this amount is not paid today, in the future you want something extra, that is on account of interest expense. To ensure that you're going to pay off your liability, you need to invest some amount. Whatever you're earning on that, that will be known as. All three are a part of P&L. Now my point is, these amounts are based upon assumptions. Let us assume that earlier we think that on an average, Indians will die at the age of 70 years. So मैंने क्या assume करा होगा? At 60 you will retire. I'm going to pay this amount till 70. But now because of medical developments, now I want to change the life expectancy to 75. I want to change to 80. Is actuarial changing the assumptions? Is actuarial changing the assumptions? Will it change the amount of expense also? Now this is known as change in amount on account of change in actuarial assumptions. Now this will not be a part of P&L. This will be a part of other comprehensive income. मैंने कहा था other comprehensive income में 2 चीजें आती हैं. One was unrealized gain and losses on available for sale security. एक और point लिखवाया था pension obligation. Now what is the meaning of that pension obligations? If there any change in actuarial assumptions, that will not be a part of P&L. That will be a part of OCI. Now ध्यान से देखना. Other comprehensive income. Now any change in assumptions, this will be a part of OCI. This will not be a part of P&L. Now my point is, earlier you were expecting that I'm going to pay this amount for 70 years. Now you're anticipating I'm going to pay this amount for 75 years. Will it increase the expense, reduce the expense? Increase the expense. Earlier you were thinking that salary will grow at a rate of 7%. Now you're thinking salary will grow at 3%. Increase the expense, reduce the expense? Reduce. Now whatever the changes you're anticipating, that will not be routed through P&L, that will be routed through OCI. ये calculations आपके beyond scope है. ये सारी calculations कौन करके देगा? Actuarial वाले बंदे आपको ये करके दे देंगे. Now my point is, I'm left with more component. Company ने कहा था, I'm going to pay you how much? 2%. Now company wants to say, I want to pay you 2.5%. Can company say so? Earlier company was saying, I will pay you 2. Now company is saying, I want to pay you 5%. Can company say so? Will employee restrict to this? Halla gulla karenge? No. Now my point is, till now, whatever the accounting is done, that is at a rate of 2%. Now we want 5%. We have to change historical period also. This is known as past service cost. Now past service cost is recorded at 2. It should be recorded at 5. Now incremental 3. This is past service cost. As per IFRS, it is a part of P&L. As per US GAAP, it is a part of OCI. So again, I want to repeat. What is the meaning of defined benefit? Here, employer assumes reinvestment risk. That means he has promised you one amount to invest that is the responsibility of employer. Now, you have to work till retirement. He will pay you X amount till death. Certain, uncertain. If uncertain, you have to assume some assumptions. Who will make the assumptions? Actuarial. Now, you're working during the retirement phase. You are working prior to retirement. You will getting the amount post-retirement. Expenses to be booked. Pre-retirement. जितना काम इस साल में करा है, that expense is known as current service cost. Now, this current service cost of 23 is not paid in 23. In 24, current service cost, there will be one more item by the name interest expenses. They are a part of P&L. To ensure that you have the sufficient amount to pay here, you have to invest into plan asset. On that, you're going to earn interest income. It is a part of P&L. Now my point is, if actually change the assumption from X to Y, It is a part of OCI. Then past service cost under IFRS, it is a part of P&L. Under US GAAP, it is a part of it's part of OCI. Now again, there are two words. One is define contribution. Who assumes the risk? Employee. Whatever the risk is, that is employee. Employer will not record any asset, any liability. Define benefit. Here, employer has promised you an amount. Who assumes the risk? Employer. Amount is not paid today. He will book a liability by the name PV of pension benefit obligation. Then he will have asset also. Investment on plan asset. If investment is more, then we will show net plan asset. If liability is more, then we are going to show net PV of PBO. What is the meaning of this? Whatever the amount we have to pay at 60, what is the discounted value of that? Why we are taking a discounted value? Over the period, we will keep on increasing it by interest. So whatever the interest is, that we are going to book over the period. Okay? लिखेंगे IFRS, US GAAP. How many components? 5. Current service cost, part of interest expense, part of interest income, change in actuarial assumption. Now there's only change. Past service cost, IFRS, and this is going to be. Okay. So only theoretical questions will be there. Numerical are testable in level 2. Okay. Now, let me jump to my question bank. Please answer accordingly. Define benefit. At 31st December, pension obligation. PV of obligation is 10 million. Your asset is 9. Liability is more. Liability is more. A, B. तो मैंने क्या कहा था? We won't show separately. We will do the net adjustment. Net adjustment, it is overfunded, underfunded. Liability is 10, asset is 9. That means the chances that you may not be able to pay this. So it's a negative sign. It is underfunded by 1 million. Shall I proceed? Now, 15th. Give it a try. Total obligation at the time of retirement is 26. I'm least concerned with this. I'm more concerned with. So ये retirement पे value दे रखी है. At retirement value is 26. I'm least concerned with this. I'm more concerned with PV of this liability. आज के दिन उस liability की value कितनी है? What is the value of liability? What is the value of asset? So you will show a net asset of 300. Shall I proceed? 18th, US GAAP. Which of the following is shown as P&L? Which of the following will be shown in P&L? Actuarial gain, OCI, past service cost, OCI. 20. Which of the following will be shown in OCI?
Actually, wait for losses.
26th. Which will be shown in OCI? That is going to be actuarial gain and losses. Okay. So now let me show you once. So in level 2, there will be one chapter by the name employee compensation. So in this compensation, they have covered everything. So same things: current service cost, interest cost, past service cost, underfunded, overfunded. So this is going to be covered in level 2. So numericals are not there in level 1. That is going to be in level 2. Again, I want to repeat. In case of contribution, whatever the amount we have to contribute, we have contributed that. No asset liability, whatever the amount contributed, part of P&L. Then define benefit. We have promised amount that we are going to pay. This amount will be paid at the time of your retirement till the time of your death. This amount is paid because during this period you have served the organization. Expenses to be booked today. Current service cost. Amount not paid today, added on account of interest expense. To ensure that company is in a position to pay the liability, you have to make investment on plan asset. On that, you're going to earn interest income. Then any changes on account of change in actuarial assumption, part of OCI. Today, today company says I'm going to pay you 2%. Now we are going to say 2.5% because employer performed really well. Then all the adjustments we have done at 2. This year we are going to make some additional adjustment of 0.5. This is known as past service cost. Am I clear with this? No numerical is there as of now in level 1. Only you have to be comfortable with theory parts. Am I clear with this? So with this, we have covered this chapter. Now I'm going to start with one more. Now, please give a heading. Assume students, am I clear with this to all of you?
Sir, I wanted some clarification on the past service cost.
Okay, take 2 minutes and revise. Any doubt, please let me know. चलिए दीजिएगा heading. Learning module. Learning module. Financial reporting quality. Learning module. Learning module. Financial reporting quality. Okay, it's a simple theoretical chapter. I think there are 45 questions based upon these chapter also. Okay, so I try my level best to complete all in the class. Right, concept number A. Right, concept number A. Meaning of financial reporting. Financial reporting means accounts or annual report. Meaning of financial reporting quality. Financial reporting will be of good quality. Will be of good quality if it is prepared. If it is prepared in accordance with. If it is prepared in accordance with IFRS or US GAAP. So if you're talking about US company, it should be in accordance with US GAAP. If you're talking about other countries, it should be in accordance with IFRS. Then we will say that yes, financial reporting is of good quality. Point number 2. Financial reporting should be relevant and faithful. Financial reporting should be relevant and faithful. Relevance means Relevance means all material data. Relevance means ये कम कर देना. Relevance means all relevant data has been disclosed. Relevance means all relevant data has been disclosed. Faithful means complete, neutral, and free from error. Complete, neutral, and free from error. Now my point is, I want to name two companies. One company is known for governance. They disclose everything. They even disclose guidance also. Guidance means what will be the profitability next year. Why our margins has disclosed. They disclose everything to their shareholder. Now the name of the company is TCS. TCS will disclose each and everything. Now compare this company with Reliance Industries Limited. Now Reliance Limited, in case of Reliance Limited Industry, you will find that disclosures are very much limited. Now when financial reporting will be of good quality, when it complies with IFRS, this is one thing. Second, we want this to be faithful and relevant. All material data has been disclosed, plus it is free from any sort of errors. Now help me. Byju's financial statement, is it of good quality? Now there's a significant delay. There is a problem with the revenue recognition policy. That means it is not of good quality. So when it will be to good quality? When it complies with IFRS. Am I clear to this point? Go through this slide. चलिए अभी रेफर नहीं करना, ठीक है, लिखेंगे क्वालिटी ऑफ अर्निंग्स. Now my focus is on, earlier I was using financial reporting quality. Now I'm using the word quality of earnings. Earnings will be of good quality. Earnings will be of good quality if it satisfies following two conditions. Earnings will be of good quality if it satisfies following two conditions. Number one, there is sustainable earnings. There is sustainable earnings. Second, providing adequate return. Providing adequate return on amount invested. Providing adequate return on amount invested. Today you got a salary of job of 20,000. On the other hand, you win 2 crore by betting on Virat Kohli, which will give more satisfaction to your mom. 20,000 salary, 2 crore winning on Virat Kohli. क्या चीज आपको ज्यादा सेटिस्फेक्शन देगी टू योर मॉम? इन्वेस्टर्स मॉम. 20,000 salary. What is in 20,000 salary which is not there in 2 crore? Sustainability. Today, if you can win 2 crore, tomorrow you can lose 2 crore. Whereas in the job, you will keep on getting this 20,000. What is there in 20,000? That is sustainable earnings. Same wise, let us assume that you have done your IIT and you have done your MBA from Ahmedabad. You're getting 20,000 per month. Will your mom be happy? No, because what is not there? It is not providing you with adequate returns based upon your skill sets. So there should be two things. Number one, it should be adequate return based upon the amount that you have invested. Second is, it should be a sustainable earnings. If both the conditions are satisfied, then we say that yes, quality is of good earnings. Now, if I talk about Unilever, let me show you. Let me show you two earnings. One for metal companies like Tata Steel, JSW Steel. Let me show you that. Now, at times, students ask me why you don't invest into metal companies. So let me show you the problem. Metal companies are highly cyclical. Now, let me check profitability for Tata Steels. Now, in 19, what is the profit? 10,000 crore. Then profit is 1,500 crore. Then profit is 7,000 crore. Then profit is 40,000 crore. Then profit is 8,000 crore. Then profit is 1,600 crore. Is it highly volatile? Is it in accordance with IFRS? Is it in accordance with IFRS? Yes, it is in accordance. But is it sustainable earnings? Is it a good quality earnings? Answer is no, because earnings are highly volatile. Let me show you Hindustan Unilever Limited. Hindustan Unilever Limited. You won't find a single year where the profits has reduced. It is keep on increasing, but yes, the pace of growth is less. But is it continuously improvising? Even during the period of COVID 22, 21, profit has increased. So these earnings are known as sustainable. So you will find once you start investing into the market, highest multiple is given to FMCG sector because there is sustainability of earnings. No matter what happens in the economy, these companies' product sale will not be hampered. Tomorrow, if Sitharamanji increase the tax rate, reduce the tax rate, increase the interest rate, reduce the interest rate, the demand for these products will not increase or change significantly. These are known as defensive stocks. So here, the quality of earnings is very good. So again, I want to repeat, in case of in case of Tata Steel, is it in accordance with IFRS? Is it in accordance with IFRS? Yes. But earnings is not of good quality because it is not sustainable earning. It is a volatile earning. What is the best part with Unilever? It is in accordance with IFRS. Plus, it is a good quality earnings. Earnings are highly sustainable. Then which companies are market leader in FMCG? HUL, ITC. They are the market leader. If you talk about profitability of ITC is more. If you talk about market cap of Unilever is more. So these are the two market leaders in FMCG business. Shall I proceed further? Healthcare companies earns majority of their revenue from export of sales, from where they're getting significant competition from China. So healthcare will not be considered as defensive stock. Sun Pharma, Cipla, they don't earn from India, they earn from America. चलिए नेक्स्ट लिखेंगे LOSB. LSB, spectrum for evaluating quality. Spectrum for evaluating financial reporting quality. So this is best and this is worst. Okay, right, first one. Financial reporting in accordance with IFRS. Financial reporting in accordance with IFRS and quality of earning is good. This is the best required case. So this you will find in case of Unilever. Shall I proceed? Next is financial reporting in accordance with IFRS. Financial reporting in accordance with IFRS plus quality of earning is low. Example, Tata Steel. So this is not a case with Tata Steel, this is a case with all the metal companies. पहले में क्या था? Earning quality good, earning quality low. Third.
एडिक्वेट प्रॉफिट्स आप किसको बोलोगे सर? मतलब उसको एफएमसीजी से कंपेयर करके थोड़ी बोल सकते हैं.
एडुकेट का मतलब होता है जब आप मार्केट में इन्वेस्ट करते हो, निफ्टी इज गिवन अ रिटर्न ऑफ 15%, इफ यू गिविंग 15% रिटर्न टू द शेयरहोल्डर, दैट इज एडुकेट. ठीक है, नेक्स्ट राइट. Financial reporting in accordance with IFRS. Financial reporting in accordance with IFRS. Financial reporting in accordance with IFRS. Plus quality of earning is low. Plus quality of earning is low and biased. Within biased, company at times follow conservative accounting, or aggressive accounting. Company at times follow conservative accounting or aggressive accounting. So what is the meaning? Allow me some time. Next slide, fourth. Financial reporting in accordance with IFRS. Financial reporting in accordance with IFRS. Financial reporting in accordance with IFRS. But earnings are actively managed. But earnings are actively managed. So first word is good. Then it was low. Low plus biased. And last one is actively managed. Next, right, fifth one. Earning is not in accordance. Oh, the financial reporting not in accordance with IFRS. Not in accordance with IFRS. But numbers are based upon. Company's actual position. But numbers are based upon company's actual position. Last, financial reporting not in accordance with IFRS, and numbers are fictitious. And numbers are fictitious. And numbers are fictitious. पहले में फिफ्थ पॉइंट था अर्निंग्स नॉट इन अकॉर्डिंग फाइनेंशियल रिपोर्टिंग नॉट इन अकॉर्डेंस विद IFRS plus based upon company's actual position. Then company's financial reporting not in accordance with IFRS plus transactions are fictitious or fraudulent. Shall I start? Now, number one. My first point is what I want whenever I'm going to invest into any company. Financial reporting should be in accordance with IFRS plus quality of earnings to be good. Example, HUL. Correct. Then I want financial reporting to be in accordance with IFRS. Earning quality low. Example, Tata Steel. Then financial reporting in accordance with IFRS plus earning quality low and biased. Now, can you give me one example? So the example here will be HDFC. HDFC will be incorrect one. SBI will be the correct one. SBI, PNB, these banks. Now, my point is, what is the meaning of this? In banks, earnings are highly volatile. Let me show you that. In case of PNB Bank, earnings are highly volatile. Now, what is the loss in 19? 9,000 crore. Gain of 400 crore. 2,000 crore. 4,000 crore. 3,000 crore. 4,000 crore. Now, earnings are highly volatile. Now, if I go slightly back, in 18, what is the loss? 12,000 crore. Earnings in accordance with IFRS, number one. Then earning quality is low. Here it will be biased one. Now, what is the meaning of biased? At times during the period of elections, there's a pressure, these companies will show higher profits. So whatever the accounting will be, that accounting will be more or less going to be aggressive. There will be lower provisioning. So आप जो लोगों को लोन देते हो, ये आपके ऊपर है कि आपको कितना प्रोविजनिंग करना है. HDFC banks, they are on the conservative side. These banks are on the aggressive side. ये लोग क्या कर देते हैं, ये कम प्रोविजनिंग करते हैं to inflate the profits. So this will be a third spot. Now help me. If there will be lower provisioning means to whom we have given the loan, we are anticipating 100% of them will return the money. Profits will be higher. Now this is a biased accounting. Then we have, it is in accordance with IFRS, but earnings are managed. Now what is the meaning of managed earnings? Now my point is, right now all of us are filing the ITR. Now those who are from business houses, they never say to their chartered accountant what is the sale. They directly jump to the profit. Profit कितना दिखाना है? For example, 20 lakh. अब CA क्या करेगा? Will keep on putting the expenses so that sales minus expenses should be equal to 20 lakh. Ideally, it should be sales minus expense. Whatever the true profit are going to be, on that we are going to pay taxes. But now he is actively managed. His mindset is, I'm going to show profit of 20 lakh. अब मैं सारा तिगड़म करूंगा to get this answer. Same wise, balance sheet. Left hand side, right hand side should tally. अब आपका tally नहीं कर रहा, जो भी आपका tally नहीं कर रहा, उसको क्या कर देते हो? Balancing figure. Now this is known as actively managed. This is not a good earnings. Then we have, it is not in accordance with IFRS, but based upon true scenario. For example, any company is into liquidation. If you're into liquidation, then you're not allowed to follow accrual accounting. Then you have to follow cash accounting. But this is against IFRS. And last one is not in accordance with IFRS, but transactions are fictitious. For example, in case of Byju's. For example, in case of PC Jewelers, they were involved in money laundering. For example, in case of Snapdeal, there were no sales. For example, in case of Go Mechanic, they artificially boosted the sales. Now, this is an example of least quality where it is not in accordance with IFRS. Plus transactions are fictitious. So classic example will be Snapdeal. Classic example will be Go Mechanic, where they artificially, based upon fictitious bills, they will keep on showing the sales. So this is the last quality. So बड़ा simple याद करने का. In first four, what is there? In accordance with IFRS. Fifth, not in accordance with IFRS. Sixth, not in accordance with IFRS. Then earning quality, good. Earning quality, actively managed. Then it is based upon true. And last one is, it is nothing but fictitious and fraudulent transaction. This will be least quality one, and this will be the highest quality one. Now let me prove my point. At what multiple FMCG companies are available? Now, for example, Unilever, Hindustan Unilever Limited. What is the multiple? For 1 rupee earnings, investors are paying a price of 59. Let me name some other company also. Nestle. For 1 rupee earnings, investor paying a price of 85. Let me show you one more. Tata Consumer. For 1 rupee earnings, multiple is 63. But this is not the case with banks. HDFC Bank, market leader. For 1 rupee, P multiple of 25. Let me check the leader in this business, Bajaj Finance. For 1 rupee, multiple of 40. Let me check Kotak. For 1 rupee, profit of, P multiple of 22. Now, why for Unilever, Nestle, Dabur, you are paying 80? Because there is sustainability of earnings. So this is on the top one. And as we keep on reducing, investor will then pay lesser prices for those companies. Now help me, anybody willing to invest into Go Mechanic? Anybody willing to invest into Byju's? Answer is no. Where they will see a significant fall into their valuations. Valuations of Go Mechanic, I think, have fallen by more than 95% because the transactions were altered. Am I clear with this? Am I clear with this? So let me revise both the LOAs. We started with quality of financial reporting. It will be of good quality if it is in accordance with IFRS. It should have two basic characteristics. One is faithful, one is relevant. Relevant means all the relevant data you have disclosed. Faithful means it should be complete, free from any sort of errors. Then earnings will be of good quality if they have two characteristics. Number one, sustainable. Number two, it provides adequate return. Then we have spectrum. In totality, how many spectrums we have? In the first four cases, earnings are IFRS, not IFRS. This is based upon true, this is based upon quadrant or fictitious. Earning quality good, low plus, bias, and last one is actively. The next slide. Concept number C. Conservative versus aggressive accounting. Conservative versus aggressive accounting. Which one is good? Which one is good? Now, point to be noted: neither conservative nor aggressive. It should be neutral. Neutral means it should not be conservative. It should not be aggressive. आपने अभी कहा faithful. Faithful means complete, free from any sort of biasness. अभी तो आपने कहा लिखेंगे. Conservative. Conservative accounting means reporting lower sales or higher expenses. Conservative accounting means reporting lower sales or higher expenses. Aggressive accounting means reporting more sales and lower expenses. Conservative accounting will lead to reduction in profits. Aggressive accounting will lead to inflated profits. Shall I start? Now help me, अब लिखना नहीं है, please help me. What is the dispute between auditors and Byju's? What exactly the dispute is? Why the losses in FY20 increased substantially? What is the dispute between auditors and Byju's? नहीं. So the main problem is, number one is with revenue recognition. Now, what is the meaning of this revenue recognition? Now, what Byju's is saying, try to understand. Now, let us assume that they are selling one course by the name of Science for class 11 and class 12, for which they are charging 50,000. Correct? Now, they are going to provide service for 2 years. Byju's क्या कहता है? I want to book sales of 50,000. Sales 50,000, cash 50,000. What auditor is saying? You're going to provide service for how many years? 2 years. So revenue for first year is 25,000. Revenue for second year is 25,000. Now point is, which one is correct? Which one is correct? अभी हमने करा था कि whenever it is for a more than one year, then allocate the transaction price to the obligation. So if it is for 2 classes, so yes, it should be 25,000 for year 1, 25,000 for year 2. Now the point is, Byju's want to follow aggressive accounting. What will happen because of this aggressive accounting? The profits will inflate. लेकिन auditors wants to follow IFRS. If you follow IFRS, this will lead to reduction in profits. एक तो पहला ये dispute था. Then what is the second dispute? Second dispute is now, for example, I'm preparing the content for Wall Street. Now, definitely, I'm incurring some expense. I'm getting the salary from them also. Now, my point is, let us assume that I totality got 50 lakh rupees from Wall Street to develop the content. Now, my point is, every year, do you think that I need to redevelop the content? Yes or no? Every year, do I need to redevelop the content? Yes or no? कैसी बातें कर रहे हो? अभी जो आपको रिकॉर्डिंग दे रहे नहीं दे रहे नहीं दे रहे हैं. नई रिकॉर्डिंग है, पुरानी रिकॉर्डिंग है. नई रिकॉर्डिंग है, पुरानी देंगे तो आप लोगे नहीं लोगे? नहीं लेंगे. 2024 में there is a substantial change in syllabus. Do you think that it will again happen in 25 also? 26 also? So we have to keep on providing new recordings. That means this amount TWSS will pay me every year. If it is paying every year, अब बायजूस क्या कहता है? I want to capitalize this amount and I want to charge depreciation or amortization. लेकिन auditors ने क्या कहा? No, we won't be allowing to capitalize. We directly want to transfer this as expense. Again, auditors are conservative, whereas Byju's are aggressive. Now, Byju's कह रहा है इसका benefit आएगा 5 सालों में. So I want to book expense of 10 lakh. Whereas the auditors are saying, no, we won't allow you to capitalize this. You have to book entire expense into the P&L. This is again an example where Byju's is highly aggressive and auditors are highly conservative. Now, to be correct, whatever you are paying to anybody, you cannot say that this is for development. This comes under salary, and if it is salary, it should be transferred to P&L account. Am I clear? Now, when you will follow aggressive accounting, when there's a pressure from investors to inflate the earnings. When you will follow conservative, when already you have achieved the targets, or you want to reduce your tax liability. Correct? Now again, I want to say, let us assume that in totality, I have a sales of 50,000 and 10,000 is still receivable for my student. Now estimating bad debts, this is management. Now management says 10% assume that bad debt. One company says 50% assume that bad debt. Now this is the assumption of management. IFRS is silent. This is the assumption of management. Now whosoever is assuming 10%, he is aggressive. Whosoever is assuming 60% will be bad debt, that is going to be conservative. We should not be aggressive. We should not be conservative. We should be neutral from any sort of biasness. When we will be aggressive, when we want to inflate the earnings, there's a pressure from investors, like for Byju's. When we will be conservative, when we've already achieved the targets, or we want to reduce our tax liability. Am I clear with this? So, लिखेंगे. If in any particular year, company achieve the targets, company will try to follow conservative accounting. Same wise, if any particular year, company is unable to meet its target, company will follow aggressive accounting. Next, whatever management of Byju is recommending, whatever accounting treatment management of Byju's is recommending, it is an example of Aggressive accounting. Next slide. Concept number D. This is highly testable. Concept number D, motivation. Motivation for manager. Motivations for manager to issue low quality financial reports. Now, simple is why Byju's want to issue low quality financial reporting. Number one, pressure from investors. Number one, pressure from investors. Number one, pressure from investors. Number two, meeting the terms and conditions. Meeting the terms and conditions of loan. Meeting the terms and conditions of loan. Now, what is the meaning of this? At times when we borrow money, we say that our interest cover ratio will be 10x. That means if we have to pay 1 rupee as interest, our EBIT will be 10x. Now, let us assume that if your profit are not sufficient enough, your interest cover will not be 10x. If you're not meeting this condition, your banker will increase the interest rates. Or your banker will say, okay, repay my money back. So that means, what is the motivation? Because I'm not meeting the condition of bank, I may follow aggressive accounting. Now my point is, are they having any dispute with the banker also? Byju's currently are having any dispute with the lender also? जिन्होंने इसको कुछ पैसा दिया है 1.2 बिलियन के, उसका भी कोई डिफॉल्ट चल रहा है क्या? Where they sue each other in US court, जहाँ पे Byju's ने कहा I'm not going to pay money, कुछ ऐसा चल रहा है क्या? Yes. Write the third one. Write the third one. Career consideration. Career consideration. Now, if profit will not be there, high probability is that this company's valuation will turn out to be 0. So who will be the biggest loser? Who will be the biggest loser? Ravinder Byju. Fourth, increase their compensation. Increase their compensation. Now, value of Byju's was $4 billion and last valuation was $22 billion. Against the biggest beneficiary is, who is the biggest beneficiary? That is again Ravinder Byju. Last one is improving perception among customers and suppliers. Now my point is, whosoever is working in Byju's, they have a fear of layoff now. They have a fear of layoff, negative sentiments. Now let us assume that you want to buy one course for GMAT. Will you still prefer to buy from Byju's? No. It's a negative perception among suppliers as well as customers. Now, supplier here you can treat employees. There's a fear that we may be laid off by our company. Customers, you won't be willing to buy the product by GMAT, the product of Byju's because of all this what is happening in the market. Now, again, what are the motivations? Why Ravinder Byju's is trying its level best to inflate the earnings? Number one, career consideration. Number two, pressure from investors. Number three, to improve the perceptions among customers and suppliers. Then we have meeting the conditions of debt. And last one is to improve their own personal compensation. These are the motivations. Next slide. Conditions that are present. Conditions that are present because of which manager issues low quality financial report. Motivations, opportunity, rationalization. motivations, opportunity, rationalization. अपॉर्चुनिटी में 3 बुलेट पॉइंट डाल दीजिएगा एज इट इज. और यहां पे लिखेंगे रैशनलाइजेशन में कंफर्मेशन बायस. चलिए स्टार्ट. चलिए स्टार्ट. Okay. Now, what are the motivations? How many motivations we have covered?
5.
There are 5 motivations because of a manager wants to issue low quality report. Then we have 3 opportunities. Now, what are the 3 opportunities? Number 1, weak internal control. Now, my point is, there's one scam happened with PNB, Nirav Modi scam. There is one scam of Bhushan Steel. Again happens with PNB. Why PNB? Why not Kotak? Why PNB? Why not HDFC? If you go to any PNB bank, can they say that, sir, it's a lunch time, I cannot offer you the service? PNB bank ऐसा बोल देते हैं क्या? HDFC bank, can anybody say that it's a lunch time, we will not offer you? Why? Because of weak internal control. If there will be weak internal control in the systems, then yes, managers may be in a position to inflate the earnings. Weak internal control. Now my point is, whatever happened with ICICI Bank also, they have given loan to Videocon. Videocon eventually defaulted on the loan. In Videocon, Chanda Kocher, husband was the promoter. His husband was the promoter. Now my point is, they defaulted on the loan. This loss belongs to shareholder of the company, correct? Now my point is, why Chanda Kocher is in a position to give such a massive loan to the Videocon? Again, an example of weak internal control has given the opportunity. Same wise, weak internal control could be reasons because of which you can inflate the earnings. Now my point is, in the company, financial statements are prepared by management. Then board of directors should review the financial statements. Then auditor finally conclude whether it is giving true and fair view or not. Now within companies, there's an audit committee. Audit committee का मतलब क्या होता है? They should communicate with the auditor. Now it should comprise of executive directors or independent directors. So there are 2 directors. One is executive, one is independent. Now I want to name Mukesh Ambani. Mukesh Ambani is an executive director. Some ex-IAS officer in Reliance who is having no equity share of the company, he will be known as independent director. Now think logically, audit committee should comprise of executive director or should comprise only of independent directors? Audit committee should have only independent directors. अगर audit committee में अधिकतर executive लोग हैं, then high probability is they're going to mislead or they're going to inflate the earnings. So why? What are the opportunities? Number 1, there is weak internal control. Number 2, board of director comprise mainly of executive directors instead of independent director. Now let me show you. Let me go to TCS audit committee. Before that, TCS CEO. So this person is currently the CEO of the company. Now, if I go to Tata TCS audit committee, now in this audit committee, whosoever is the chairman, executive, non-executive, इस पूरी कमेटी में कितने डिपेंडेंट, कितने एग्जीक्यूटिव डायरेक्टर्स हैं? कितने एग्जीक्यूटिव डायरेक्टर्स हैं? एक भी नहीं. Audit committee should comprise of independent directors. बायजूस के केस में भी क्या थे? जितने भी इंडिपेंडेंट डायरेक्टर्स उन्होंने क्या कर दिया? उन्होंने रिजाइन कर दिया. That means if audit committee comprise of executive directors, then high chances are that you have the power to mislead the earnings. Now, Ratan Tata is there in board of directors. Company CEO is there? No. It should only comprise of independent directors. अब ये लोग किससे बात करेंगे? ये लोग ऑडिटर से बात करेंगे और कंपनी के फाइनेंशियल स्टेटमेंट्स की ऑडिट करेंगे. So, what are the motivations? What are the opportunities? Number one, weak internal control. Number two, inadequate oversight by board of directors. What I'm trying to say is audit committee comprise of executive directors instead of independent directors. And last is wide range of accounting treatments available. Now, who decides the salvage value? Management. Who decides the life? Who decides the depreciation rate? Management. Who decides the bed rates? Estimated warranty expense. So because of these ranges, they have the opportunity to mislead the earnings. If you want to inflate the earnings, bed rates will be lower. If you want to reduce the earnings, bed rates will be higher. This is within the wide range of accounting principles. So these are providing the opportunity. Next slide, rationalization. Meaning of rationalization is looking for you have a belief and you want others to confirm that. You have a belief and you want others to confirm that. Okay. Now, the classic example is whenever my wives get ready for any party, she always asks me, मैं अच्छी लग रही हूँ क्या? क्वेश्चन क्या होना चाहिए था? नहीं, मैं अच्छी लग रही हूँ क्या? तो that means वो मेरे से क्या चाहती है? मैं क्या बोलता हूँ? हाँ, अच्छी लग रही हूँ. सर, मैं अच्छा पढ़ता हूँ ना? क्वेश्चन क्या होना चाहिए था? मैं कैसी लग रही हूँ? उसने सवाल क्या पूछा? मैं अच्छी लग रही हूँ. तो मैंने कहा हाँ, तुम अच्छी लग रही हो. खाना अच्छा बनाया ना? साली, ये तो तुमने पहले ही मेरे को आंसर दे दिया. That means you already have a belief and you want others to confirm that. Same wise, rationalization means now suppose there's one case where they book the revenue early. Now Byju's is taking the example of that and quoting that if happen in that case, we should also book the revenue early. This is known as rationalization. That means in any prior case it has happened. Now we want to confirm that view, because of which we are searching for supporting documents. This is known as rationalization. Now, managers can issue low quality on account of three factors. Number one, motivations. Number two, opportunities. Number three, rationalizations. Now, you have seen in the past, in some companies this happened. You are quoting that case. This will be an example of rationalization. Opportunity, there are three examples. Weak internal control, then weak board of directors, and then wide range of accounting treatment available. Motivations, we are going to have 5 motivations. Career considerations, pressure from the investors in order to meet the conditions of the loan, etc. So, ये highly testable है. Now, I'm not proceeding further. So, this chapter we are going to complete tomorrow. But before we end the session, let's revise once more time. We started with financial reporting quality. It will be a good quality if it is in accordance with. It should have 2 characteristics. One is relevant, another one is Faithful. Relevant means all the material facts has been disclosed. Faithful means it is free from any sort of biasness, neither aggressive nor conservative. Then earnings. Earnings will be of good quality if it meets two conditions. Earnings are, they are providing a adequate returns. Then we cover one spectrum. In spectrum, there are going to be how many points? 6 points. First one is the highest we want, then it is the worst one. For the first 4 points, 1 point is common. Financial reporting is accordance with IFRS. Then starting point is earning quality is good. Then it is low. Then it is low plus bias. Then it is actively managed. Then we say that earnings reporting is not in accordance with IFRS, but representing actual performance. Then we say that earnings is not in accordance with IFRS, plus it is faulted. So this is the worst required case. Then conservative. Conservative means we are booking more expense or we are reporting lower sales. Aggressive means we are reporting more sales, lower expenses. Then we covered motivations, 5 points you have to remember. Opportunities, 3 points you have to remember. Rationalization, only 1 point you have to. Okay. Tomorrow we are going to conclude this. Now, yesterday we covered concept number 1. It deals with quality of financial statements or financial reporting. It will be of good quality if it is in accordance with IFRS. Then earnings will be of good quality if two conditions are satisfied. What is the first condition? Earnings are sustainable. That means earnings are not volatile. Earnings are sustainable. Then what is the second point? It should provide adequate return. Then we say that financial statements should have two qualities. Number 1, it should be relevant. Number 2, it should be faithful representation. Now, what is the meaning of relevant? Relevant means all the data is disclosed. All the material data is disclosed to the investors. What is the meaning of faithful? It is complete and it is neutral and free from any sort of errors. That means we don't want companies to follow aggressive accounting. We don't want companies to follow conservative accounting. It should be complete. It should be free from errors. It should not contain any sort of errors, mistake, biasness. Then concept number B deals with the spectrum. Now, in totality spectrum, there are going to be 6 points. What is the first one? Financial reporting in accordance with IFRS. Second point, financial reporting in accordance with IFRS. Third also same. Fourth same. Fifth, financial reporting not in accordance with IFRS. Sixth, financial reporting not in accordance with IFRS. Now earnings are good. Earnings are low. Earnings are low and biased. Earnings are actively managed. Then it represents true scenario. And last one is transactions are fictitious. Then concept number C deals with motivation. Concept number C deals with conservative accounting, aggressive accounting. If accounting is aggressive, you are going to show more sales, less sales. Sales will be more, expenses will be, and you are trying to inflate the profits. When you try to inflate the profits, when current year profits are below the target that you have set, then what is the meaning of conservative accounting? Sales will be less, expenses will be so downward biased. Profits will be downward. Now, when you will follow this, when profits in the current year are above the target level, then we covered what are the motivations, opportunities, and rationalizations. Now, motivations. Now, first motivation is you want to meet the targets, whatever given to the investors. Meet the target. Then your personal compensation. Then to meet the terms and conditions of loan. These are the motivations. What are the opportunities? Weak internal control. Then we have inadequate board of directors. And last one is multiple accounting choices or accounting treatment. These are the opportunities. Then what is the rationalization? You have one view and you want to confirm that from other parties. It is also known as confirmation biasness. So this much we have covered till yesterday. Okay. Now I'm proceeding further. Now write concept number E. Concept number E. Mechanisms that help to discipline financial reporting quality. Mechanisms that help to discipline financial reporting quality. Now, how we can ensure that financial reporting is of good quality? Number one, through auditing, right? In India, there's a requirement. Financial statements prepared by management, the financial statements which are prepared by management, they need to be audited by auditor. However, auditor will not check 100% of the transactions. And he will only provide reasonable assurance. Whether financial statements free from error or not. So what I'm trying to say is, that auditor will not going to check 100% of the transactions. They will check majority of the transactions and they will say whether the financial statements are free from error or not. They won't say 100%. There's only a reasonable assurance. Second, regulators. Now in India, as per the regulations of SEBI, all the listed companies are required to prepare financial statements in accordance with IFRS. Now, my point is, if any company does not prepare in accordance with IFRS, do you think that SEBI will take the actions against that company? So answer is yes. So this is the requirement. Then third, whenever bank lends money to corporates, there is a condition. Whenever bank lends money to the company, there's a condition. Financial statements to be in accordance with IFRS. Okay. Now what I'm trying to say is how we can improvise the quality. Number one, there should be a proper regulation in your country. there should be requirement for auditing in your country, and by having some private contracts. Now, whosoever will be the lender, either in the form of loan or private investment. Now, for example, there's one company by the name Byju's, or there's one company by the name Paytm. Their biggest investor is SoftBank. Now, my point is, do you think that SoftBank will say that to Paytm, I will give you fund only when financial statements are in accordance with IFRS? Answer is yes. So what are the factors that promote the quality? Number one, there should be regulation in your country. There should be requirement for auditing. And third one is there's going to be private contract, which will promote the use of IFRS. Okay. Then next slide. Presentation of non-GAAP measures. Presentation of non-GAAP measures. Presentation of non-GAAP measures. Now, right. Point number one. Companies are required to prepare their financial statements. Companies are required to prepare their financial statements in accordance with IFRS. For example, Byju's received 500 rupees from a student. 500 rupees from a student for 2 years. For example, Byju's received 500 rupees from a student for 2 years. As per IFRS, revenue to be booked for year 1 will be 250. Revenue to be booked at the end of year 1 will be 250, and remaining 250 to be booked next year. Now at times, to influence the opinion of analyst. Companies may prepare financial statements not in accordance with IFRS. Within bracket, non-GAAP measures. Not in accordance with IFRS, within bracket, non-GAAP measures. That is, now Byju's will prepare two profit and loss account. One in accordance with IFRS, where sales will be 250, and other in accordance with management opinion, with sales of 500. तो मैं क्या कह रहा हूं, आपको IFRS वाला देना ही होता है. At times कंपनी नॉन गैप मेजर्स भी दे देती है. Now if there's non-GAAP measures shown by the company, there's a red flag that something bad is going in the company. They're trying to influence the opinion of analyst. Now analyst is independent person. Ideally, you should give them only one set of financial statements, but at times to influence your opinion, we also give non-GAAP measures. Now, right, next. If company is showing profit as per non-GAAP very oftenly, there's a red flag. There is a red flag. Some problem is within the company. So why they're giving you the non-GAAP measures? To influence your opinion. That means something bad is going in the company. Okay. The next slide, there's a requirement under IFRS. There is requirement under IFRS. There is requirement under IFRS and US GAAP. And US GAAP to discuss the difference, in opinion, of management and accounting standards. And reconcile non-GAAP financials with GAAP financials. Okay, now what I'm trying to say? Now what Byju's will do now? Non-GAAP. Byju's will say in the balance sheet, I will receive a cash of 500. Sales will be 500, assuming no expenses, no taxes. Profit will be, so equity will be reserves and surplus 500. Balance sheet, this is non-GAAP. Now you're reporting entire revenue in 1 year. Now you have to give the justification why you're booking in 1 year. Okay. Then you have to also present what GAAP says. Now if I prepare in accordance with GAAPs, cash 500, sales 250. Now my point is EAT 250, equity 250. And now you're going to report one liability by the name unearned revenue. How much? This is going to be 250. Now what will happen next year? This liability will become, and again you will book a sales of 250. Again equity will become 500 at the end of second year as per GAAP. As per non-GAAP, it becomes equity at the end of year 1. So please bana लीजिए. दोनों में डिफरेंस क्या है?
सर मतलब इंडियस फॉलो करता है IFRS को, बट वो कंप्लीटली IFRS को नहीं.
अमेरिका में गाड़ी किस पे रुकती है? रेड लाइट पे रुकती है. अमेरिका में गाड़ी रेड लाइट पे रुकती है और ग्रीन पे चलती है. तो इंडिया में भी आई थिंक अमेरिकन ही रेड लाइट ही होंगी फिर. इंडिया में कोई भी लॉ बनाने से पहले क्या करते हैं? किसी दूसरी कंट्री में है लॉ, है तो साला बना दो, और नहीं है तो जब दूसरी कंट्री में लॉ नहीं है तो हमें बनाने की क्या रिक्वायरमेंट है? लाइफ सिंपल है, उसको पता नहीं अननेसेसरली कॉम्प्लिकेट. अपना नाम देना है बस. ऐसे तो एमआई के फोन पे भी लिखवाता है मेड इन इंडिया. Any difference between Ind AS and IFRS? सिर्फ नाम बस Ind AS क्या बताता है? स्टैंडर्ड्स किसने बनाया? इंडिया ने, बस. That's it. There's no difference between Ind AS and IFRS. सही बोल रहा हूँ सी वाले बच्चे? सही बोल रहा हूँ? चलिए नेक्स्ट राइट. कंसेप्ट नंबर जी. Concept number G. Manners or ways to manipulate earnings. Ways. Concept number G. Ways to manipulate. Ways to manipulate earnings. First one. Revenue recognition choices. Revenue recognition choices. Revenue recognition choices. ठीक है, तीनों एज इट इज लिख लीजिए. Shipping terms, FOB, shipping point versus FOB destination, estimated shipments, channel stuffing, then bill and hold transactions. Shall I start? Shall I start? Okay. Now my point is, let us assume that 11 months has been passed and company at the starting of this year set a target of sales of 1200 crore. But in 11 months, company has only achieved 900 crore. So do you think that in the next 1 month, company is able to achieve the targets they have set for this financial year? Do you think that? No. Now what company will start doing? Now company will start to manage the earnings. Manage the earnings means now they try their level best to achieve this number by some wrong ways. Now one wrong way to inflate revenue is bill and hold transaction. Bill and hold transaction. Now what is the meaning of this? Let us assume that there is one company by the name JK Tire, and JK Tire supplies the goods to Maruti Suzuki. Now my sales, there's a shortfall of 300 crore as per the targets. Now what I will do, I will charge an invoice sales 300 crore to Maruti Suzuki. I'm only generating one invoice that I have sold the goods. Practically the goods are lying in my godown. I've just raised one invoice in the name of Maruti Suzuki, sales 300 crore. Okay. Now what will happen? The moment this financial year will be over, the moment this financial year is over now what will happen? On 2nd of April, we show in the books a return of sales, return 300 crore. Now my point is, am I in a position to manipulate the earnings? Again, goods are lying in my godown. I simply raised one bill by the name sales to Maruti Suzuki 300 crores. Now we are standing on, let us assume on 30th March. Then again we pass one more entry on 2nd of April. There's a sales return from Maruti Suzuki. So again, the sales for this financial year will reduce by 300. But my point is, am I in a position to manipulate the earnings for this financial year? Yes. Now how, as an analyst, we can find this? Now, if sales increase significantly, money has not received. What will increase now? You have not received the money, but if debtor increased significantly, debtor days increased significantly, there's a probability that there is some fictitious sales. Or inventory will reduce. Inventory will reduce significantly. Then again, there's a red flag that yes, there's a probability that company has involved in some manipulative practices. And last one is the growth for fourth quarter will not be in line with previous quarters. Again, there are the chances that there's a manipulative earnings. Again, I want to repeat, you are not able to meet the sales target. You involved in bill and hold transaction where you raised a bill to Maruti Suzuki. You have not sent any sort of goods. Now, once the financial year is over, you will reverse the entry by showing a sales return. Now, how as an analyst you are going to find it out? Your debtor days will increase. Debtor days will increase significantly. Inventory days will reduce significantly. And growth for the fourth quarter will not be in line with previous quarter. In this way, we try to find it out. Now, write an example for bill and hold. Suppose we are standing on 30th March 2023. Suppose we are standing on 30th March 2023. JK Tyre will issue an invoice. JK Tyre will issue an invoice in favor of Maruti Suzuki. On 2nd April 2023, on 2nd April 2023, JK will record sales return from Maruti. JK will record sales return from Maruti. In this manner, company inflated the returns. Company inflated the revenue for FY23. Company inflated the revenue for FY23. As an analyst, we can detect this by following ways. Number one, debtor days will increase significantly. Debtor days will increase significantly. Inventory days will reduce significantly. Okay. Third, revenue for fourth quarter will not be in line with previous quarters. Revenue growth for fourth quarter will not be in line with previous quarter. And last one is, in the next period, sales return will increase significantly. So these are the red flags that you have to identify, that you have to detect. In next period, sales return will increase significantly. Am I clear with this? Then there's one more example by the name channel stuffing. Now, what is the meaning of channel stuffing? Let us assume there's one company by the name Bajaj Auto. They have number of dealerships. Again, they're unable to meet their targets. Now, what they will do on 30th March, they will start sending the bikes to multiple dealers and they will book the transactions. This is known as channel stuffing. Now, what is the meaning of channel stuffing? Bajaj Auto will send the bikes to authorized dealers and they will book a sales. In this way, they try to inflate the revenues. This is the meaning of channel stuffing. Then we have shipping terms. Now, my point is, let us assume there is one person who is involved in export of goods. So let us assume there's one person who is exporting rice to Pakistan. Now there's one person, Ram, and there's one person, Muhammad. Now my point is, what Ram do? The moment he sent the goods. Now my point is, when sales to be booked? Sales to be booked when goods reached Pakistan, or sales to be booked when he dispatches the goods from India? When dispatched or when reached? अब ध्यान से, to be on a conservative side, till the time goods have not received, we are not allowed to book the revenue. But again, accounting standards are silent on this. It is as per the discretion of the company. Now my point is, if you're booking the revenue once it is reaching Pakistan, till now this was the policy, but now to inflate the earnings, what you will do? I'm changing the policy from FOB destination to FOB shipping point. Now my point is, now you're starting to book revenue here. Will you try to inflate the earnings? Answer is yes. Now IFRS is silent on this. This is the discretion of the company. Till now your policy was that I will book the revenue once it reached Pakistan. Now you're booking the revenue once the goods has been dispatched. Now yes, you have to mention the revenue recognition policy. But if revenue recognition policy is changing too oftenly, again there's a red flag that something wrong is in the company. You have to disclose this, whether you're booking the revenue once it is reaching Pakistan or India. This you have to disclose in the accounting, in the notes to accounts. But my point is, IFRS allows both of them. Now my point is, if you're following this is known as conservative accounting. This is an example of aggressive accounting. Earlier it was conservative, now it is aggressive. That means there's some red flag that you're unable to meet the targets. I'm not saying this is correct or this is correct. But if you're changing between two policies very frequently, that means this year revenue was not in line with what you have targeted. Am I clear with 3 examples? What was the first one? अच्छा, बच्चा कह रहा है सेल्स रिटर्न तो फिर रिटर्न कम करेगा, रिटर्न सेल्स कम करेगा, कौन से साल की? अगले साल की। इस साल की तो बढ़ गई ना बेटा। चलिए हेल्प करेंगे। व्हाट वाज द फर्स्ट एग्जांपल? बिल एंड होल्ड। व्हाट वाज द सेकंड एग्जांपल? चैनल स्टफिंग। एंड लास्ट वन इज FOB. Earlier it was FOB destination, now it is FOB shipping point. Chances are that these are the red flags that something wrong is in the company. Am I clear with this?
So the second is what? Channel
stuffing. Channel stuffing means to the dealers you're sending more goods. For example, Bajaj Auto sending the scooters to their authorized dealers at year end. This is known as channel stuffing.
Okay, sir.
The next slide. This was with respect to revenue. Next, related party transactions. Related party transactions. Now let me give you my own example. So on 30th March, I calculated my profit for this year, and this year profits were high with respect to the historical periods. Now I try to manage the earnings. Why I try to manage my earnings? If I disclose this profit, let us assume this profit is 10 lakh. If I disclose this profit, then I have to pay tax on this. I try to manage my earnings. What I will do here now, I start paying rent to my father. I will pay salary to my wife. I will give gift to employees for their performance, and employee is my mother. Now my point is, these are the examples of that you're trying to manage the earnings. Now we don't want that there should be too much of related party transactions. If there are too much of related party transactions, again there's a red flag that something wrong is in the company. Same wise, let us assume that there's one JK Tire and Maruti Suzuki. Assume that they're related to each other. Maruti JK is unable to meet the sales target. Now they will start making sales to Maruti Suzuki. Now again, it's a related party transactions, assuming that they have the ownership. Now related party transactions too much, these are a red flag that yes, something bad in the company. Now right example. On 30th March, Vikas has a profit of 10 lakh. Slightly higher than historical average of 6 lakh. To manage the earnings, now he will report transactions with related party. Such as rent paid to father, salary paid to wife, gifts given to employee, and employee is his mother. Okay. The next line, capitalization of expenses. Example in case of Byju's. Whatever the amount they are spending on creating the content, Byju's wants to capitalize the amount. And accordingly will charge amortization over the period. This will inflate earnings for current year. Now auditor क्या कह रहे हैं? Auditor is saying whatever the amount you have charged, it is an expense, it should be transferred to your P&L account. Byju's is saying no, I want to capitalize this and I want to charge amortization. So in this way, they are trying to manage the earnings. Next slide. Estimations of reserves. Estimation of bad debts and warranty expense.
Sir, one doubt, sir.
Just give me a second.
Okay.
Estimation of bad debts and warranty expense. If profits are already above target level, to manage the earnings, company will show higher bad debts, lower bad debts. To manage the earnings, company will show higher bad debts. Example of conservative accounting. Next, if profits are below target level, company will show lower bad debts. Example of aggressive. Now, my point is it mentioned in any IFRS that how much bad debts you should charge? No, it is the discretion of management. Whatever bad debt you want to charge, whatever the amount you think that you're not going to receive, this is your discretion. So since we have the choices, there's a motivation. Since we have the choices, there's an opportunity that we're going to manage the earnings. And yes, company does manage the earnings by following these policies. Same way, think logically, they will change the life, they will change the salvage value. In this way, they can try to manipulate the earnings. Okay. But yes, you have to go through the disclosures very carefully. You have to read the annual report for this company as well as for the comparable companies as well as for the previous years. If there has been lot many change into the policies, there's a red flag that something company is trying to manage the earnings. If policy is not in line with the other competitors, again there's a red flag that company is trying to manage the earnings. Manage the earnings means either you want to increase the earnings or you want to reduce the earnings. We don't want company to increase to reduce. We want company to show a true picture. If company is not showing a true picture, that means they're trying to manage the earnings. Am I clear with this? Okay. Now, in H, we have covered all the points. Okay. We have covered all the points. And now I'm moving to my question bank. Okay. Take 2 minutes. Please revise everything. In totality, there are going to be 45 questions. Beta, please unmute kariye. There was a doubt now. Please unmute kariye.
Sir, when you gave the example of Byju's, when they are inflating their earnings by capitalizing expenses and charge amortization, how will they inflate their earnings by doing so, sir?
Because as per auditor, it is an expense. It should be transferred to P&L account in totality. For example, on development, they have spent 100 crore. As per auditor, it is an expense. It
Yes,
should
sir.
be transferred to year 1 as 100 crore as expense in totality. What company did? Year 1, let us assume they want to amortize in 3 years. Year 1 expenses 33, year 2 expenses 33, year 3 expenses 33. So they manage the earnings for year 1.
Okay, sir. Thank you, sir.
Capitalize only when it is going to give you the benefits for upcoming years. If it is not going to give you the benefit, if you are recreating the content, then ideally you should not capitalize the expenses.
Expense. Okay, sir. Thank you, sir.
अच्छा, ये भी आपको बोल देते हैं. अब ये भी एक अच्छा सवाल है. बच्चे ने कहा अगर अर्निंग्स ऑलरेडी बहुत हाई हैं तो इसको मैनेज करने की रिक्वायरमेंट क्यों है? मैंने अभी आपको एग्जांपल दिया. माय प्रॉफिट्स आर हाई. If I don't manage my earnings, I have to pay higher taxes to the government. I have to pay higher taxes. Plus, इस बार अगर मैंने higher tax government को pay कर दिया, they have an expectation that next year Vikas will also pay higher taxes. So I don't want to set that expectations. Now, okay, on the day of Diwali, do we have some separate treatments, some special treatments from our parents on the day of Diwali? पापा मम्मी कुछ हंस के बात करते हैं रेगुलर डेज के मुकाबले ऑन द डे ऑफ दिवाली? डू दे गिव अस पॉकेट मनी एक्स्ट्रा ऑन दिस डे? तो वो बोलते हैं दिवाली के लिए दे रहे हैं. वो बार बार ये वर्ड पे क्यों एम्फेसिस करते हैं? दिवाली के लिए ही दे रहे हैं क्योंकि उन्हें पता है कल ये पैसा नहीं मिलना. फॉर एग्जाम्पल, यू रिसीव एवरी डे योर पॉकेट मनी इज 100 रुपीज पर डे. ऑन दैट डे यू रिसीव 1000 रुपीज. सो दे कहते हैं ना बेटा ये तेरी दिवाली का. अब दिवाली का क्यों बोले जा रहे हो बार बार? क्योंकि कल दिवाली नहीं है. तो कल फिर पापा से कितना मिलेगा? 100 रुपये मिलेगा. So if I show higher profits, I don't manage it, that will set the expectations. I don't want to set that expectation. अच्छा, मेरे को ऐसा कहना नहीं चाहिए बट मेरे एक फ्रेंड है, बनिया फ्रेंड है. सो व्हेनेवर हम दोनों मार्केट में जब भी वी मेक अ गुड प्रॉफिट्स, मैं अपनी वाइफ को बोल देता हूँ, वो वाइफ को नहीं बोलता. और वो लॉस कमाए या प्रॉफिट कमाए उसकी शक्ल सेम रहती है. तो वो घर पे क्या करना चाहता है? वो कह रहा भाई इमोशंस को कंट्रोल. वाइफ को नहीं पता लगना चाहिए कि मैं क्या कर रहा हूँ, मैं प्रॉफिट्स कर. सो वी वांट टू मैनेज द अर्निंग्स. वाइफ को बोल दूंगा कि प्रॉफिट कमाए, वाइफ क्या बोलेगी? कुछ दो. वाइफ भी तो जीएसटी लगाएगी और वैट लगाएगी और पता नहीं क्या क्या लगाएगी. सो बेटर है शांत रहो. और अगर आज कमाए तो कल भी उसकी एक्सपेक्टेशन बढ़ेगी, कल फिर से कमाएगा. Don't set the wrong expectations. Shall I start with the question one? Okay. Now, what approach I'm going to follow? High probabilities, you are going to give me an incorrect answer. So I'm going to explain you the question, then you will jump to the options, and then you have to answer it. Okay. Let's start now. Now, question number one. In contrast to earnings quality, financial reporting quality. So financial reporting quality will be of good quality if it is in accordance with. That's it. Only this point you have to remember. Now please answer question number one. So answer will be B. Then second, the information provided by low quality financial report. Low quality financial report. It will be of low quality if it is not in accordance with. Only this point you have to remember, and please answer question number two. Impede means restrict. Okay. Now hint is my focus is on quality of earnings, or my focus is on quality of financial reports. So quality of earnings पे focus नहीं है. My focus is on quality of financial reports. It will be of good quality if it is in accordance with IFRS. If it is not in accordance with IFRS, then what will happen? Okay. Now, earnings are not sustainable. That is signified by quality of earning report. That is not qualified by quality of financial report. So B is incorrect. Then restrict the assessment of quality of earnings. Now my point is, if financial statements are not in accordance with IFRS, will it become difficult for you to assess the company's performance? All of us prepare financial statements in accordance with IFRS. If it is not in accordance with IFRS, will it become difficult to assess the performance? कि कंपनी ने अच्छा करा या बुरा करा है, क्या ये बोलना आपके लिए मुश्किल हो जाएगा? Will it become difficult for you to assess the performance whether company has performed better or not? So point number C ये कह रहा है, will restrict the assessment of earnings quality. Now decrease company value, we cannot say directly, but yes, indirectly in the long run this may happen. But what will happen immediately? It will restrict the assessment of earnings quality. Am I clear with option number C? What is the meaning of this? It will become difficult for you to assess the company's performance. Am I clear? Chali, go through C. To properly assess the company's past performance, what is required? Okay, so I want to give you a hint for question number third. You are analyst or you are investor. So if you're an analyst, you're only concerned with your job is to analyze what you want. It should be in accordance with IFRS. If you're investor, you want it should be in accordance with IFRS and earnings to be of good quality. Why it is not a concern for analyst? Analyst is not investing money, he is only analyzing. So for analyst, only one thing is important. Financial statement should be in accordance with. For investor, 2 points are important. It should be in accordance with IFRS plus earning to be of. Now help me, you are analyst or investor? Help me with the answer. Shall I proceed? Am I clear with question number 1, 2, and 3? Chali, question number 4. Low quality earnings. Earnings will be of low quality if it is not providing adequate return, plus if it is not unsustainable. Please answer. B. चलिए, earnings that result from non-recurring activity. Non-recurring means this year there's a gain from sale of land. Next year it will not be there, so it is not a regular income. It will impact quality of financial reports, or it will impact quality of earnings. Answer fifth. Then, which attribute of financial reports most likely be evaluated as optimal in the spectrum? In spectrum, there were how many points? 6 points. What is on the top? Good quality. What is the meaning of good? Returns to be? And help me. Question number 7. Financial report will be of lowest level. 8. Okay. Now let me help you. Question number 8. You incurred one expense by the name of research. There's one research expense. Now recall long-lived chapter. If there's an expense on research, it should be treated as expense. Is it clearly mentioned in IFRS? Is there any choice? No. Then why should be C should be the answer? There's no choice. Have IFRS given you any choices? No. Yes, if it is life, you have a choice. Life 3 to 4. Salvage value 100 to 200. There's a choice. Have we given you any choices? No. Then C should not be the answer. Then this is because of your real actions. Now, for example, if in question number 8 it was given, salvage value last year was 100, now 500. This is because of you are able to manipulate the earnings because of accounting choices. But here you have no choices. This is the real mistake that you have committed. This is an account of real actions. Am I clear with this? 9th, high quality financial reports. Think logically. Okay, what is the meaning of high quality financial reports? High quality financial reports. It is in accordance with? Bas, very important. Okay, I want to may what? ठीक है? May or may not be. चलिए. Now, ध्यान नहीं दे रहे, एक सेकंड. Now, high quality financial reports means it is in accordance with IFRS. Does it need to do anything with the earnings? Okay. It has nothing to do with earnings. That means earning can be of low quality. Earning can be of high quality. It has nothing to do with earnings. It has nothing to do with earnings. Am I clear with this? Now, Reliance Communication reported a loss of 10,000 crore. It is in accordance with IFRS. Is financial reporting is of good quality? Earnings are not good quality, but financial reporting is of good quality. It has nothing to do with earnings. Now my point is earnings smoothing. Earnings smoothing means this year profit was 100, 102, 105. Smoothly it is increasing. It is a part of good quality. अगर रिपोर्ट अच्छी है, earnings भी अच्छी होंगी. ऐसा जरूरी है क्या? नहीं. तो पहला तो गलत हो. Then earnings can be of low quality. Is it a possibility? Is it a possibility? Earnings may be good, earnings may be bad. Financial reporting is of good quality. So B हो सकता है. Now, maybe good, maybe bad ना. लेकिन ये क्या कह रहा है? Earnings will be smooth. जरूरी नहीं है ना कि earnings will always be smooth. Even earnings are volatile. It is of good quality. Now my point is understatement of impairment. अब understatement का मतलब क्या है? Understatement of impairment. जितना इम्पेयर करना था उससे कम करा है, उससे कम करा है. It is in accordance with IFRS. It is in accordance with IFRS. No. फिर से पढ़िए. Again, I want to repeat. High quality. That means everything is in accordance with. If it is understatement or overstatement, it is in accordance with IFRS. No. Is it ensure that earnings will always be smooth? Earnings may be high, earnings may be low. तो आंसर क्या बन जाता है? So the correct answer is. So always you have to focus on quality. Quality of financial report does not deals with quality of earnings. Write a point. Question number 9. Question number 9. Reliance Communication reported a loss of 10,000 crore in accordance with IFRS. Reliance Communication reported a loss of 10,000 crore in accordance with IFRS. Financial reporting is of good quality, but earnings is of low quality. If financial reporting quality is good, earnings may be low, earnings quality may be low or high. Quality of financial report has nothing to do with quality of earnings. Shall I proceed? Try to answer question number 10. Aggressive. Performance will be upward bias. Conservative. Think logically. Conservative. You will get the answer. Start eliminating the options. You will arrive at the correct one. Okay, let me help you. Conservative. So now conservative. Conservative means sales will be less. Expenses will be high. Assets will be low. Liabilities will be. What will be the answer? Question number 12. This is very common in case of banks. They always go for higher provisioning. What RBI says? They always go for higher provisioning. Try to answer. Why banks go for higher provisioning? Why they're conservative? Again, you can eliminate and you can arrive at the correct answer. You can eliminate two options very carefully, very easily. You can eliminate very easily. Okay. Chaliye. In this particular example, you are conservative, correct? Either conservative or aggressive. These are known as biasness, correct? So one option you can eliminate. Which one? The less biased conservative, the biased go aggressive and conservative. Both are known as biasness. So one option you can eliminate. Which one? D. Then if you are conservative, that means you are booking more expenses. Profit for current year will. Which option you can eliminate? C. Then what is the correct answer? So it will lead to lower litigations. So tomorrow bank will go into litigation. The possibilities are less. आपने proper provisioning नहीं करी और conservative तो सही है. अभी for example, what happened in case of SBI? Or let me show you the profit and loss account of SBI or PNB Bank. Now PNB Bank was not maintaining proper provisioning, and then they have to increase provision suddenly. What are the losses? What are the losses? 12,000 crore. Losses 9,000 crore. Now this is only increase on account of one factor when they increase the provisioning significantly. Now my point is, you should have sufficient provisioning. HDFC Bank always shows smooth earnings. Now this has never happened with HDFC Bank. Their profits are continuously increasing. They are conservative. Now it is continuously increasing. Even in the period of COVID, they are able to report a higher profits. There's not been a single year where profits have reduced, but this is not the case with PNB. Now, what is the best part with HDFC? They are conservative on accounting. They are showing higher provisioning. Already बहुत ज्यादा खर्चे दिखाते रहते हैं, तो कल को जब कोई बड़ा खर्चा आ भी जाए, so provisions are there because of which they're able to show smooth earnings. But this is not the case with PNB Bank. Now higher provisioning को क्यों दिखाते हैं? So that tomorrow we should not enter into any litigations. 13th, motivation. In motivation, there were 5 points. Please identify which of the following is motivation. Increase the market share of product. Incorrect. Market share of product कैसे increase हो सकता है? Market cap of company can increase. Share price can increase. But demand for a product can increase. This is incorrect. What should be the answer? Your compensation is linked with prices. Am I clear why A is incorrect? If on A it is written market cap of the company to increase, yes, A could be the answer. But it is written increasing market share of product. So ये गलत है. 14th. What are the motivations? Motivations for conservative accounting, showing lower profits. कि बैंक की शर्तों को आप पूरा नहीं कर पा रहे हो, इसलिए आप लोअर प्रॉफिट दिखा रहे हो. बैंक की शर्तें क्या कहती है? लोअर प्रॉफिट दिखाओ या हायर प्रॉफिट दिखाओ? वो तो चाहते हैं आप हायर दिखाओ, तो बी नहीं हो सकता. सी. अब सी क्या कह रहा है? अभी आप प्रॉफिट्स कम दिखा रहे हो क्योंकि आपको क्या लग रहा है फ्यूचर में प्रॉफिट ज्यादा. ए, फ्यूचर में ज्यादा प्रॉफिट्स. एक सेकंड which of the following is a motivation? हाँ sorry unexpected है, sorry. Now एक सेकंड. 14, we are talking about motivations. Now attention to future career opportunities. You will follow aggressive accounting, you will not follow conservative accounting. A is incorrect. Then debt covenants, debt conditions, violation risk. If there is a debt condition that you are not able to meet the conditions, you will try to inflate the profits, you will not try to reduce the profits. And C is saying, if you're thinking that unexpected strength in the environment, that means आगे चल के मतलब strength नहीं है. Now what you will try to do? You will, आपको लग रहा है आगे profits कम होने वाले हैं, तो आप अभी से क्या करने लग जाओगे? You are trying to follow conservative accounting. अभी से profits को क्या कर दोगे? कम, ताकि आगे भी कम जाए. 15th, approval, confirmation biasness. 16th, आगे आने वाले सालों के प्रॉफिट ज्यादा दिखाना चाहते हो. आगे आने वाले सालों के प्रॉफिट ज्यादा दिखाना चाहते हो, इस साल की नहीं, आगे आने वाले सालों के, तो अभी के खर्चे क्या कर दोगे, अभी के खर्चे क्या कर दोगे, ज्यादा दिखाओगे। एक मिनट। नाउ what are the meaning of choices? Either you can be conservative or aggressive. Now in case of 500 rupees of sales, what Byju's do, year 1 they are showing a sales of 500, year 2 they are showing a sales of 0, then year 1 250, year 2 250. These are the choices. Now my point is, in the future you want to show higher sales in the future. So today you have to show lower sales. Expenses will be lower, so today you have to show. Now please answer. आज खर्चे क्या कर दोगे? सो आज जो हम पीरियड अंडर रिव्यू है उसमें खर्चे ज्यादा बुक कर लेंगे, ताकि फ्यूचर में खर्चे क्या बुक करें, कम। 17th, which of the following is a motivation? Internal control opportunity, inattentive board of director opportunity. Which of the following is a motivation? 18th, motivate to inflate the earnings. आप कब अपने प्रॉफिट को ज्यादा दिखाना चाहोगे? जब बैंक की शर्तें पूरी ना हो रही है। 19th, opportunity board of director, weak internal control, accounting choices. 20, what are the purpose of audit opinion? What is the purpose of audit opinion? Detecting the fraud, it is not a responsibility of auditor. Auditor only provide assurances. 21,
B.
you have to provide a reconciliation. 22, company want to increase earnings in the current period. Increase earnings in the current period. Increase earnings in the current period.
B.
Lower estimates of bad debts. 23, you want to increase the cash flow from operations. You want to increase cash flow from operations.
A.
A में liability बढ़ रही है. When liability increase, inflow outflow.
Inflow.
When liability increase, inflow outflow. Inflow. तो यहाँ पे आप inflow दिखा दोगे. Shifting of interest paid from financing to operating. Operating expenses increase. Cash flow from operation increase, decrease.
Decrease.
Incorrect. Non-cash means it is not going to have any impact on the cash flows. But by showing more payables, you are going to show the inflows. Now, as credit or accounts payable, last year it was 100. Now it is 150. You will show inflow of 50. Now I'm not proceeding. So we have covered till 23. But what is the catch? Read the question properly. Try to eliminate the options. Then you arrive at the correct answer. One more point. At times, students get confused between quality of financial report, quality of earnings. These are two separate words. Quality of financial report has nothing to do with quality of earnings. Okay, and earnings deals with sustainability, plus there should be an adequate return. Am I clear with this? Am I clear with this to all of you? Okay. Now I'm not proceeding. Okay. So with this, we have covered this chapter also. In totality, there are going to be 45 questions. Okay. Go back home, give it a try for remaining one. Okay. And the only approach to answer these type of question is read the question first, try to eliminate the options, and then jump to the right one. Okay. This is the only approach that we can follow in this particular chapter. Chaliye. Let's have a break now.